back. Tuesday, June 17th. Welcome.
Good morning, Frank. How are you?
I'm going pretty steady here on Tuesday, synthetic Thursday, before synthetic Sunday.
I'm glad I don't have to deal with this calculation.
What are we calling Thursday of this week synthetically?
We're getting a synthetic Saturday.
You're calling it synthetic Saturday.
That is what Thursday is, correct.
Well,
so tomorrow would be Friday. and then you get another Friday. It goes synthetic Friday, Saturday, synthetic Saturday, real Friday, real Saturday.
Okay. All right. Because I only ask because it's a big point of contention for traders. I feel like around like 4th of July obviously is always a random day. Juneteenth is always a random day. And it begs the question of just like Memorial Day or Labor Day.
You know what you're getting.
You know what you're getting.
A short week, Monday off.
With this, I'm trying to just navigate where my head should be at. It doesn't feel like synthetic Thursday. I'll say that.
Not at all.
And you are on some kind of synthetic.
This is synthethetic Thursday, and it feels like it.
You're feeling good because
Friday.
You're blasting off to Denver tomorrow. And listen, I don't want to pretend to know what it's like to be a black person in America, but you commented that you're going to Denver to celebrate Juneteenth. Of course, my next question was, what does the group look like? And what are the activities for the celebration? So I think you should take us through it.
One, I didn't say that. I said because we get Juneteenth off.
Okay. Who's we?
Our company.
Okay.
Since we get to celebrate Emancipation Day or Juneteenth.
Very much worth celebrating.
Correct. I have taken that day off to make a long weekend for myself, visiting some friends out in Denver.
It feels. Does it feel weird? I'll ask you.
I wouldn't say it feels weird. No.
Okay.
But you making a
doesn't feel weird at all.
Bigger deal out of it feels weird. Yes.
Okay.
So you won. You got what you wanted. What are you doing on your day off?
I am. See, I don't know if there's a good answer to the question. My girlfriend is going to the beach with her friend, and I'm going to play tennis with Clink from the office. I don't know what to do. We should research what we should be doing.
We will make better plans.
Because I can't help but feel last year over Juneteenth, I did have the feeling after the fact, like, oh man, this would have been a nice little time to like rent a house up in Wisconsin or Michigan or something like that and have, like a long Midwestern weekend or something. But then because I have both white guilt and Catholic guilt going on. And so my
no Italian.
That is, it's Roman Catholic.
Okay.
Most Christians, not a lot of guilt,
Okay.
I think, going on, but the Roman Catholics.
Strong.
And that kicked in and was like, no, actually, I don't think it makes sense for me to plan a vacation for next June. There's something weird about being a white dude and being like, ooh, like, when's the next Juneteenth coming up? I'm gonna jump on Airbnb. But
you'll jump on the rental website for a tennis court. That's better.
In my mind, it is. I don't know, because I'm not going anywhere. But anyways, all right. Well, I'm glad we got that out of the way. Let's get into the platform because it's not getting any better than that. I
mean,
a lot of zeros. What is going on with the zeros?
An interesting point. With the zeros on the swap bid and the swap offer, we've got, because of the holiday on Thursday, we had a funky 2-day roll yesterday.
Funky 2-day roll
in most U.S. dollar pairs. So your indicative swap bid and offer giving you kind of an approximation of what the overnight funding charge would be if you're holding a position overnight. Yesterday, you had 2 days of roll in there to account for this Thursday.
Gotcha.
U.S. dollar, Canadian dollar, because of our close proximity as one of the factors, is able to operate on a T+1 instead of all of these other pairs are T+2.
Interesting. So USD CAD is actually showing that's 2-day roll.
This is 2-day roll
for Wednesday, Thursday.
Correct.
Gotcha.
Whereas all the other pairs, that was already priced in.
And if you had checked yesterday, you would have seen all of these pairs showing 2-day roll.
Correct.
For Wednesday, Thursday, but yesterday. But since USD CAD is T+1, it's showing that 2-day roll now. And this is, some interesting stuff that you do have to. I know are joking about. That sounds bad. Not joking about Juneteenth, but are joking about the holiday is obviously meaningless. But what is meaningful is around these holidays, the overnight funding can get kind of wonky, and especially if you're looking at sometimes there will be like Japanese holidays that are like those dudes are like taking off like 5 days in a row.
Right.
And you can see some crazy rolls in there. Again, nothing is like free or riskless, but people will jump into a position and take it overnight, maybe try to scratch the position later on that night or the next morning, or at least use that edge in their favor if they are getting 4 or 5 points because it's a 3-day roll or whatever. Something interesting to watch, but yeah, the unusual Monday night juiced swap bid and offer because of the Thursday holiday. But that's why you're seeing the zeros there. You're also seeing a handful of unchanged, although we're starting to see some stuff shift around. I want to go to the commodity currencies, but let's start actually at euro dollar because I want to cover yesterday's action all the way up above 116.
Very briefly.
And for a second there, though, I mean, that was a hell of a rally in the U.S. morning. You go from, the first handful of green bars are European session kicking in, and then you extend through to the U.S. morning there right as U.S. equities are opening, and we rallied all the way up to 116.10 and then change actually above there. And for a second there, Glenn, it looked like they were going to put in 100+ points on this market to start the week. Took it all the way back to 115.50 by last night. And now we're kind of surfing around there. Another nice, I know that this is an extreme here, 116 for the last year or so of trading. But if you're willing to step in front of some of these, 50, 60, 70 point moves, really in either direction, the pullbacks as well, you've gotten some nice reversion around the 115 to 116 range.
Agreed, but very notably, these lows, definitely higher lows here. The pullback not to the same extent where we even opened the week, and the run-up on the European session. So this is where we were looking at it yesterday during the show, a little bit of consolidation. We were wondering if the top was in, or if this market had more room to run, then picked up a lot of steam all the way back, but not where we ended around where we ended last week, around 115.5. But definitely surprised that the U.S. dollar, even when, like we had yesterday afternoon, dollar starting to gain momentum, especially against some safe haven currencies that we'll look into, and this euro dollar across the board. Okay, dollar, here we come. Not to any great magnitude.
So it sounds like you think the risk is in this pair to the upside, that you think the risk in dollar is to the downside.
That's what the tape action is showing you, is that there really isn't, there hasn't been much sustained dollar buying. I mean, last week, Thursday, you get it, and this was probably the most continuous dollar selling overnight. That's it. Once the U.S. came in, reestablished back well above 115. I don't know. Are you seeing something different? I can give you more room to run.
I have, of course, no clue. But what I will say that is interesting to me is 116 is looking a lot like 140 if you're comparing euro dollar to dollar yen. And what I mean by that is, man, they keep trying to press 116 and they're not really able to make it happen. I start to wonder, is this you look at this daily chart and it's like, man, we got up here a month or two ago, unable to build any ground. I mean, that was a hell of a rally, so I don't want to necessarily be like, oh yeah, that was nothing crazy. But I just can't help but think about dollar yen over the last 4 years, and we'll pull it up in just a second because it also was an interesting move yesterday. And then look at on the daily chart here, if you just zero in on the last 5 days, that is some pretty wonky trading around 116. Really tried to get up there and unable to do so, settling right back in to the 115.50 area. Obviously, we have a FOMC in a little more than 24 hours. That'll probably let us know
something,
where the risk really is in this dollar for the rest of the week. But yeah, whenever we get up here, everybody talks about, dollar is effed, Trump is trying to take the dollar down, everything else. A lot of that's warranted, sure. That's how we got here. But at some point, these stories and some of these things run out of steam. And if you're looking at the last 5 years of trading, you can't really make a case for this market extending much further than where we are now. And let's jump over to that dollar yen just because, one, this was an interesting one that they really tried to rally yesterday afternoon and night and got all the way up above 145 again. And bounced right off of it. We're trading 144.50, so not super far off there, but you can see dollar getting some pressure going into today's U.S. Open, just like yesterday. But Glenn, if you go to the weekly on this and we get some data in here, I think the peeps might see what I'm talking about. So especially the last 2 years, let's call it, 2 solid years, where we have turned on 140 like a dime. And every time that we've gotten down to 140, the story has been, the dollar, the carry trade's unraveling, all of this stuff, the dollar is over with. And I'm not necessarily trying to build a bull case for the dollar. Right. But in my mind, if I'm going to really just focus on the numbers, I'm not the news guy, I'm the numbers guy, there's not a lot of data points to support this dollar market completely falling apart. It's already bounced off of 140 here against the yen. And so you already have a little bit of like dollar firming up in this market. That euro dollar market, again, printing 116 yesterday might not feel like, oh man, like the dollar's finally rebounding here. We're still a little bit in no man's land. There in the pound market, we're absolutely in a little bit of no man's land.
Still testing those levels.
But again, this is a scenario of like this market has to show me that we're getting into a new area before I say like, oh yeah, the next print is 120, which I think a lot of people are thinking. Sure. This is just a way station, so to speak, on the way to 120. So yeah, it'll be interesting to see the reaction around the FOMC, to see if there's any kind of like thin market big moves before there. Maybe they try to get up to 116 again today or tomorrow morning.
But also wouldn't be surprised if there was some consolidation. A lot of the news we're going to get that isn't headline is going to be early morning. We have this G7 summit, all the world leaders, maybe some trade talks. land out of that. I know Trump does not hesitate to steal Jerome Powell's spotlight, so wouldn't be surprised if he doesn't care about the timing around an FOMC decision. We had a Bank of Japan interest meeting last night, so
totally forgot about it.
Right, right here. As
looks like the market forgot about it as well.
I think so. But, we had some consolidation into the meeting, and then some back and forth. But I imagine we had a rate hold at 0.5%. So the first major central bank meeting of the week. Today we've got retail sales coming up in about 42 minutes here.
That'll probably be interesting.
I think it will
Some
be
of
interesting.
these
Maybe
U.S.
for the
numbers
equity
have been
side.
sneaky.
Yeah,
Yeah.
More so than the dollar side, but it is the last data point we're going to get before this FOMC meeting tomorrow. We also have UK inflation, which aligns with
Bank of England on
Bank of
Thursday.
England on Thursday. Also have the Swiss National Bank, which usually isn't a headline story, but they are the only one of the four banks this week looking to cut.
Oh, Clink's gonna love this.
0. So we've been looking at dollar Swiss franc for
The carry trade there's been
weeks.
interesting.
It's been interesting given the actual product details and how much of a position you can control with the same amount of capital. This dollar Swiss franc carry outweighing dollar yen carry, positive carry that is, if you were long either of those markets. So this is definitely one to watch. But as we set upon a heavy slate of economic events for the week, wanted to jump over to the slides. We've got some interesting, more of an evergreen concept here.
Sure.
As to just get your gears turning as to what really to consider, how to trade economic events using FX, because the main reason we look more heavily around macroeconomic data points is when you're trading FX markets, you're trading a country's or a region's currency, and you have a lot more of these data points, these central bank meetings, inflation reports, employment data, all of these things on both sides of a currency pair. Every currency pair, you're trading two distinct regions,
Sure.
each of which have their own economic dynamic. And so you're getting a lot more opportunity in these FX markets to speculate and take advantage of volatility.
Well, the correlation is pretty direct between major economic data points and the currencies of those regions, the Forex pairs that incorporate the currencies of those regions, as opposed to, what does the interest rate decision mean for Apple stock?
Right.
It's like, well, Apple has a bunch of different stuff going on that diversifies them away from interest rate action, whereas the U.S. dollar supply and demand dynamics largely dictated by U.S. interest rates. And then if it's U.S. dollar against the euro, yen, Swiss franc, whatever, of course, their interest rates come into play, their employment data comes into play, their inflation data comes into play. So it can make for a very, like I say, direct correlation. No longer is it like when you're trading S&Ps around some of these events, it can feel like, okay, well, what is the context of the stock market going into this event? Do we want rate cuts? Do we want rate hikes? Is it
Good
bullish,
news, good
bearish?
news.
it can be murkier, whereas in FX it can be a lot more direct. And yeah, as you see, usually the Fed meets around the same time as other major central banks, which is in the mode that we're in currently, can be a really interesting time to be opening, closing positions, doing whatever you're doing.
Absolutely, and that begs the question, we see these events, what do we do beforehand?
Load up. No?
That is absolutely a possibility.
I'm
you are
joking.
Free to speculate on in your account, but you have a ton of options. But regardless, it's worth noting little X on your calendar, little reminder that this more than likely will be a volatility event. Could fundamentally change the dynamics of a product that you're trading, and so it's worth considering all of these, your existing positions. If you want to retain your bias in existing positions, if you want to shave some off, and asking yourself if you can withstand if the market moves completely against you. Worst case scenario, are you still comfortable going into a volatility event like this? You can close everything to maintain flexibility. I think our good friend Peter, who's on the show with us a lot, he is a big proponent of trading the reaction and not the headline number,
Sure.
not speculating going into it. But you absolutely can speculate on the event itself if there are, you feel an appropriate entry pre-event, good prices for what you think will be the outcome of any of these data releases or events to get in, but with perhaps a smaller position size because of the increased volatility.
Of course, I'm being facetious about loading up before the event.
Oh, are you?
Absolutely, because and Pete was taught the same way 50 years ago or whenever the hell it was, and I was taught the same way 10 or so years ago at the Board of Trade, which was that like going into an event like this, you have no clue necessarily what's going to happen. The one thing that you can bank on is there's probably going to be increased volatility. There's probably going to be a big move one way or the other, or hopefully a lot of people hope that there's big moves in both directions.
Sure.
And so with that in mind, we were always conditioned to maybe flatten most of your positions, if not all of them, going into something like this, and actually not necessarily use stop. Of course, you could do whatever you want, but I wouldn't necessarily hold a position going into an event like this and put like a tight stop loss on it.
Sure.
Just because the increased volatility reduced liquidity. You could get whipsawed. Two, you could see a large move and reduced liquidity and end up getting out of a position at a worse level than anticipated. So with all that being said, what we would do a lot of times is go in with maybe less risk. If you do have a lean one way or the other, of course you can have a position going into an event, like to your point, speculate on it. But we would a lot of times look to enter positions far away from the market. Look for that like whipsaw move to be an advantageous move for getting into a position. Because, yeah, you're probably going to see, if you're used to seeing 50 points on a given day, maybe you'll see 60, 70 points off an event like this.
Absolutely, and good call out with the stop loss, because what you're going to get more often than not is of an initial jerk reaction. And for retail traders, perhaps waiting for the market to digest this number. Even right now, what we have on the screen here is a 1 minute chart. And you can see a snap reaction for, I believe this is non-farm payrolls this month. Snap reaction, not what it shook out to be even 3 minutes later. And so what you are getting here is a lot of unique price points, but no need necessarily to try and, the number comes up on your screen and get in as soon as possible.
Sure.
Because there are a lot of participants here, spreads can widen, and algorithmic trading can be a large part of that initial move. So just taking time there. And then after the market has digested it, a lot of post-event entry strategies, to your point, that might be even more advantageous than holding a position going into the event, can really do whatever you want here based on your thesis or your bias, breakout continuation, following trends, fading the overreaction, which can happen very quickly, or within 30 minutes we can see things turn around. And then range trading if there is a lot of back and forth throughout the rest of the session, like FOMC happening in the afternoon. You have probably two hours about of equity trading there after the event. So whatever you want to do there, right?
Absolutely. Yeah. I mean, it really comes down to what your normal strategy is or what your gut reaction is or whatever you would normally do. This is just like that. It's just going to be a little bit more volatile and maybe have, a little bit more of a last. Another big thing was that we would always think about, especially with a Fed event, always on a Wednesday afternoon, right? Would not only be, okay, we only have a couple hours of increased liquidity before the U.S. participants leave the market, but there usually is either a furthering of that move in the overnight and into Thursday's U.S. session, or a reversal of that move in that that volatility isn't just with a Fed event, a big event like that, just like 5-10 minutes and then it's over with. It can shift a lot of global dynamics and have some lasting effects the next 24, even 48 hours.
So yeah, a lot to consider, and that key point there on the third bullet point is determining your time horizon.
Yeah.
Don't want to be stuck in anything that you didn't anticipate being stuck in for a longer time than you expected, but might be worth holding overnight for something.
Whatever you normally
Exactly.
would do. Yeah, the last thing you want to do is say, I'm trading this as a day trader or even a swing trader for 24, 48 hours. And then it's like next FOMC and it's like, oh man, I'm still short euro dollar. And it's like, why? Well, I didn't get out last FOMC. And it's like, that's not usually how we manage positions.
Right. So there you have it for how to trade economic events using FX. And that'll do it for us today on Forex Focus. A lot of trading ahead. So stay tuned for Tom, Tony, and Vanetta next on Tasty Live.
Global markets never sleep. Explore them with Forex, now available on Tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tastytrade.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're #1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tastytrade. Make your move.
Decision to build Thinkorswim was a byproduct or derivative of 20 years. In our minds, the future of finance meant that we were going to move away from something that was very manual and move to something that was tech-driven.
What we did with Thinkorswim truly changed the industry. To do it a second time was a challenge that I just had to take. The platform is just leaner, cleaner, a little meaner, legitimately built from scratch.
Tasty Live's godfather of options, Tom Sosnoff, is grabbing his passport and taking this show international. He'll be joined by IG's Rich McDonald in London and Milan, along with special guests at each stop for an evening of live trading. It's fun, challenging, and moves as fast as the market. Doors open at 5, with trading starting at 6. Come early and have a pint or glass of vino with the boys. It's totally free, but space is limited. Register at tastylive.com/events. Options just got molto interessante.
You can get up to $4,000 when you open and fund a new account with Tastytrade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tastytrade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tastytrade. Make your move. Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tastytrade. Download today.
Woo! Get tasty, free market. Come on, you know it, can you feel it? We got some things to talk about. throat hole is hot. Now you got a hole in your throat. Oh no, just call your boss. Take a crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads, and welcome back to the show, Tasty Live.
That was kind of low energy.
What do you mean?
Just do it again.
Good morning, knuckleheads. Not good. I gotta work on it.
It sounded like he was going into like a dramatic monologue.
Right?
It still works.
Okay.
It still works.
Yeah, Beth, was that okay?
No.
Oh my God. Well, I'm so sorry. Good morning, everybody. Jeez, already taking flack here.
No, I'm just saying.
Okay, I'm only halfway through my first coffee. That's why.
It is the millennial takeover, and if there's one thing millennials will do is we need the emotional support iced coffee.
Yeah, I need the IV.
Yeah.
Hook me up here.
Yeah.
Gotta get those stims up, you know?
Yeah. Yeah. But how are you guys doing today? First of all, I like that we have like a color palette theme, like a little navy going today.
This is just my normal color. It's earth tones.
I like it.
Yeah. I actually was told that I have a Capricorn wardrobe.
Oh yeah, we did tell you that.
I was like, what does this mean? And then I looked it up and it's like, oh, you only wear
Like business
colors
kits.
from the earth.
Yeah.
Like, oh, yeah.
Yeah.
So this is actually kind of pushing the boundaries.
Sure. You're such
Party
a
Ship
Capricorn.
Friday.
You're such a Capricorn.
Thank you. How you doing?
I'm good. How you guys are fresh off of your first show. How was DC? Your pictures looked great. I saw you got to go to Mama Chang's.
Yes.
Yes.
Yes, I did. It might be the last time I go there in quite some time because my dad is moving. So my dad lives in DC.
Oh, I didn't know that. Okay.
They're moving to Canada.
Oh, okay.
No Mama Chang's there.
Wow. Yeah.
Yeah. But no, DC was great. We had a great turnout. Got to meet a lot of people. Met some new people that found us through the events website. So
that's cool.
Not even our website, just a the actual the website that we used to book it. So yeah, met a lot of people. It was a great time. Brian was there.
Yes.
His one and only. Yes.
He mic dropped it. You know.
Brian, your friend is about to be a dad.
I know, it's pretty wild.
It's crazy. I feel like he's at that stage where like he hasn't really realized it yet. You know. Once it happens, he's like, oh, I'm a dad now.
Right, because he doesn't have something constantly, kicking his internal organs.
Correct.
He's missing out on that part of the experience.
Yeah.
How was DC for you, Nikki? Did you have fun?
It was good. I got to see Chan, my sister.
Oh, yeah, Chandler, yes.
My brother-in-law. I unfortunately called Chandler Sasha on stage.
Whoops.
By accident. It was kind of like
your other sister, yeah.
It was one of those
whoops.
In the moment, you're a little nervous, you're doing your thing. So that was interesting.
She had signs.
She had signs for me.
Oh, that's so sweet. Yeah. Oh, that's cool. I'm glad that worked out because I saw pictures with you and your sister, and that's cool that you both had family in town.
Yes, yes. I got to meet my father-in-law, Mike's dad. For the first time. That was nice. That
is nice.
Yes. So it was good. It was fun. Rain the whole time though.
Ah, yeah.
There were like flood warnings. It was 95 degrees and 80% humidity. It was
well, that sucks.
Yeah. But
where are you guys headed next? Where's your next show?
Seattle.
Oh, another rainy place. But actually, Seattle in the summer is low-key awesome.
Yeah.
Yeah.
Seattle's fun. So yeah, we'll be there August 10th, I believe.
Okay.
So coming up here. Sign up on the events tab on tastylive.com if you want to see us live.
Live. Yeah.
There you go.
And Tom and Bat, the reason we're doing the Millennial Takeover today, Tom and Bat doing their international show in London today in just a couple of hours.
Yes.
So they will be, if you are across the pond, you can see Tom and Bat in London or in Milan on Monday, which is a crazy schedule.
Crazy. You still want to see him in Milan? You could sign up.
Yeah.
A couple cancellations come through.
Yeah.
So just throw your name in the And the hat?
Have you been to Milan? I've not been to Italy.
I have not been to Milan, no.
Yeah.
I have been to Italy, but no.
Have you been to Italy, Milan?
I've been to Italy, not Milan.
Oh, see, we gotta go. How come they can't take all of us?
Great question.
I mean, we did the Canada one.
I know.
That was
I know,
pretty
that was
everyone,
fun.
So
Anyway, but
I'm sure Milan is beautiful.
I just want to go shopping.
Yeah.
Yeah, that's all I want to.
I need a pair of Dylan's shoes.
Oh yeah, he's a shoe entrepreneur now.
Yeah.
Just
Shoepreneur?
Too funny. Oh, you guys have any exciting plans for the weekend? It is the summer solstice today, so it is officially summer, and it's going to feel like it here. In Chicago. What are your guys' plans?
I don't know if this is going to shock you or not, but I'm playing golf.
Yeah, me too. And I played Whistling Straits on Wednesday. That's where I was.
You went up to Whistling Straits?
Yes.
Wow.
Yes.
How was it?
It was very fun. My brother-in-law, Rob, he won a raffle.
I was going to say.
A round.
Okay. That's a good raffle prize.
Oh, yeah. We played the Irish course, which is like the other one that's not like the Straits course.
Yeah.
And then we did the par 3 afterwards. They have like a 10-hole par 3 on another property.
Yeah.
It's amazing up there. It looked exactly like the scenery of the old course in Scotland.
Because you guys went to Scotland last year.
Yes, that was our honeymoon trip. It was it was very much like that with the grass and the undulation throughout.
Yeah.
Of course, it was beautiful.
Being on the water there
Yes.
too. Yeah.
Yes. And we avoided the rain because it rained. I know it rained here. That was crazy.
Yeah, you had like a winter.
Yeah.
It was just.
Yeah.
It was supposed to rain.
It was.
And
We were watching it the whole
Clouds
week.
parted.
We were like, please, I don't want to cancel.
So can I ask, what did you shoot there?
It was a tough day. It was-
It's a tough course. Like, is it tough? Like, I'm not. No one is good at golf.
So you know that.
I also, I'm an elder millennial, so I'm having a little back issues.
Sure.
As soon as I turned 35, the chiropractor said, yes, that is when your warranty ends.
Yeah.
At 35, that was his joke for me. So it was a trying time. It was just over 100.
Oh, that's not bad.
Yeah, it's not what we're trying for.
I sent him some text in the morning. I said, "Today's your day. Allow yourself to be great." And I see
that's
the 18,
very kind.
I see the 18 birdies app, and I see double, triple, double.
It was a
And I
tough
didn't say
start.
anything. Yeah, and
It got better.
He texts me and just says, "Kill me." I'm like, okay, he's having fun.
Yeah, it was a tough start. But it was great. It was
Have you
good.
seen that couple on TikTok? They'll like set it to music, but the wife will just text her husband and she'll be like, "Hey, do you need a shovel?" And he's like, "Not now, baby." He's like, "I'm having a bad day," and she'll send him like she knows that he's in a sand trap, and she's like, "I think you need a shovel," and he's like, "Shut up."
Those are amazing. The actual like GPS location.
Yeah.
The fairway's over there, buddy.
Yeah.
Amazing.
Just
good.
doesn't get any better.
Yes.
Than that. Did you guys watch a basketball game last night? We're going to a game 7, first time in almost a decade, I believe,
Really?
between the Thunder and the Bay. That's what they said on NPR this morning.
Love it. Yeah, they blew him out, which is interesting because Halliburton's hobbled.
Yeah, his cap, but he's playing of course he's gonna play anyway.
But yeah, that's the one thing that Indy has going for them. Obi Toppin and TJ McConnell are significantly better than any bench piece that OKC has, aside from Caruso.
Who do you think takes the series?
On paper, it should be OKC.
Yeah, but that's what they said last night. And
Do
then
they have a spread out yet?
I'm sure. Yeah.
you guys don't
It's
get
on Sunday.
advanced alerts.
It's on Sunday night, I believe. But
Yes, in Oklahoma City, and so I think the odds of the last last 19 game 7s, the last 15 winners were the home team.
Yeah.
8.5.
Oh,
That's a lot of points.
Yeah.
that is a lot of
Maybe
points.
because they just got blown out.
Yeah.
Last night. But I'm happy either way because I love when a small market team takes the championship.
They're both small market.
Yeah.
Yeah, but they're saying that the ratings aren't as good though. So that's what they're like. It kind of like dropped because they're a small market. People want the Chalamet. They want the Chalamet.
I mean, it's like the Stanley Cup. Like Florida is all of a sudden the best hockey team in the world. Florida.
Sure.
They don't even have ice.
You can't even play outside.
Yeah, it'll
Too many
melt.
crocodiles over there.
It'll melt. All that matters, though, is that Taylor showed up and the ratings went through the roof.
To the basketball game?
No, to the Panthers
game,
games. Yeah, she was at she was in Florida at that Panthers Oilers game. So
there's a
she picks the teams that win. it seems like she's a little bit of fair weather fan, maybe.
Well, EVR, our golfer boy. He's a South African golfer. He was there with his Florida. I'm like, oh, so you're a Panthers
He
fan?
is not nearly the celebrity that Taylor Swift is. We're talking about like
he's getting there.
Bottom, 50 to 100 ranked player.
That's funny.
Yeah.
That's funny. But are you golfing too this weekend, Nikki?
I am. I'm going to try.
You just gotta be careful because I think the heat index, like it's supposed to be like 105.
Yeah.
That's stupid hot.
Yeah.
It's just not.
Come back with a tan.
You're already tan. You get really tan.
I know. I need a little more.
You're already tan.
Yeah, need that chocolate.
You guys watching the markets overnight? You're surprised by this reversal?
Crazy. They were down like 50 or 60 for most of the session yesterday. And then, you got the breaks coming in with a 2-week pause.
Yes.
Or a 2-week, we'll wait and see.
Yes.
And as soon as that came out, it was off to the races. The E-mini's up 5 right now. Big old nothing burger.
All right. Well,
kind of crazy. It's 60, 70 handle range.
Yeah. So do you guys find it hard to take an actual day off from the markets?
Yes, completely. I think about it all day.
Do you?
No.
You're like, I could take a day off.
Yeah, I can take a day off.
Yeah.
But
because it'll consume you.
Yeah. But it's not because of the markets. It's because
he's more even keeled than I am.
I have something else. Daily fantasy.
That's true.
It's like I can turn off the markets and turn on the daily fantasy. Like there's always something that I'm trying to win or
I gotcha.
It's a constant thing. But if you're purely market driven, then I think it's a lot harder.
Yeah.
But what do you do? Because we're just going into Italy now. Like we're very close to it's kind of like the sports doldrum. Like what do you do during?
I know.
Well, luckily golf is still year round. Like the golf off season is 1 week.
Oh, okay.
And obviously it's Thursday to Sunday, so at least that helps.
Okay.
But yeah, baseball only is a tough time. We have 3 months to kill until we get some football. But I'm very excited for the football season.
Yeah.
Because the Bears actually have a lot of featured games, like 3 o'clock games.
Yeah.
Monday night, Thursday night.
They've set us up for
to be humiliated
really,
on a very large stage.
Yeah, there's a lot of things they've given us, kind of like this is the ascending, here you go, kind of thing. So we really need to. There's a lot that could go wrong, and I'm hoping, fingers crossed.
Well, hopefully nothing goes wrong with the show today. We got a great show for you today. It is a Friday. I swear to you all, my body thinks that it's Saturday. It was just weird having a Thursday off. I don't know what day it is, but just bear with us all. It's Friday, so that means a lot of great content headed your way here, TC Live. Again, Tom and Bat are out. They are literally in London doing a live trading event show. So you are stuck with the new crew. And we're going to switch things up next week. So stay tuned for that. It's going to be, we're going to try some exciting things. We're going to bring in some new segments. And because we can do what we want. We're calling it, when the cat's away.
Yeah. Beautiful.
But on today's show, at the top of the 8 o'clock hour, going to do a little options jive. Catch the move before it happens. Grasshopper. Mm-hmm. How do you catch a move before it happens?
You tell me.
I don't know. If I knew that, I would not be working here.
Hopefully we're going to find out. That's what I always say, too.
It's you go back to the future and you buy an almanac and then you start betting on no? Okay. And then we got Fast Market. It's hashtag Fan Friday, so that means Fast Market. That's where Mike and Nikki are going to do viewer submitted trades. That is going to be at around 8:40. And then 9 o'clock, market measures when time decay works against you. And then 9:20, you guys are going to be taking calls. So if you have questions specifically for Mike and Nick, they would love to hear from you. And that's going to be around that 9:30 time frame because boomers don't want to work anymore.
That's right. And we're going to have the chat open the whole time.
Chat will be
so
open.
We got the chat. We'll
you guys
watch
are young. You know how to work the chat.
We can multitask. We love the chat. I know somebody who sits over there normally doesn't poo-poos the chat. We love our peeps in the chat.
It's definitely because of the lack of ability to multitask.
100%. Yeah. He probably can't even pull up the video, but that's another story.
That's another story. But that's our run of show. Looks like a great show. It is going to be a great show. But you guys want your daily dose?
Sure.
Yeah, hit me with my theme music. Let's go.
How was that? That was energetic.
Yeah, that was energetic. That coffee's kicking in.
Top story. In today's headline.
This just in.
Breaking news.
All right, everybody. Today is a fantastic Friday. It's June the 20th. This is the part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name's Vanetta. Are you ready for the news?
Yeah.
So today is triple witching, and it is the biggest triple witching ever. No, not really ever, but it could deliver a jolt to today's trading. Did you know this is the first monthly options expiration that will take place one day after a market holiday since at least 2000?
Wow.
$6.5 trillion in options in triple witching. The notional value, of options is expiring today. That's a lot.
Wow.
Yeah.
2000, I was dreaming of being a professional skateboarder sponsored by Sprite.
It's a long time ago.
Doing kickflips in the cul-de-sac.
It's a long time ago.
Yeah.
Yeah.
It's an interesting one. I mean, this isn't a quarterly expiration because the quarterlies are at the end of the month, but every quarterly monthly expiration, which is the third Friday, is usually those are usually your key expirations, because once upon a time there were only quarterly expirations, so that's kind of like the old school way. So that's today.
It's today.
Which is,
does it bring volatility back? What does it do?
I would think maybe afterwards. I mean, a lot of liquidity tightens things, right? So tightens up markets. And so I would think they kind of have some chops, some two-sided action.
What's the implied move for today for the S&P?
So that's a great question. With the E-minis back at 60.41, we have about a 29-ish 30-point intraday range, which seems like nothing. If you're looking
that seems like nothing.
SPX, it's a little tougher because SPX is going to open probably a little higher from here, but about a 56-point intraday range.
Okay. All right.
Oh,
Not much.
not much.
Something to keep an eye on. Hey, the Bank of England says the world is highly unpredictable, but they kept interest rates at 2-year lows. The Bank of England warned about the highly unpredictable geopolitical environment as they kept their main interest rate unchanged at 4.25%. Not sure what you guys are doing in currencies or in our own U.S. treasuries.
I put on some tastyfx positions with Glenn last week ahead of the Fed announcement on Wednesday.
We got to give him a nickname of some sort.
The Fry Burglar?
Ooh, that could work.
I had to make it currency related, though. We got to think that one up. I got to talk to Frankie over there.
Can ask ChatGPT.
Yeah, that's actually that's good.
Yeah.
I'm long the dollar franc. I'm long the dollar yen. No, I'm short the dollar yen, and I'm short the Aussie dollar. So I've got a little bit of everything.
Okay.
But really small, and I'm just looking for some big moves, maybe throw on another tranche. I'm pretty neutral with those three positions.
Yeah.
So
we've had some fun with the FX product.
With the FX product, yeah.
You can get super small, which is fun.
Is great, which is perfect because
and
not
the
all
leverage
of us,
is
woohoo.
Yeah, bigly leverage.
Get that dopamine hit that your brain needs.
Yeah.
So you just YOLO.
Yeah, sure, no problem. I'll be long 5,000 euro, no problem. It's like
wasn't like a hornet.
It's like $50. It's great.
Are you guys doing anything in U.S. Treasuries?
I do not have a position on in treasuries. I have Iron Condor in the notes.
Okay.
I'm short a little euro here, and then I am long Aussie dollar, which I don't think that is working too good.
What is your over-under on your dad bringing you back some souvenirs from Europe?
Oh, that is very low. Very low probability.
But
Vinny might have a checked luggage of just things.
Oh, Vinny's going to have like the Louis Vuitton duffel that I've wanted my whole adult life.
Yes, no doubt. Yeah. No, it's okay. It's okay.
Is he still in the cologne phase?
Oh yes.
Oh,
yes.
smell
they're,
maxing.
they're doing some cologne place there.
I heard he was blonde now.
He is.
Yeah,
He's,
frosted tips there.
Really?
he's at the in like
Suave. How to be suave.
Well, no, it's more of like the like the rebellious like early high school years where you and your friends do like goofy stuff like like they all dyed their hair like platinum.
It went Super Saiyan together.
Yeah. It's just like a click thing.
Click.
Yeah.
Interesting.
So it's fun. It's fun. I took him out for a drive though because
he's got his permit. Well, so
I don't think he has the permit yet. They changed the rules, so like you have to do a full year. Like it's not like when you turn 16 you can get it.
Right.
You have to do like a full year from when.
Yeah, that's better then.
I don't know about that.
For safety, okay.
Maybe for safety. Well, after driving with him, yeah, maybe it is better. It was good. It was a good tryout, though. I gave him like a B-. We got to work on using the brake a little bit, kind of understanding that the car kind of moves itself a little bit.
Yes.
Like you don't have to like hit the gas to go. It kind of just goes.
Driving like this.
Yeah. So, and I was trying to, teach him a little bit about like the left turns. You got to kind of go like a right angle. You can't really just like swoop in.
Right.
But we're in the back, we're in the side streets around my dad's house. So, there's no traffic there.
That's good. It's just nuance. It's fun. Yeah. Like,
but it was good. It was freaky because being in the passenger side with
you
like
have no control.
No controls, and I'd grab the wheel a little bit and I'd give him one of these like, okay, brake, like those kind of things.
You just feel yourself turning into your dad.
Yeah, yes. It came upon me very
quickly. You got out of the car. You had on like knee socks and New Balance.
Yeah, give one of these like, whew.
The khaki above the button.
You clipped your phone to your pants.
Yeah. No, I did feel that, but he did good. I'm excited. It'll be fun.
That is fun. Let's talk about commodities, real fast. Oil prices, at the time when I did the news, they were up around 3%. I'm not sure what they're doing this morning. Of course, everything's a moving target. But what's going on in crude oil?
They're basically unchanged. You're sitting at 73.30 right now, but they've had, including the overnight session, it's been about a $3.50 intraday range. So a lot of volatility in the oil markets on both sides. I mean, you're seeing huge moves.
Are you trading micro crude at all, or?
I'm not trading the micro crude. I think it's actually more interesting to be trading the options, just because the skew on the major contract /CL, the skew on the upside is just through the roof. I mean, you're talking about the 100, 120 strike calls have some serious value to them, and that's a doubling in price of oil, basically, 50%, 60% upside move. So those are more interesting to me. When you look at oil volatility itself, it's really never been higher. You got a 95 IV rank right now. It's actually come in a little bit, but over the last couple of sessions, volatility is off the charts. So I think the options are more interesting than the micro futures.
How about for you, Mikey? What are you doing in crude oil?
Yeah, I've got an iron condor in the CL contract, CLQ5, 27 days to go. Short options are between 61 and 70, and it's a 1 point wide iron condor. So just taking advantage of the heightened implied volatility. But yeah, oil has definitely been our first lens into what's going on overseas. We've seen big intraday ranges. We've seen huge rallies, which has been coupled with some bad stuff. We've seen some sell-offs, which has been coupled with de-escalation. So it's like anything, if we see big moves in oil, there's something happening.
Sure. So just be careful also, too.
Totally.
Because it's great, but it's just be careful. In other commodities news, it looks like gold is holding as traders continue to weigh inflation warning and Middle East risks. What are you guys doing, if anything, in the precious metals?
The gold move's been pretty interesting. Silver move was even more interesting because silver is near highs. It's given up a little bit of it today, of the move today. But the gold-silver ratio has come back into kind of the normal range. Because gold has moved so much to the downside and silver has hit new highs. So that trade we've been talking about it for like 6 months.
You talk about it, be about it.
Well, I was about it for 6 months. Okay, it was in the cherry picks. We were about it.
Okay.
But it basically came to fruition in the span of like 3 days.
Right. Wow.
You know, like it was something that you thought would kind of happen over time, and it just all of a sudden happened.
Sure.
So, that kind of trade is kind of gone. So I'm kind of neutral gold where we're sitting right now. I got some butterflies and broken wing butterflies, stuff like that.
How about for you, Mikey, and precious metals, gold, silver?
Yeah, I've been doing almost exclusively. I've been routing broken wing butterflies in the gold futures contract. And almost every time I'm collecting $2.50 or around there. So I've basically just been fading the moves. So like right now I'm looking at 3240, 3220, 3180. So a 20 by 40 broken wing butterfly in the 38 day. That's trading for $2.30. So I've been doing those into the moves. And then if you get the reversal, because you're collecting $200, you can remove the risk on that butterfly pretty easily and just create a symmetrical butterfly. And that trade has worked really well because we've seen two-sided action in gold, even though it's been a crazy rally to the upside. If you look recently, you're still getting some pretty big 300-point range chops.
See, that's why I like checking in with you guys, because you guys have different perspectives and different ways of utilizing your capital, more efficiently to do cool stuff. So gold butterflies, who knew?
Trying. It's another place that has high volatility and a lot of skew to the upside.
Yeah.
And so when you get that sort of thing, I did a broken wing butterfly in the oil futures for the cherry picks too. It's like that's the sort of stuff that we look to do because it's hard to short 100% implied volatility in something that's huge.
Right.
So we kind of play it like that.
Speaking of upside skew, here's a fun fact. Circle, CRCL, the stable coin, they have hit 5 all-time highs in June. Not 1, not 2, not 3, not 4, but 5 new all-time highs. Shares of Coinbase and Circle continue to surge after the stablecoin bill passes the Senate. The Genius Act could spark explosive growth in the $260 billion stablecoin market. What opportunity is there, if any, in the new IPO Circle?
I mean, all these IPOs have gone absolutely bananas. If you've looked
it seems
at
like free money.
CoreWeave, Circle, it's been a crazy trade in some of these. Circle is tough just because of the move and volatility is through the roof, and markets are super wide. I don't know if there's a short interest on it. Let me see if there is a borrow rate on it. Marginal, if anything, it's like a 1.5%. So there's no. This isn't a squeeze type thing. I don't know what the float looks like here.
Sure.
It's probably
But you guys haven't traded it.
I have not traded it.
Okay.
No. But, I mean, it's up another $27.
Which is
10%
bonkers.
today.
Yeah.
It's, just be careful. I think I saw something last week where when it was trading at like 150, the market cap of it, of Circle was something like 20 or 30 or maybe even more % of the available stablecoin liquidity.
Right.
Which is like,
The math wasn't mathing.
Yeah, the math wasn't mathing. Obviously, not everything trades at intrinsic value, so,
How about for you, Mikey? Are you doing anything in coin-based? Is that more like a little bit less wonky than a Circle?
I got a butterfly right at the money in Coinbase, 300 strike. So expiring today. I was gone on Wednesday, so that should be a nice little surprise for me today.
Yeah, coin's up, I think, $11.
Yeah.
Yep.
306.
Big moves. I'm actually trading IBIT.
Okay.
So IBIT is my favorite way to trade anything crypto related. It's basically just a proxy for Bitcoin's price change.
Okay.
But $60 stock, super liquid. And even with a low IV rank of 9 right now, there's still 50% implied volatility in the options, which is still plenty if you're selling premium. So this is my year-long trade. I've had a strangle on in there for the entire year.
That's interesting.
Good. Yeah.
Mm-hmm.
Hey, Texas Instruments has announced that they are going to spend $60 billion to expand their U.S. manufacturing footprint. They are the latest chip maker to ramp up domestic production amid pressure from the Trump administration to reshore the semiconductor supply chain. First of all, I did not know Texas Instruments had $60 billion.
Well, it's a $170 billion market cap, so I'm guessing they've put a 50-year time horizon on this.
Yeah, I was
guess.
like, how, what, how, okay.
Yeah.
So many calculators.
So many calculators. But okay. Just talking about the CHIPS Act. I'm not sure if you guys are doing anything in NVIDIA, AMD. I know obviously you're not trading Texas Instruments, but.
Yeah, Texas Instruments is kind of on the lower end of the liquidity spectrum for the semiconductor stocks.
Or SMH, anything at all? Or
SMH is a good one to look at. I have a little short delta in NVIDIA, but it's got an IV rank of 4.
Bleh.
It's just not, it's not that interesting. SMH, 17 IV rank.
Okay.
I mean, you're back to highs. It's been a complete V bottom. We talk about when is the V bottom not going to be in play. This one was a complete V bottom.
Sure.
So now it's tough to be long.
Mikey, you doing anything in the chip stocks?
Yeah, I mean, I liked NVIDIA when it was under 100, but now, like Nick said, it's back at 150. I think you can be neutral in there, sell some premium, or if you want to take a stance, you can. But I'm looking for products that haven't really participated, like AMD was one of them.
Yeah.
AMD has...
And they got upgraded by analysts, I think.
That's why it keeps going up.
Yeah.
Yeah, I
$5
think
a day.
if you're trying to be agnostic, I think you just go to like SMH and trade something there, especially if you're trying to do a strangle or something like that. It's much easier to trade these ETFs than the single name stuff.
Yeah, trying to pick an individual winner.
Yeah.
The European Court of Justice's Advocate General proposed that Google's appeal against a record $4.7 billion antitrust fine be dismissed. The fine relates to a long-running antitrust case surrounding Google's Android operating system. So basically, Google's going to have to pay the EU $4.7 billion. That's not nothing.
I don't like
Sometimes you
that.
see these fines, and it's like, oh, Google got fined $2 million. And you're like, they spend that on lunch. Like, that's like nothing.
Yeah.
But $4.7 billion is...
It's something.
It's something.
Certainly something.
I'm not sure what Google is doing as an underlying.
It's down about 40 cents here pre-market. It had a little bit of a move lower on Wednesday. It's one that has not participated in the rest of the upside that the Mag 7 has seen.
Right.
Microsoft at new highs. Apple's been kind of lagging. Tesla's, kind of chopping near the higher end of where it's been trading. NVIDIA back to highs. Google has gone basically nowhere for, about a year. I mean, it's had an upside to 200-ish, but 175 where we're trading right now, 172 and change, has kind of been the middle of the range. But it's understandable. I don't think the 4.7 billion is in the long run is that big of a deal.
Right,
but
right.
They got problems with Google search and
Sure.
kind of the whole prospectus of the company with all the things that are going on in tech and AI and all that stuff. So who knows?
How about for you, Google?
Oh, just filled on the gold butterfly.
There
Nice.
you go.
Yeah, I mean, this is kind of the age-old question. How do you get long when the markets are fully recovered? Well, if you look under the hood, there are still products that have not participated. So like of the Mag 7 stocks, Google, Apple, Tesla was one of them. Tesla's trying to claw back, but yeah, I think there's opportunities there. If you think that Apple and Google will be around forever, they're not in the same spot as like a Microsoft.
Okay, it's a little opportunity there for some dogs to shine. Speaking of Apple, 2 Apple stories here. Apple is eyeing using AI to design their chips. They are tapping into generative AI to help speed up the design of custom chips at the heart of their devices. The only thing about this that makes me nervous is like if you ever try to use AI for something, but it'll give a person like 6 fingers or 7 fingers. I'm like, what are the ramifications of that in chip design? Like if it does, and then all of a sudden your phone is like a laser. I don't know.
Yeah. Very fair.
Because it's not perfect. Like AI is great, but it still has. But you know what I'm saying? Like
you catch those like little nuances.
right, you catch those, and you're like, oh, that's weird.
Yeah.
But okay, you do you. But in other Apple news, Apple is looking to make a premium priced folding iPhone starting next year. That's according to one analyst. Would you guys want a folding iPhone?
I feel like this is deja vu. Like, don't every like 2 or 3 years,
Yeah.
they're like bring back the folding phone, and like,
Are they
didn't
calling it-
Samsung do one?
Yeah, I think
Isn't there
is.
one out
Yeah,
right
I think
now?
there is. I think there is a Samsung one.
Are they calling it the Razor?
Yeah,
Oh man, I miss the Razor.
yeah. I don't know. I don't know if I.
But would you
not
get
be
long
buying this.
Apple on this news, like an Apple folding iPhone? And
No.
Apple's a little bit of a laggard, like you guys were saying. Like,
I don't know. I don't know if I would get long it on the folding phone. news,
Yeah,
but,
this is not the mega bullish news I was looking for.
Yeah.
The folding phone.
But it's another one that's if you're playing a catch-up trade.
yes.
Apple's, it in the peak of the craziness, it got down to like the 175 handle. But this has kind of been the lower end of where it trades. 195, 190-ish has kind of been your local lows, as they would say.
Mm-hmm.
And I think that's probably an interesting point to get long, and we're there.
I will say, have you seen the glass bubble update?
No.
What's that?
Basically, like the display. So when you're navigating your apps and whatnot, it's more of like a glass bubble. It's kind of like liquidy.
Oh,
yeah, the liquid glass.
liquid
Yeah, yeah.
glass,
It looks really nice.
Yes.
I will say that. So if there's a bullish case for Apple, it's that.
It's that. Hey, Microsoft start over, Vanetta. Microsoft is prepared to abandon high-stakes talks with OpenAI. Oh my God, they are breaking up.
No.
The tech giant is considered pausing discussions with the Chat GPT maker if the two sides remain unable to agree on critical issues such as the size of Microsoft's future stake in OpenAI. Things are getting pretty cutthroat here in the AI space. They are contracted to maintain access to OpenAI's technology till 2030. Microsoft, like Nikki said, touching new highs on the
Yeah.
reg. What are you doing, Microsoft?
Don't they own like 10%?
They do, and that's what they're trying to figure out, because then OpenAI now wants to go to a for-profit model, and they are backing other AI systems, and Microsoft's like, hey, what about us? And it's a whole big mess.
Yeah, I mean, it's hard to trade Microsoft to the upside. I actually think it's more interesting to short it during earnings.
Oh, interesting.
It's had such a crazy move. Like if they just post
good news
mediocre
baked
stuff,
in
yeah,
type thing.
you could see this come down a little bit. But I asked ChatGPT what that particular robot guy I was talking to, or girl,
Yeah?
or alien, whatever, if they had 24 hours as a human, what would they do?
Oh,
And
okay.
the answer actually was beautiful. I shed a tear.
Oh, that's nice.
So go ahead, type that into ChatGPT, people. What would you do if you had 24 hours to be a human?
Aw.
Yeah.
Well, this is a crazy story. Sam Altman, who was running OpenAI, says Meta offered OpenAI staff $100 million bonuses as Mark Zuckerberg ramps up his AI poaching efforts. What job could you have that $100 million would not tempt you? Like, who are these people that are turning down $100 million? Like, I was like, something about this seems like cat.
Evil.
Like, no, something about this seems like, this doesn't seem right. Like, someone's like, no, I don't want $100 million. I'm going to stay here. Be so for real.
Yeah,
It's like live golf all over again.
Yeah, because this is, and
But
this
these are
bonus.
programmers and engineers.
Like, I don't think there's anything I would not do for $100 million.
Whoa.
It's interesting because like
$100 million, Nick?
No, I'm with you.
it's like you're creating something that automates a lot of things. Eventually, the thing you're creating that automates a lot of things automates itself, and now you're out of you're out.
Yeah, but you
Like,
still get that $100 million bonus.
Exactly, that's what I'm saying. You take
Yeah.
that bonus and you sail off into the sunset.
Yeah.
Yeah. But here's something interesting. This is from researchers at MIT. ChatGPT is eroding critical thinking skills. The study looked at subjects age 18 to 39, and they asked them to write SAT essays. And basically, the longer that people used ChatGPT, the less able they were to form their own original thoughts, and the more they just started copying and pasting whole passages from chat. It was just actually a really interesting study. Again, the sample size was very small. It was only 54 people. But have you seen all like the TikToks of now like college graduates being like, I didn't learn anything in college. Like I used AI the whole time. Have you I'm a little concerned.
Yeah.
Because it feels like we got out on like the last ship, we had a completely AI free, experience for most of our lives.
Yeah. There's a direct correlation to kids that played Ghost in the Graveyard and Kick the Can to kids that did not. And you see that gap. But yeah, like of course you go to high school, you go to college, and it's not about memorizing the stuff that you learn there. It's about training your brain to go through this critical thinking and create a solution and arrive at a solution.
Right. Have deductive reasoning, be able to like figure things out, for yourself.
And if you don't have that anymore,
bless you.
Thank you. That was a big one. Woo.
That's problematic.
Yeah, I'm a little scared. Hey, AppLovin drops as investor sentiment was dented because they did not make it into the S&P 500. I know Scott Sheridan always, when he does his top 15 tickers over at Tastytrade, AppLovin is always in there. But I'm not sure how viable it is as a trading option. Not sure what the markets are in there, but
it's come down quite a bit.
Yeah.
Yeah, it's a mover. You can have some big moves here, and the markets are not great.
Okay. I figured as much, but he's always mentioning it. So someone's
it's a retail favorite. It's in the basket of
Right.
fast-moving stuff.
Right. So people are trading it. So just be careful, I guess.
Yeah. Yeah.
Tesla's robo-taxi debut is set for 2 days in Texas. The long-promised launch of Tesla's robo-taxi service in Austin is scheduled for June 22nd, but it sounds like the company's initial offering will be modest at best. The Financial Times says Tesla will only have 10 cars available, and they will only be in a very specific area of the city, and they will avoid the most challenging intersections, and if issues arise, remote operators will reportedly be able to take control of the cars. Tesla, another laggard in the Mag 7. What are you guys doing in Tesla?
Do not have a position currently. You got earnings coming up middle of July. Volatility has kind of picked up a little bit, but not through the roof. I think it's an interesting iron condor strangle trade, maybe, if you want to kind of trade the range. It's been chopping around here. I mean, you had the breakup, the bromance, the breakup of the bromance, which led it from 350 down to 250, and it's come kind of in the middle of that range. We're back up to 320-ish. So.
Which then just weirdly led to him posting like his drug test online, and I'm like, what are you doing?
Did you see? Did you see where that drug test was taken?
I didn't, but I know people are like analyzing it and breaking it down. Where was his drug test taken?
Des Plaines.
Oh, in Des Plaines?
Yeah.
Oh, no,
Really?
that's where urine went? That's weird.
I'm like, I know where this place is.
I know where this
right down the
place
street
is.
from the driving range we go to. But yeah, it was funny.
They were like, well, was it observed? Did someone see him pee, or did he just send your? And I was like, I need to go outside and touch grass.
Yeah.
Hey, in biotech news, I know you guys don't trade a ton of biotechs, but Gilead Sciences has now received FDA approval for a twice-yearly HIV prevention injection. Offers a powerful and convenient new option. This is great medical breakthrough. Like, this is for the pre-prevention. It's a preventative measure, so you don't get HIV, and it's just you get a shot twice a year. Seems amazing.
Right.
GILD, I'm not sure like how liquid. I know you don't trade a ton of Gilead, but
I don't remember the last time I traded this. I felt like it was in like a 60 or 70 handle, but trading at 110 now.
Yeah, that seems about right.
Yeah.
Doubled from the low. Yep.
Yeah.
So it checks out.
Because I knew I was gonna do the show with you guys today, I saw this and I was like, the immediate millennial nostalgia. Capri Sun. I don't know if you saw this. Capri Sun released a 15-inch solstice pouch, and it sold out in minutes. It was only available for sale on June 16th and 17th, but it sold out in 4 minutes. The 15-inch pouch holds 20 ounces of juice, more than 3 times a regular pouch.
That's got to
This would
have.
hit so hard in the summer.
What is the sugar content in that?
Oh,
that
yeah.
has to be.
How many grams of sugar again?
That has to be off the charts.
Yeah.
Do you remember these from growing up?
Oh, they were the greatest.
Yeah.
Yeah.
Capri Sun was magical.
Yeah.
Mondos were another one.
You just got to make sure you don't bust through the back end
Yeah.
of the Capri Sun.
Yeah.
You know,
Couldn't be too aggressive.
Yeah,
Like,
you get
You have to like pinch it in a specific way.
yeah, because you get
like
too
that.
aggressive and then
Yeah.
you're through the back and then it's you're.
It's why the kid I grew up with is a surgeon now. He did a good job. Anyway, well, I hope they bring these back, and I hope these are easier to find. Nike, which has earnings next week, pushing back their Skims launch with Kim Kardashian. Oh no! Due to production delays, the companies do not have a new launch date, but they are expecting to debut the apparel line later this year. Nike is betting big that the popular Skims brand will help invigorate the Nike brand. What are you guys doing in Nike? Like I said, earnings next week.
Nike has not gone anywhere since the move lower in the tariff.
Sure, yeah,
period.
they have a
It's
lot of tariff expo right there.
China.
Right, yeah, Vietnam, Cambodia, China, yes.
It's been sitting at $60. I mean, like it's right there in the pre-market. It's a tough trade. 65 IV rank. I've been trading it as like iron fly / wider put spread to a tighter call spread to lean a little bit directionally long, but it's been one that there's not much to do other than being, right at the money here.
Yeah. I mean, $5 expected move for next week, which is the earnings announcement. Thursday after the close, we'll definitely be trading this because 10% of the notional value of the stock price with a $60 stock, like you can do anything in there. But I don't have a position on right now, but we will definitely trade it next Thursday.
All right. The Los Angeles Lakers owners are selling a majority stake in the team at a $10 billion valuation. The Buss family has agreed to sell the majority stake to businessman Mark Walter. What do you think of that valuation? High, low?
It's an end of an era, but I saw a very interesting tweet. This might not be completely accurate, but the tweet was, of course, they made a ton of money on this deal.
Yeah.
But if you would have just invested in the S&P.
Oh, I saw in the S&P 500, you had had a higher.
Yeah, it was like a slightly higher return if you just had money and you invest in the S&P.
Because they bought the team in 1979 for $67 million. So I saw that tweet. So they're like, if you spent in 1979 $67 million and shoved it all into the S&P, and that's saying that you were able to hold it through, the massive doubt, the crash of '87, all the 2008, like all the other stuff.
Yeah, it doesn't obviously include like all the other things that the Lakers created.
Right.
Like the branding and all that stuff.
It's got to be one of the top.
raw deal.
The top most valuable
franchise, right? Yeah.
Like the Cowboys are probably right there.
Yeah, the Yankees.
Yeah. So this is probably the top of the
top.
Yeah.
Yeah.
Interesting.
Well, we'll see what happens.
Yeah.
Hey, finally today for my viral video of the day, did you see the historic Gale Street Inn in Chicago is closing?
Sad news.
I don't know if you saw that. That was sad. Just like couldn't. It was like.
Is there any more
staffing
info
issue.
on it?
I think it was just like a stat. That's all they said. They were just like we couldn't get people to. I don't know. But maybe you want to make some of your own barbecue at home. I saw that. I'd never seen this before. I'd seen this in baking, but a little upside down cornbread, pulled pork cornbread. What?
If you're anything like me and you think regular pulled pork sandwiches are just too basic, let me tell you how to change that. Upside down pulled pork cornbread.
I like the jalapenos.
This is anything
And then
but
that's the pulled
average.
pork.
However, it is packed with flavor
And then that's
and a ton
cornbread
of texture.
batter. It looks
Taking
like
barbecue
cheese.
sauce, jalapenos, pulled pork, and cornbread, putting it all upside down on a sheet tray, baking it until it looks like this.
And then
you can eat it like this, or hear me out, you can make a sandwich with it. I chose to make a brisket sandwich.
So then he takes that and then he puts
from my
brisket
local
on top.
barbecue spot, add a little bit of creamy coleslaw, and there
be all over this.
have it. A spin on something you didn't even know could be spun. Nailed it.
They gotta take that, and when they flip it over, when you got the pork, the pulled pork side, you gotta crisp that up.
Oh, like under a broiler.
They gotta do like a broiler because
comments. That's a good addition.
Yeah, that thing.
It's too soggy.
That thing could be. You're gonna it's gonna crumble and like be all
That's
You know, like you gotta crisp it up on the top, get that little char on there.
Yeah.
Or smoke it.
Yeah,
throw it in a smoker.
You can't. It's not gonna.
Yeah, it's not gonna stay with the sandwich with the rest of it. But I would eat it.
Would you eat it, Mikey?
Of course.
Yes. 2 pieces.
2 pieces.
I would sandwich it too.
I love it. Give me 16 of them. Hey, we're going to take a quick 90-second break. Nikki, when we come back, what's coming up?
We got confirm and send. We got some questions, but if you got questions, throw them in the chat. We'll throw them up there too. So we're going to take a quick little 90-second break. You're listening to Tasty Live.
You can get up to $4,000 when you open and fund a new account with Tastytrade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tastytrade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tastytrade. Make your move. The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tastytrade. Download today.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
I had to rewatch that market measures from this morning, Bodacia. Our raid really distracted me. I was like, get away from me, uncontrollable fire.
I told you, Tasty Cracks, you can't plunder with headphones on. Light pillaging, maybe.
Sometimes I'll hide in a gross peat bog in the middle of a raid, just so I don't miss market measures.
I'm only recently comfortable admitting this, but I think I trust market measures more than I trust my savage hellhorse, Arbitrageur.
God, I forgot to tell you guys that I slaughtered a horde of conformerons this morning. Did the whole terrifying row of severed heads on pikes as a warning thing, but you never know with those idiots.
Okay, thanks for the heads up.
Ha ha ha! Goblets of hot blood for everyone.
Nice.
Thanks, you guys.
Normally I hate puns, but that one was okay.
Me and Mikey, Valentine's Day.
HR. Ready?
8 years and you say 9.
Yeah.
It's 8 to 9.
Yeah.
It's same thing. It was right there. Right when we
So,
started.
He was my friend first, clearly. Met at work.
Yeah, at Tasty. We met here. Mike interviewed me for a support role right when I was starting off. So Mikey was here. That was where the Mike and his whiteboard came. He's nervous. He gets nervous sometimes when we're this close together.
What I remember about Nick was his beautiful brown hair and brown facial hair, which no longer...
Say it.
I got Joe in Houston. What's up?
Just want to call in and say I really appreciate everything. I started trading and learning from you guys about 6 years ago. You know, it was you guys' work and the platform that got someone like me that didn't really know anything about the market capable of really outperforming the market now for, 5 out of the last 6 years. And so just, I really appreciate you guys. I can't think of another company where I can pick up the phone and call the CEO, the trade desk and reach somebody as quickly as I can there. So just really appreciate everything and what you're doing. For guys like me out here, what you're doing is really spectacular. So really appreciate it.
Thank you, my friend.
I really appreciate it.
You made my weekend, man.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tastytrade. Genius loves company.
Mikey, we are back, my friend. E-mini S&P 500 futures 60.52 up 18 points. Erasing the entire move yesterday. Who cares about the wars or any of that? It never happened. It will revisit it in 2 weeks. Volatility coming in 13 ticks. You got oil down 22. Bitcoin flying around. Gold and silver are both down. Bonds down. A little funky move, but who cares about that when we have confirm and send. These are some viewer questions that we got sent that we will be going through. And if you have some other questions, shoot them in the chat. We're going to pull a couple from there as well.
Love it. Yeah. Join us on the YouTube channel. We're streaming on Tastylive.
Yes.
Throw those trade ideas and questions along.
Throw us a like, subscribe.
Yeah.
How we keep the job.
Like and subscribe.
Yeah. We're a little light on viewers right now, if they measure that. It's a holiday.
Yeah.
It's a holiday. We had to,
Yeah. Only a 30-point expected move in the E-minis. It says something. First question here. I've heard you guys discuss a wheel strategy, but I've never actually seen you take assignment of a stock. Why is that? I would say it's more rare for us to take assignment than to just roll the put out if we're trying to place that sort of strategy, because even if you have a short put that goes in the money, if it's just slightly in the money, it's going to have the same risk profile as a covered call. You're still collecting extrinsic value, but it's going to be more capital efficient to have the short put versus the shares.
Yeah.
So in almost all scenarios, you're going to be using less buying power to just roll the put forward than taking the shares. With that said, if the stock really tanks and you're trying to roll the put forward and you're not collecting any extrinsic value, then it doesn't make sense to roll that put forward, because you're actually putting yourself in a worse spot if there's a recovery, because short puts have dynamic deltas that go down when the market goes up, where 100 shares of stock have static deltas. So in that scenario, we're going to take the shares and we're going to wait until the stock recovers, and then we're going to sell premium above our cost basis.
Well said. Yeah. Perfect said. I have great news to report. Frankie is back.
There he is.
We have Frankie back in the chat. Frankie, we missed you. We missed you, buddy.
It's wild. But yes, he is back. I see him there.
Yes.
Great to have you back. Yeah.
Perfect. Well said. Let's do the next one. So I have a deep in the money call. If I roll to July, August, or even September, it'll be for a debit. But if I roll to October, I can collect a credit. So this is probably a call spread, is what I would imagine. What is the furthest out in time you would be willing to roll a tested position, and which is more important, rolling for a credit or keeping the position within a 45-day cycle? So you can always roll a short position out for a credit. It doesn't matter which expiration. The bid-ask spreads is probably what you're seeing here. If this is a naked position and it's looking like it's a debit roll, the bid-ask spreads are probably really, really wide. You probably get filled for a small credit, depending on which time frame you're looking at. With a credit spread, a call spread, that's where if it goes fully in the money, you might be looking at a debit roll, and we typically don't do that because you're adding risk on a position that's already a junky position. So if it's a credit spread, I say just hold it and let it go. If you want to continue with that assumption, go to a 45-day expiration. Go to August. That gives you a little extra time, and sell an at-the-money call spread. You won't get back all of the loss that you have on your current position, your position that's gone completely against you, but it still allows you to maintain the same directional exposure, but have some positive decay in your favor. So that's what I would do. But as for the question at the end, rolling for a credit or keeping the position in a 45-day expiration, I think you got to keep it in a 45-day expiration, because when you get too far out in time, it just ties up capital. It doesn't move. Yes, you collect the credit, but it just puts you in a position that's too slow moving to ever get out of.
Yep. Yeah, that's really it. If you just have risk on one side, you can roll out as far as you want.
Yes.
To get the delta move, but typically we like to stay in that 45-day window.
Yeah. Don't want to be stuck.
Yeah. Cool. What is the most efficient way to learn the advanced tasting mechanics? I've watched numerous videos, but if there's a consolidated PDF that talks about criteria to choose an underlying type of strategy and then how to manage. So if you're on tastylive.com, you can search for things like strategy checklists. So like iron condor checklist, strangle checklist. That'll kind of get your mind in the right space in terms of what you're looking for. But to put it simply, extrinsic value is everything. If you understand how you can manipulate extrinsic value by rolling up or down and out in time, and you understand how extrinsic value looks differently in further expirations or near-term expirations with higher IV, that's going to basically cover 80% of the stuff we talk about, because everything is related to extrinsic value, applied volatility, time decay, how extrinsic value looks different from an earnings cycle versus a further out cycle. Like all these things they all come back to extrinsic value. So master extrinsic value, that'll cover a lot of what we're talking about. And from there, I would just look for specific checklists for strategies.
Yeah. I think as you get more comfortable with trading, understanding the Greeks kind of points you toward what management you're going to do. It's not, you don't have to be as cookie cutter once you kind of understand the basics. Yeah. You understand you want, if something's moving against you and you're getting too much short delta, you're going to find ways to reduce that delta, whether it's rolling up a put to pick up 10 or 15 or 20 deltas. It doesn't necessarily matter. It's just the action that you're taking and the concept there, applying to your positions. I find it hard to be so mechanical. You got to understand what you're doing and then kind of tailor it to your own risk tolerance and directional assumption and whatnot.
Yeah.
Quick one coming in from Mike in the chat, asking about broken wing butterflies and something like oil or gold. How much of the original credit are you trying to keep when you make it into a free butterfly? For an SPX butterfly, they like to do keep about $50. And what a free butterfly is, so when you do a butterfly, you're long. Let's say if you're doing a call broken wing butterfly, you're long a $10 wide long call spread. You're short a 20-point wide or wider short spread to finance that long spread. And so if you can buy in whatever that risk is, that embedded spread that you have, you leg into a risk-free butterfly. That butterfly has value, but it's risk-free from a principal standpoint. You're not putting any capital out there in risk. What do you target for that sort of adjustment, Mikey?
I would say, so like these gold butterflies I'm doing, I'm collecting $250. Every single one that I've kept has been over $50. So $50, $70, $100. So I would say if you're keeping at least $50, you're covering commissions, fees, all that stuff, and you're still walking away with a decent chunk of change. And
that's mostly applicable to wider butterflies too.
Right. If you have a narrow butterfly, you're not going to be able to do that.
Yeah.
Like the less you collect up front, the lower your take home is going to be. But if you're collecting less up front because you want to have less risk, or you want to make the spread really wide, like the debit spread portion wider, that's totally fine. And in that case, it's more about just removing the overall risk than keeping something. So if I'm collecting $200 or $300 on the broken wing butterfly and gold futures, I'm looking to keep $50 or more.
Yeah. For me, I look at these butterflies and broken wing butterflies as just like kickers to my portfolio. So if I'm buying in the risk for, maybe even a small net debit because the move, happens quickly, meaning if you're doing a call broken wing butterfly, stock goes down significantly very fast, I'm pretty indiscriminate. I'll just buy in the risk, give myself the shot on the upside, free up the capital. So I look at it more on just, if you put on a call broken wing butterfly and you had this on in the beginning part of the week in gold, and now gold's down $50 today, almost 1.5%. I buy in the risk, and I don't really think about the exact credit or debit. Be a little bit flexible with it. So,
yep.
Good question though. It's a fun one.
I see some others in the chat here too.
Sure, throw it out
When would you consider a diagonal versus a calendar spread? I'm almost always going for the diagonal because there's no risk to the one side.
Yeah.
So if you have a call diagonal, there's no risk to the upside, as long as you're paying less than the width of the spread on entry. Same with the put spread. But if a stock is too expensive, like Costco is a popular one where I do calendar spreads in there, it's because it's $1,000 stock, and a diagonal spread's going to be thousands of dollars. Where a calendar spread, you can get under $1,000 or right there. So it's based on the product, but almost always I would prefer a diagonal spread because you don't have that risk to one side. It makes it an easier trade.
Yeah, if you're directionally correct, you want to get paid, and with a calendar spread, it does have some delta to it, but it's really a vol play. It's a long vol play, and so if you do get that long vol, you want to get paid on it. And long vol is just volatility being realized to either direction. And if you get that and you don't get paid, it stinks. So I prefer to lean towards the diagonal spreads as well.
Yep.
Should we do one more from the confirm and send emails too?
Yeah, sure. For sure. I prefer being neutral in my positions, but it's nearly impossible to keep any positions delta at 0. What is the tipping point for an underlying where you would consider it to no longer be neutral and become a directional position?
That's a good question.
Yeah, so I think there's a couple of ways you can look at it. You can look at it by delta. You could also just look at it by where the stock is relative to your strikes. So, and that's going to be, I think that's going to be more telling because you could have a low implied volatility strangle on, and the stock could be approaching your put or approaching your call, but not yet in the money. And it's going to be a higher delta position because your out of the money option is going to basically go to 0. If you have the same scenario happen in a high IV product where the market is approaching your put or approaching your call, those options will likely still hold on to extrinsic value. So it doesn't give you the same sort of story because you could have you could even have an in the money option where your deltas aren't that crazy because the market still has a lot of implied volatility there. So I think if you have a strangle on or straddle and you lose 80% of the value or more in your untested option, that is now a directional position because your untested side is losing its hedge capability to hedge the other side.
0 delta is also impossible.
Yeah.
You're never you don't even want that. You want to get short deltas at highs and long deltas at lows. I mean, 0 delta is a range, and we talk about it, somewhere 100 plus or minus overall deltas in our portfolio is what we consider to be somewhat neutral. I mean, that's going to change based on your risk tolerance, how much capital you have available, your own directional assumptions. You got to have some wiggle room. You can't just be 0 all the time and really ever.
Yeah.
It's impossible because things are moving, stuff's going to move more than other things, and your beta is going to change and your volatility is going to change and data is going to come out. Like all those things are going to influence it. So that's another big part.
Yeah, it's all percentage based on your portfolio. So like plus or minus 100 deltas for a beta weighted portfolio delta, I would say that applies to accounts 25K or less. But if you have a 100K account or 500K account or $1 million account, now you're talking about
100 deltas is nothing.
Yeah, now you're talking about 500 deltas being neutral, 1,000 deltas being neutral. So it depends on your portfolio size and what you're doing. But yeah, for individual positions, I think you can simply just look at your untested side. And if your untested side has lost a ton of value, you no longer have anything working for you on that side. And it's all about the tested side, which now it means it's a directional trade.
Very nice. Next one, please. What tool or tools do you use most on the platform? Oh, man.
Order chains?
Order chains are a good one.
That's just a passive use.
Yeah.
It just does stuff for us.
Yeah.
But yeah, the analysis tab I think is probably
that's where I was going to go. The analysis tab I think is the most fun piece to use. But those are, I think those are the two.
Yeah.
Analysis mode is probably my favorite. Yep. Just change in volatility, change in time, all that good stuff.
Always analyzing, overanalyzing sometimes. But yeah, it's nice to see where you could stand, especially for binary events like earnings trades. If you're decent at like understanding how the back month implied volatility will kind of be your baseline, and you can crush the near-term implied volatility towards that level, it gives you a good idea of where you might stand given a move or non-move in that market. And we've covered that before. Like if you're on tastylive.com, if you search for earnings implied volatility crush or implied volatility crush explained or earnings crush explained, you'll find segments where we talk about that and explain it in detail.
We'll do one more from the chat here, and then we'll take a quick little 90-second break, come back with our option jive here. But we got a good one from KH. So he's asking, or they're asking, about a vertical call spread in AVGO where the short call is in the money, but the long call is out of the money. AVGO ex-dividend date is today. The option is still 28 days out. So great thing about options is they're still going to have extrinsic value. The stock has a 59-cent dividend, ex-dividend date today. That means that your option has more than 59 cents of extrinsic value because you didn't get assigned. Assignment occurs in the overnight session. So you would have come in with short stock today had you been assigned. You can't be assigned intraday on any option position. So you are free and clear. No problem there to KH. So you don't have to worry about it now.
Yeah.
Over.
Yep. So if you're approaching ex-dividend, just look at the perceived dividend. You can pop it out on the overview tab along the right-hand side. Dividend, 59 cents, 6/20, 2025. So if your option has more extrinsic value than that dividend, then you are very unlikely to be assigned on that.
Yeah. And it doesn't matter the duration. It's all about extrinsic value always.
Exactly.
That's it. Good stuff. Thank you, everybody, for emailing in those good questions and chatting us in. We're going to take a quick little 90-second break. We're going to come back with an option jive, catching the move before it happens. How many times do you catch the move before it happens?
Always.
We're going to take a quick little 90-second break. You're listening to Tasty Live.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tastytrade, named best online broker for options trading. Genius loves company.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tastytrade. Download today.
All right, so you've got a couple spread trades under your belt, and you're ready to start scaling up your trading. The common thought is to just increase the contracts, but this is only multiplying the risk and the reward of the position, essentially pushing the chips in and doubling up. Instead of adding contracts to the position, consider widening out those spreads.
One of the things that I do differently than a lot of people is that for the purpose of the show, I have multiple accounts, right? So I'm trading in a lot of different sized accounts. So I've got to balance finding ideas and finding opportunities for smaller sized accounts as well as finding opportunities for those larger sized accounts. I think that the variable of trading on a day-to-day, hour-to-hour, minute-to-minute basis is really powerful and really fun to have access to.
The future of trading is here.
Join Mike and his whiteboard, plus the Tastylive crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Do you believe the efficient market hypothesis holds up completely, or do you think that there's some merit to technical analysis?
Technical analysis has some engagement merit, meaning that it might get you excited about doing something, but you can't validate anything in technical analysis. So I'm purely an efficient market theorist.
Markets are efficient. I don't care what anybody says.
I think there's definitely merits to technical analysis just from a psychological standpoint, where you see certain levels, you see prices bouncing off of lows or kind of being resisted from higher points. But at the end of the day, you need to prepare for being wrong. It doesn't matter what you're looking at. It doesn't matter what your assumption is or how you arrived at it. You should account for being wrong in that scenario. Basically, it comes to trading small and playing the probability game versus seeing one thing or having one thing and then going all in on that one thing. I think technical analysis or fundamental analysis, if it helps you be comfortable with your decision-making process, then I'm all for it.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tastytrade. So spread the word and earn rewards. Terms and conditions apply.
It's option. Jive.
Mikey, we are back. E-minis up 21, 60, 55. We're at the high of the session, or maybe a point or two off the high. Just a skosh, as Mr. Tim Knight would say, off the highs here. But we got an option jive. Excited for this one?
I am excited.
I mean, this title, I'm going to have to speak to Gad about this.
A little clickbaity.
A little clickbaity here. The catch the move before it happens. I don't have a crystal ball here, but maybe this will tell us a little bit of something that we can use in the future to give us an idea of where a stock might go.
Yep.
And I think this one's an interesting one because I looked over the slide. This is how I give the normies a little piece of option magic. You know, like when you have that friend that's like, are you bullish Apple?
Yeah.
And I'm like, well, it's got a $20 expect to move up or down in the next 200 days.
Yeah.
You tell me.
Or where they say, do you think Apple can go to 250 in X time frame? And they would say, oh, we can look at it.
Well, that's a 5 delta, so it's 5%. So you're a little too bullish. Maybe there's a trade there. So we'll get into it. Catch the move before it happens. Option jive. All right, so one of the most useful side uses for an option is to gauge the truest expectation for an underlying expected move. Today, we are going to use at-the-money options to find out exactly how the dollar value of the expected move is found on the platform can be estimated to the penny. So we talk about this all the time. On the right side of the order chains, or the option chains, I should say, you'll get the implied volatility, and we calculate out the expected move as a plus or minus number. So you can see this for each expiration that's available. It's not going to be linear, and there's a lot of reasons for that, which we're going to talk through here, but it gives you an idea of an expectation for the price movement, and we're going to talk about how we calculate that. Does that sound good to you?
Sounds great. Sounds great. And yeah, this is what we look at all day.
Yes.
This is when I look at a product and I see IV rank, that's nice. If it's high IV rank, that's, that might shift my strategy selection. But if I'm looking at IV rank, I also need to look at the implied volatility here on the right-hand side and the expected move that is derived from that implied volatility. So we will dive in shortly. Let's do it.
So we get tons of questions on this. So there's two formulas that really get looked at. The first one is the more traditional formula for the expected move, price times volatility over the amount of the square root of the days till expiration over 365. So like a per day kind of expectation there. The second formula that we look at is the straddle price plus the 2 out of the money strangles. This is one that TP and Tom came up with many, many moons ago, and I put Tom in that because he's the creator of everything. It was probably TP that thought this one up, but it looks at the at-the-money options on both the straddle and then the two out-of-the-money strangles, and it kind of weights the premium there to give you an idea. It's more of a it factors in a little bit more of the skew in option prices. If you have price skew, just looking at the at-the-money straddle, they're going to be a lot less skewed than the out-of-the-money strangles, and so this is like kind of a way to look at that and take that into account. So an example of this in dollars would be weighted 60% of the at-the-money straddle, 30% of the strangle, one strike away from at the money, and then 10% of the strangle, two strikes away from at the money. A lot of stocks have a lot of strikes, so this has kind of become a little bit not obsolete, but it's not that much of a difference to the more traditional formula. When there was only, in a lot of stocks with 5, 10, 20-point wide strikes or even further, this was a little bit more interesting than using, the more traditional formula for expect to move because it took into account the skew.
Yeah. And the plus minus number you see on the Tasty platforms, that is already adjusting for days to expiration relative to implied volatility. Because implied volatility is traditionally presented on an annual one standard deviation basis. So how do you get to a 28-day plus minus? You have to adjust that annual number to the 28-day. So just keeping that in mind, and like Nick said, it's not linear. What you'll see almost every time is that near-term implied volatility is higher relative to time compared to further dated expirations, which tells you, going back to the extrinsic value bit, extrinsic value in near-term cycles is made up of more implied volatility value versus time value.
Yeah.
The further out in time you go, that's much more time-based extrinsic value versus implied volatility value. So if you're really trying to play an IV crush, you got to be in that 45-day, 30 to 60-day window or sooner.
Yes.
Because the further out in time you go, you're not getting that crush. It's just time premium.
Yes, the short-term randomness of any stock is going to have higher implied volatility than further out in time. That curve of volatility is much higher in the front than it is in the back across the board for most things. Jump into slide 3 here. So we're going to look at a couple examples here. So if you look at Amazon, the options you see, we can get to the July 2025 expected move of $15 here. So when you look at those at the money options, if you take them all, and we can jump to the fourth slide here because we're looking at that set right at the money. The fourth slide, so we're using the 210 straddle, the 205, 215 strangle, and the 200, 220 strangle. We weight the credits of those 60, 30, 10 to get the 1510. It's 4 cents off the actual expected move if you were to calculate it based on the first formula of price times IV times the square root of the days over 360, which is the full year calculation. So it condenses it down to the amount of time left until expiration. But you can see it's not much of a difference here, and that's because of the liquidity that is now available in markets. Once upon a time, it wasn't the same way. So that's how you get your expected move.
Yeah, and I think if you're using this, I think the biggest takeaway is if you're on a different platform that doesn't have these nice tools that Tasty has, you can just look at the at the money straddle for any expiration or close to it, and you're going to get pretty close to the expected move of that cycle. So going back to Nick's initial statement of like, what's the probability of this stock going to XYZ? You can look at the expected moves for that cycle, and that kind of gives you a better idea of where the market is projecting the product to go on a plus minus basis with a 68% probability of landing in that range.
Yes, gives you an expectation for the future price movement. Very nice. Let's get a little takeaways here. So the expected move formula using at the money options is the most accurate estimate for the actual expected move that is easy to calculate. since option prices are the drivers of the expected move, when the IV changes, so will the expected move over every time frame. So luckily the platform updates and you don't have to keep doing this calculation for yourself all the time. It updates in real time there on the platform. So higher volatility means higher option prices, which means higher, wider expected movement in the stock.
Yeah, and I think that my number one use case for this is not necessarily traditional strategies where you're, throwing on a cookie cutter strangle or whatever. I like to use this for earnings announcements. So like going back to Nike, we were talking about that earlier, $60 stock, they have earnings next week. The plus minus expected move for the 7-day cycle is $5.
Mm-hmm.
That's a pretty big expected move for a $60 stock price. Then you look further, okay, what is August looking like? August is plus minus $7. So that gives you more context around this expected move for earnings. You have a $5 expected move for next week relative to a $7 expected move for the next 56 days. So what does that mean? It tells me that the implied volatility for this particular earnings announcement is a huge weight of the expected move for the next 60 days, pretty much. If you saw something different where like maybe the expected move was only $2 in the 7-day versus $7 in the 60-day, that would tell me that this earnings announcement isn't really projected to create a lot of volatility for this particular stock, and we should see more volatility just in time based on the random movements of that time frame. So lots of different ways to splice it, but at least this gives you the tools to estimate that expected move, put context around it, and build a strategy around it.
Wonderful. E-mini's up 23. We're going to take a quick little 90-second break, come back with the opening bell. You're listening to Tasty Live.
You can get up to $4,000 when you open and fund a new account with Tastytrade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tastytrade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tastytrade. Make your move.
What sparked my interest in trading was the probabilistic nature of it. I used to play poker a lot, still do, and if you understand the math for poker, you realize that it's a probability game, it's a number of occurrences game, and you want to put yourself in good spots the majority of the time and have good risk management. All of these things apply to options trading and trading in general, so that was my initial pull into the trading world. My trading style really revolves around implied volatility analysis. I like to look at specific markets, look at the differences in implied volatility between the weekly cycles and the monthly cycles, see if there's certain strategies that might play into that more than others. My favorite strategy of all time is a short put, simply because it allows you to acquire 100 shares of stock at a lower cost basis. And it's a position you can manage or push forward in time forever if your trade size is small enough.
If you missed the live show, here's our cherry on top weekly recap.
You know what my first concert was when I was very young. It's quite embarrassing.
Anson.
How'd you know that?
I mean, I feel like everybody.
How did you know that?
Because who else was popular then in like the late 90s?
Oh my God,
that's amazing.
That was cringe. There it is, the song. Yes.
Yes. All right. Good luck. Good trading. Let's go eat some roost.
Peace.
Got the need for speed? No problem! At Tastytrade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tastytrade, make your move.
Look who's backtesting. Tastytrade now has options backtesting for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free?
Get backtesting at Tastytrade.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tastytrade. Download today.
Mikey, we are back, my friend. E-mini S&P 500 futures squeezing higher here, up 32 and change. They just spiked to the high of the session. NASDAQ up 146. You got the Dow up 196 and the Russell up 22. The Russell, the strongest of the group, up a full percent. Oil down 42 ticks, 42 cents, 73.05. You got volatility down 18 ticks at 20.65. Bondolini's down 13 ticks. Gold and silver both off the highs. Gold down $36, silver down 89 cents. And then your favorite, the orange coin, Bitcoin, up 2,100 on the futures, spot up 1,400. You got some big movers underneath the surface in Circle and Coinbase. These are going nuts in the pre-market. This looks like a little squeeze fest.
Yeah.
Going into the open here in 1 minute.
Very interesting stuff. I was reading some tweets last night and the night before of how
there's our bell.
How the futures
He's just sold off 10.
Yeah.
Buy the dip.
Lots of stuff around, futures might be selling off hard, blah, blah, blah.
Yes.
And they were, but
yeah, they looked like
paying attention. You might just be like, oh, this is just another day in the market, up only.
Yeah. Yesterday did not look like it was going to be a fun open, by fun, it didn't look like it was going to be a positive open this morning. E-mini S&P 500 futures up 22 right now. We're at 60.57. Some of the big names, Circle up 27 and change. That was flying this morning near the high of the session. Coinbase up about 8 and change right now. If we flip over to just some of the movers, I like to look at the S&P 500. On the downside, you got like IBM down a couple. Visa and MasterCard have been kind of the anti-stable coin trade. The downside trade here in some of those stocks has been playing out a little bit and might be an interesting buy the dip moment there. On the upside, we've got a couple of the big name stocks. You got Coinbase in there, Kroger in there, SMCI, Tesla up $8 and change. AMD seems to be back in favor with the retail crowd. Anything poking out in your portfolio that's giving you problems?
Not really. Enphase was, but Enphase is trickling higher.
The solar power stocks have been duty.
Yeah, Kroger had earnings before the market, so that's why they're up a little bit. But yeah, it's still a big move. Almost 6% for Kroger. I did place that gold futures Brookwing Butterfly on the put side. So I am in the 3240, 3220, 3180, 20 by 40 put Brookwing Butterfly in the 38-day cycle. I was filled for $250 of a credit. And it's rallying off the lows right now, so it's up a little bit, but I'm looking to take 50, 60, 70 cents out of that. If we get a big rally, I'll be able to remove the risk on that and lock in a credit. That's the whole goal there. So that's all I've done so far.
Here's a question for you. I have Butterfly and Coinbase that is expiring at the end of the day today. The 280, 300, 320. Coinbase is currently trading at 307. You got that round number 300 right there.
Yeah.
A 20 by 20 Butterfly that I legged into for basically nothing. I'll give you let's see. So I got it on for like a little over $1. So it's an $800 profit on this one per contract. Do I close it now or do I let it run into the end of the day? You're supposed to be my voice of reason too.
Well, it's up big.
This was a nothing trade. Coinbase was up $50 while I was on the golf course.
And it's a nothing trade. I thought it was going to expire worth. It was trading in nothing. It's now trading in $9. Can you hold it? Do you have the intestinal fortitude to hold it?
Well, you already have a credit on?
It's the small debit. It's a nothing debit.
Okay.
Dollar debit. It's a dollar debit, but it's marked at $10. So do you take the money and run?
I think you take it.
No, I think I take it too, but
it's like even if we get a retracement back to 300, it's still going to be trading for a similar amount. Like you really have to hold this all the way to the end of the day.
Yes.
To get any more out of this. I think you take it. Just lock in the great trade.
All right, let's see. I'm gonna put this.
It's coming down a little bit.
Yeah,
right now.
I need this move because if I can get I can probably get like $10 or $12 out of this. Let's see. I'm gonna mark this at. I'm gonna put this in at 10.
10 flat.
10 flat.
Yeah, the bid-ask spread's flying around a little bit, but
yeah, I mean the stock. Oh, I just got filled.
Look at that.
There we go. So I got filled at $10 on that. All right, so that's a nice little win to start the morning. E-mini's only up 19 here. Volatility kind of staying bid up or down 13 ticks. You got the VIX itself in 1942. It's kind of been gravitating toward 20. What do you think for the morning session? Is this just a chop fest back and forth? That's what it seems like it's going to be.
Yeah, I think we get the chop fest. VIX is coming in quite a bit, but the intraday range in the E-minis is only 30 points for the rest of the day.
That seems light.
It's very light.
Even though it is what it is based on what we just did a segment on in the option jive.
Yeah. So basically, it's telling us that from the open here, we could go back to flat or up 50. I think it makes sense when you put it in that context because we were down a lot more than we were. We've rallied back, but there's a lot of red on the screen still. So I think we'll chop around here. I think that expected move holds true, which feels wrong to say.
Mm-hmm. Oil volatility coming in 89 IV rank.
Yeah.
Very nice.
Big implied volatility in oil. We've been talking about that for a couple days, but if you are selling premium on the call side, even if you're neutral, bearish, bullish, whatever the strategy is, if you have a short call component on the upside, you are taking advantage of that big call skew in there. But yeah, I'm in an iron condor in there, 10 points wide between 60 and 70, and I will just hold on to that. 27 days to go. See if we can get a little sell-off here in oil.
Good stuff. Well, we got one of my favorite segments. We unfortunately don't have Tom's money to spend, so we're going to have to make these a little bit smaller, but we have Fast Market coming up. Your trade ideas, me and Mikey are gonna try and get as many on as possible. So we're gonna take a quick little 90-second break, come back with Fast Market. E-mini S&P 500 futures up 28.
Crazy.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tastytrade. Download today.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, two female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on tastylive.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the tastylive core strategies.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Global markets never sleep. Explore them with Forex, now available on Tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tastytrade.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tastytrade. Genius loves company.
Mikey, we are back, my friend. E-minis up 35. We're back to 60.70, basically the high of the session. It's been a buy the dip this morning. Volatility coming in a little bit, 25 ticks. Oil down 59 cents, kind of the low of the session here. That candle is one for the ages. Let's pull that up real quick. Look at that thing.
Yeah.
I don't know what they call that one. Shooting star, abandoned baby.
That's a inverted hammer, something like that.
They should. Yeah, that's a funky one.
But yeah, big intraday ranges in oil, which should not surprise anyone given the implications of the stuff going on in Iran, Israel. But yeah, we should expect to see these ranges continue with applied volatility where it's at.
But it's a good thing, though, that we have this segment because I've got a lot of buying power freed up. Do you have a lot of capital ready to rock?
I'm decent.
All right.
Not as much as you after you just closed that.
Coinbase Butterfly in both the Johnny Trader and this account, as well as a gold Butterfly that I had at the money. We had all these Butterfly questions in the chat, too. Yeah. So I feel like there's a lot of people that got some good positions on this morning with the moves that we've seen in the market.
Love it. But yeah.
Fast market.
Let's get into it.
There it is. Play the music. There we go. Fast market.
Fast market. WMT. Don't throw a wobbly and have a cuppa instead. You'll be chuffed to get long on Walmart, which is basing here. IVR in the low 20s. I'm liking the bullish July-August calendar in Walmart. Let's see.
Walmart at 95 and change. It's come off the highs. It was at chopping around 100 for a little while. We're back down to 95, kind of middle of the range for the last 6 to 8 months.
Yeah.
play the upside. I don't mind that. Implied volatility 25%, very low relative to some of the other stocks that we normally trade. There is a little bit of a bid in volatility in August because you got earnings probably coming up within that expiration, but I don't hate the idea. So we're looking at a August-July calendar spread.
Yeah. So
what are you thinking?
For me, the calendar is going to be too. There's just not a lot of juice to squeeze out of that because even if you do like the 100 calendar, long August, short July, it'll cost you like $1, but you're not going to really make too much if you get that rally. I would much rather go with a diagonal spread here, especially with the implied volatility in 26%. That's super low. But yes, there is a boost in the August cycle, jumps from 22 to 26%, which tells you that the earnings are likely priced into the August cycle. But 26% is still very low for any equity. So I'm gonna do this trade. I'm just gonna go with the 95 long August call, and I'm gonna sell the 100 against it in July for about 90 cents. So
you're selling the call for 90 cents, the 100 strike call, 90 cents. Yeah.
So yeah, $3.39 is the mid price, $5 wide diagonal. You can make $150 to the upside if you get a rally from 96 to 100.
Yep. I like that setup. I was looking at like the 97.5, 100 is more of Johnny trade type, little engagement trade at $2.04 debit. I'll join you with a little something, see if we get filled there. I like that. That's a good, I haven't looked at Walmart in quite some time.
Yeah, I haven't traded it in a while.
Yeah.
Great. We're in.
USO. All right. So USO showing 95% IV rank. Of course. I mean, if you've looked at volatility or if you've looked at oil, you've seen it just jumping around, going with a 72.102 August strangle for 473 credit. This is Connor, Akron, Ohio. Let's see what that is trading for today because volatility has come in quite significantly. IV rank in crude is at 88 right now. We're looking at it like 130, 140-ish earlier this week when, everything really started popping off. So volatility has come in, certainly still high. So we're looking at August. I feel like August is still a little bit too far out for me. I know we're kind of in that weird middle period of July at 28 days, August at 56. So you can really justify going to either one of them. And you're looking at the 120 call, which is the furthest out of the money call that's available. These markets kind of stink.
Yeah.
You got
I would bring that down to the 110. You're still out there, but the markets are much more narrow.
Yeah.
You're looking at a 15-cent wide market versus a $1 wide market. So I like the idea. If you bring that down to 110, you're still way out of the money on the upside relative to your put. Pick up a little bit more premium. But yeah, I like this trade if you're comfortable with it.
I might even go to the futures. Like if you didn't have an oil because you're using USO, if you're going to be trading naked in here, it's about $2,000 to $3,000 in buying power, depending on what strikes you're using here. I might just go to the oil futures /CL and do, an iron condor 2 or 3 points wide, uses that same amount of buying power. You have the flexibility of overnight, of managing it, past just the normal market time.
Yeah.
A little bit more flexibility there. And span margin will give you a little bit less buying power.
It's fair.
So, but I'm already locked and loaded in crude. So I'm with you with a little bit of a vol crush / sideways, a little bit of a down move is kind of where I would ideally like to see crude go. So I'm going to pass on it for now. But if you didn't have a position on in crude, I would certainly be adding one.
Yeah, and I like the upside skew, taking advantage of that premium, and also oil futures are in backwardation. So a product like USO, that will kind of help it sustain and maybe drift higher, all else equal. So yeah, either one I think is fine. I'm already in oil though. I have the iron condor, so I'm out on this one, but I like the idea.
Very nice.
KO, setting up a neutral with a slight bull bias using the August 65 put, 75 call combo from Dylan and Fargo.
Classic.
Dakota.
Yeah.
On account of watching the show. KO, Coca-Cola. Okay, so August is in the earnings cycle. So that's one thing that you got to keep in mind here. Earnings are July 22nd before the market opens. The August 65, 75, trading for $1. So, I mean, I think the idea is fine, but the problem I have with this is that it's in the earnings cycle. You have risk on both sides. The premium's already very low at 21%.
Implied volatility, 21%. Yep.
Yep. So for this to really like come in 50%, you have to hold this through earnings. So I like the idea, but I think I would just wait until the earnings announcement and place it then. Because that's when you're going to get your crush. And it's going to be like right now, if you hold this, you're holding a lot of risk with very little return until the announcement happens.
Yeah,
That's how I look at this.
This is another tough one. This is in line with Walmart. Like it's hard to sell premium here with an IV of 21%. $1 is probably the minimum I would ever look to sell something for. So I think you hit that mark.
Yeah.
I think for me, I might just sell the puts, maybe move to like the 67.5 puts. Yeah. Stock is down $5 from the highs, like kind of chopping around the middle. I think with something with such low implied volatility, I'd rather just be a little bit directional and just kind of sell the put, which I could do that.
Yeah, the 67.5 put, I'll do that too.
In August?
August.
Yeah. It's a cheapie. It's going to be slow. Like this is the slow.
Unless you get a rally. Like the difference between a strangle and this trade is if you get a 2-3 point rally in Coca-Cola, you can close this for 50% profit. You're not going to be able to do that with the strangle.
Yeah.
So I like the idea of getting rid of the call, moving the put up. Now you have an ability to get out prior to earnings for profit.
E-mini is up 18. Ooh, spooky.
Ooh, NASDAQ just went to double digits. Selling off.
Only up 100.
I think we nuke to the close. I think we go down.
Not nukes. You can't say nukes now because of what's going on. Let's no nukes. No nukes. Little sell-off into the
a little sell-off into the close.
I hear you. Let's get to the next one then. Best market. Lulu. It's been beaten down to levels we haven't seen since COVID times. Thinking about these August 200 puts is from Travis in Shreveport, Louisiana. Travis.
Shreveport, Louisiana.
228. It did get absolutely myrtleized on earnings. Stock is basically at the lows.
Hasn't had a green day.
Yeah, it's $2 off the 52-week low. The 200 strike puts, they say August or July. They're looking at August. Those are trading at $4 and change. Use about $2,000 in buying power. I don't hate that. I think I'm going to go to July, though.
Yeah, I think if you're doing a trade like this, you have to be willing to take the stock because this stock has had only red days for the month of June. So I think it's fine if you're willing to take the stock. If you don't want to take the stock, I think you go with a diagonal spread. The options here are pretty cheap relative to the price of this product, $220. You can get into a long 230 August, short 240 July for $9, or even a 250 for $11. So you can do a 10 or 20 point wide diagonal here for under the width of the spread, and you'll make just as much money if you get the rally with a fraction of the risk.
I did the 240, 250 call diagonal spread, $7.06. August, July. Just to use a little bit less capital. But I like the idea of the 200 puts in August if capital isn't as big of an issue.
Lovely.
So I'm with you, Travis.
Cool. Roblox should break higher eventually, but expecting sideways action first.
What do they call this move right now? It's up. Have you looked at this stock? It should break higher eventually.
Yeah, it's
gone from 50 to 100 in the last 60 days.
That is a ski slope of a move. Perfect for the 85-130 August strangle. Going to collect premium while it consolidates from Jake in Nevada.
Ooh.
So this is another one where if you're in August, you are in the earnings cycle.
Mhm.
August 7th, projected earnings. You can see the implied volatility bump there. And you can see it in the August 1st cycle too. So the market is actually projecting that their earnings are going to be in that 42-day cycle. You can see the bump from 45 to 58 and then 60. So if you are selling strangle in here, it's another one where you're going to have to hold this for a bit to get actual like real premium out of here. It's another one where like if you're leaning directional, which it seems like you're not, but if you're comfortable with leaning a little directional, maybe you get rid of one of these options. The call is worth less than the put. So maybe you get rid of the call and you move your 85 up to the 90 and you sell that for $4. And if you get a rally here, a continued move to the upside, you can close that for a 50% profit on that rally. But I just have a hard time selling strangles in earning cycles because the premium stays bid and you still have the risk.
Yeah, I agree with that. I've been ranked at 19, even though the actual implied volatility is 60%, so it's still relatively high vol underlying. I think I'm just going to sell a call spread here.
Cool.
And lean a little bit short. I don't know if I can do. I don't think I can do the strangle into this sort of move.
It's definitely tough, but
like the 110, 120.
Yeah.
I guess I'd.
Yeah, I think you got to be directional here just because if you're in August, that earning cycle is going to prevent you from getting that premium because of the risk on both sides. So
What about like a chicken iron condor type setup?
In like July?
I was going to do it in August, but lean a little bit directionally short. You're going to have really minimal delta on this position, but like doing the 110, 120 call spread, and then I've got the 85, 75 put spread. So I'm right around the downside that they were looking at, that Jake was looking at, but leaning a tiny bit short on the upside. So you're like at the downside expect to move, and then inside on the upside. So it's a 50-50 shot-ish with a tiny little directional assumption to the downside. $4.47. $4.30. Let's see if I can.
Yeah, I mean, these same strikes.
Yeah. All right. 430.
If you do these same strikes, you can't. They're July's zero bid.
Yeah, there's not. The liquidity isn't that great.
Tough.
All right, I'm in. Little iron fly. So I'm with you on the neutral-ish delta here, Jake.
Sweet.
Next one, please. SPX 20 delta iron condor, $30 wings, close at 50% profit. Thank me later. Drew in Richmond, Virginia. All right, so are we doing this is this a 0-day trade? He didn't give me an expiration, but I would think so.
Yeah.
20 delta would put you at 59.70 on the downside. On the upside, you're looking 60.30. I'm going to do this $10 wide. I'll join you. I'm not doing the 30-point wide. If you want to do the 30-point wide, if you got a little bit more capital ready to rock, go for it. I'll do this in the 0-day around the 20 delta. You got to think expiration. You're going to have a chop fast. 6,000 on SPX probably plays here, right?
Yeah. I'm going to do just a traditional iron condor in SPX.
Further out in time or?
Further out in time. I'm going to go to August.
There you go.
I got the so I did 10 points wide, and my put is at 56.50, and the call is at 6,300. So leaning a little bit short into this little rally here, but 10 points wide, 55 days to expiration, going to be a slow burner.
Very nice. Thank you, Drew. We are in. And we're going to show all these.
Thank you, Drew.
We're going to bring up the follow page at the end of this so you can see all the trades posted there. And we'll add our comments when we get off the show here.
Sweet.
Can't do too much multitasking.
Yeah. United Airlines, August 65 put on UAL looked good. This whole crisis thing is overblown and already baked into prices. Yeah, I like airlines for sure, especially near lows. UAL is our preferred airline.
Yeah, we do. We have a slight status.
Yeah.
This is not a Sosnoff status, but we're working our way up.
Yeah.
Yeah.
I'm trying to boost that status a little bit.
Yeah. We do
but
get
yes.
the upgrade sometimes.
I did. I got the upgrade.
Yeah. I know.
came
It's
back-
nice. Makes you feel good. Makes you feel like something. You got
Yeah.
a little.
Boarding group 2.
You move your seat, you get the little extra leg room.
Yeah.
Nice.
So I'm already in on UAL. So I've had a strangle on in here since pre-tariff stuff. So I had the 90-120 strangle. I now have an 85-90 inversion. So I'm in on the bullish move. August 65 puts for $3 almost. Love it. I like the idea of just having risk on one side because earnings are July 16th ish. They're definitely priced into the July monthly expiration. So yeah, if you want to sell a put here, you will get paid on a rally of $5 to the upside. You'll be able to close this for close to 50% profit. So yeah, I like it.
I like this. 42 IV rank. You got 60% monthly implied volatility. You do have earnings coming up. The 65 strike, I got filled at 281 in August. Gives you a break even, down kind of near the lows of the tariff situation lows that got the 52-week lows 37 and change, which is back in August of last year. But in the recent lows, somewhere around 55-ish. It's one you could sell the call out against it. Only uses $600-700 in buying power. Fits me perfectly. So I am in with Dan in Fresno. Thank you very much for that one. Next trade, please.
Ooh, Visa catching knives here, but not going long yet. Iron Condor, 56 days. 310, 370 shorts, and it looks like 20 points wide wings. Gives me room to be wrong on direction from Kevin in Rochester.
Kind of like that. Maybe go to July just to avoid the earnings coming up. Earnings coming up on July 22nd.
Yeah, the 310, 370 in July. A lot of premium on the put, not much premium on the call. Very interesting.
Mm-hmm.
Big put skew.
Yeah, because this is the anti-stablecoin trade. Stablecoins are going to put these guys out of business, apparently.
Hey, you never know. But yeah, if you go to July, $2 credit, 28 days to go. If you do this in August, it is going to be a higher credit, but you're in the earnings cycle. So $5 credit, 56 days to go. It's tough. I think. I mean, I give 28 day. You can get that pretty quickly. Like 1 week, 2 weeks of chop.
Yeah, I'll give you what I did. So I did the 315, 300, the 360, 375. It's basically a one standard deviation for the short strikes there on either side. And I did it at $2.90, 28 days to go till expiration. Gives you a break even down at 310-ish and 365-ish. Got $30-40 on either side. I think that's an interesting spot. Use about $1,200 in buying power because I'm 15 points wide, collecting $3 and change. A little bit more comfortable of a position for me. Shorter duration too, so you might get paid quicker.
Cool.
If you get some chop. So I'm in.
Lovely. Lovely, lovely.
Next one here, EWZ, a Johnny trade. Okay, perfect. Bear put spread in play. Sell the 75 put and buy the 30 put for protection. So we got EWZ. So this is just an at the money long put spread. Stock is, or the ETF, I should say, this is Brazil, has bounced from 23 to 28-ish where it's trading now. I know they have some funky dividends in here. I know some of these strikes a while back. Didn't they? Was it EWZ or EWW that did that?
That's a
There's
good
some
question.
funkiness here. But either way, the 2730, we're looking at this in this Derek in Houston. Don't have an expiration.
The 30 put in July and August are just not.
Yeah. So these puts are at 84 cents at
345.
Yeah. Huge
Which
bid-ask
is-
spread there.
Yeah, you can't do anything with these, unfortunately. I can pull this up on the platform here. This one,
It's tough.
it's tough. It's tough.
It's very odd.
Yeah,
Something's
there's
going
just
on
no liquidity on the strike.
Yeah, I mean the out of the money options are penny wide, and then the second you go in the money, it's a dollar wide bid ask spread. So something's up here. Same thing with EWW.
Yeah,
but this one's just really illiquid.
I think you got to pass.
Yeah,
unfortunately.
EWZ unfortunately, unless you're selling out of the money premium, but even then it's tough when you see once it goes in the money, you have huge bid ask spread issues. I think it's got to be a pass for us, unfortunately.
Last one.
Last one, MRK stuck in the 75-85 range since April, selling slightly wider, 70-90 August strangle to cover that range, betting it stays range bound before earnings from Austin in Fort Wayne, Indiana. Pacers, baby, game 7.
There we go. I think you got to root for the Pacers. I think they're more fun.
I mean, I have clips of me saying nobody's beating OKC from this show. So if the Pacers do win, that would be wild.
You got any futures on them?
No.
Loser.
But I'm sure they were juiced because the OKC was minus 200, like before this playoffs even started. But yeah, MRK 70-90 August. This is another one where you're in the earnings cycle. So I would just get rid of one of these sides and just move it in. So if you want to be bearish, get rid of the put, move the 90 to the 85 strike. If you want to be bullish, get rid of the 90 call, move the 70 to the 75 put. Because it's just not going to move. The strangle's not going to move until earnings.
I have not looked at this stock in quite some time. Volatility is kind of mid-range here. You got an IV rank of 36. Stock is on its butt. I don't know. I know it's in healthcare / drug making. I sold the 80 strike puts, a little poor man's cover call-ish, or synthetic cover call, I should say. You used about $1,500 in buying power. I sold it at 305. You're selling about $2.15 of extrinsic value. So a little more capital efficient way to be long the stock, short the call.
Yeah, I just sold the 75 put for 230
in August.
Yeah.
All right, so I went July.
Similar.
So we got an August and a July position.
But yeah, I like the idea, but I think you got to get rid of the strangle here since it's in the earnings cycle.
And for you, Mikey, I didn't get I wanted a little clap. I tried the clap thing here. I didn't get a clap for all the trades we did today. It's okay.
We got a lot in.
Yes.
We did do a lot.
So just to go through them, so we did.
There you go.
There we go. Yes. We got the clap. Thank you. It didn't work on my bat switch. Thank you. Did you push them out yet? You got to push them out.
I pushed out, MRK, SPX, KO.
You got them out there?
I'm working on it.
Yeah. You don't have to post the comments yet. I was going to show them on the file page, but we'll go through them when we come back. But we can do them quick here. So on the file page, there we go. Here, come on. There you go. Push them through. There you go.
Ding.
Ding. You see all the trades come through as they come. Here we go. So we got filled on Walmart. So you had Walmart. You did the call diagonal spread. Lulu, we did the call diagonal spread as well. I did the call diagonal spread. In Roblox, we did that iron fly. So that out in August, closer call spread to a further out of the money put spread. SPX, we did the 0-day iron condor, $10 wide, short the 630 call and the 59.70 put, so right around a 20-ish delta. UAL, I sold the 65 strike put out in August, so you got a lot of time left on that one. In Visa, we did the iron condor in the July expiration, playing into that higher volatility. MRK, I sold the
at the money put in July as kind of a cover call, synthetic cover call. Mikey did the KO short put, 67.5 out in August. You did the SPX further out expiration, the August 15th, so Iron Condor, White Iron Condor, and then you followed us into the 75 strike put in MRK out in August. Those are all the trades. You can see them on the follow page, tastytrade.com platform. That was great. Got a bunch of trades on. A little bit of a sell-off in the market, only up 9 points here from the open. We're going to take a quick little 90-second break. We're going to come back with a market measure when time decay works against you.
Oh, no.
You don't want that.
Don't want it.
But you want to know when it's going to work against you, right?
Yep.
It's an important thing to know. So we're going to come back with that, sponsored by the CBOA. We're going to take a quick little 90-second break. You're listening to Tasty Live.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tastytrade, named best online broker for options trading. Genius loves company.
Global markets never sleep. Explore them with Forex, now available on Tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tastytrade.
Tasty Live's godfather of options, Tom Sosnoff, is grabbing his passport and taking this show international. He'll be joined by IG's Rich McDonald in London and Milan, along with special guests at each stop for an evening of live trading. It's fun, challenging, and moves as fast as the market. Doors open at 5, with trading starting at 6. Come early and have a pint or glass of vino with the boys. It's totally free, but space is limited. Register at tastylive.com/events. Options just got molto interessante.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number 1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tastytrade. Make your move.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tastytrade and Tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Look who's backtesting. Tastytrade now has options backtesting for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get backtesting at Tastytrade.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
You can get up to $4,000 when you open and fund a new account with Tastytrade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tastytrade. Make your move.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with tastylive to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's market measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
Mikey, we are back, my friend. We've got E-mini S&P 500 futures only up 12. We're popping around the 60-46 handle here. 60-50 kind of been our magnet today. NASDAQ up 54. You got the Dow up 107. The Russell up 9. Oil futures have gone green. They've gone from red to green 100 times today. They're up 15 ticks. Volatility futures were just green for a quick second there. They've started to percolate a little bit here in volatility. Bonds down 17 ticks. Gold and silver both bouncing from the lows. Gold's only down 20 now. Silver down 89 cents. Bitcoin up $1,300 on the spot. Futures up 1,700. The VIX itself 1971. We're talking about that 20 handle kind of being the spot. You know, you might see a little bit of a bid. Volatility. Do you think there's a little bit of a sell off into the close today? A little
I
bit
think so.
You gotta have some fear into the weekend.
Yeah, I think this tape action screams green to red. It's just been a slow trickle from the highs back down. I think it's only a matter of time before we're flat and then down 30.
I get that feeling too.
Yeah, nothing too crazy, but I think we'll get some fear.
Also, no Scott with us today, so we're going to be taking your phone calls, 855-238-2789 or 855-BE-TASTY. Phone lines are currently open. We're going to get to as many of those questions as possible. Of course, we can do platform stuff. I know that a lot of people call in for the Friday session just to speak with Scott for the quote-unquote platform kind of questions. But we can also do those. We could also show those features on the platform because we know how to use the platform.
Correct.
Unlike those three boomers that are normally on the show, we can show you all those cool things that are in the platform. So shoot us a phone call, 855-238-2789 or 855-BE-TASTY. But first, market measure presented by the CBOE, a good one. When time decay works against you. When does time decay work against you, Mike? Can you name a couple points?
I can.
Yes.
If you're buying options.
Just YOLOing long options.
That's
certainly one.
Going to be a slow trickle.
Yes.
Or a fast trickle if you're in a near-term cycle. And that's just extrinsic value decay. So again, we've talked about extrinsic value, how it rules the world. If you understand extrinsic value, you understand 80% of the stuff we're talking about.
You'll know exactly what this is about.
Yes. Another one is credit spreads.
Yes.
If they're in the money, there can be and is some decay against you, but a lot of people don't consider that when they think of selling a spread. It can go from positive theta to negative theta, which again is just an understanding. Bless you.
Thank you.
An understanding of extrinsic value. So, a couple of things here, but yeah, it's certainly important to understand when this can happen, and although there's no preventing it, it does explain why credit spreads have different rolling mechanics than an undefined risk trade, which I think is a hidden takeaway from this.
Good stuff.
Beautiful.
Shall we?
Dive in. The primary motivation for traders is to sell options, especially if you're watching the Tasty Network. We talk about this all the time. Higher probability trading. You don't have to be directionally right to still make money, et cetera, et cetera. Whether it's naked puts, calls, strangles, or iron condors, the whole goal is to collect premium. This allows premium sellers to generate profit as time passes, even when the underlying price remains unchanged. And this is due to the natural option premium depreciation over time or depreciation over time. And yeah, all extrinsic value goes to zero, regardless of whether the option is in the money or out of the money. But there are different implications for different types of strategies, and we will break them down right now.
Very nice.
Premium depreciation is an ongoing.
You're having trouble with the depreciation.
I keep
don't defecate on it. Okay, please.
depreciation.
Yeah.
Depreciation. Throw an extra I in there. Is an ongoing process that continues until expiration. Of course, it benefits premium sellers through positive theta. When theta is positive, traders can collect time value and extrinsic value decay in their favor, regardless of stock price movements or implied volatility levels. But again, it does not apply uniformly to risk-defined strategies, because you are selling an option to define the risk, you are also buying an option.
Yes.
And like we just stated, long options have negative theta.
And extrinsic value. It all comes down to which one of those options has more extrinsic value. If your long options have more extrinsic value, meaning they're closer at the money, you're going to have a decay against you because those are going to have more value decay that you are long.
Yep.
Next slide, please.
Naked options positions maintain positive theta through their entire lifespan, even when a position shows unrealized losses. Negative P&L gradually diminishes as the position collects incremental time value each day. So yes, with a risk-defined strategy, your positive theta zone is literally when the stock is between your short options.
Yes.
Because that confirms that your short options will have more extrinsic value than your long options. If you're just thinking about it that way, short options, when the stock is between them, they will have more extrinsic value than your long options that are further out of the money, because further out of the money options have less extrinsic value overall.
Yeah. And you really need it to be kind of right in the middle for decay to come in, because in the short term, and you could see it here in the curves that we have for the positive theta, like day zero, you need it to be right at the in the middle of those strikes, because as the stock moves, one spread is going to gain delta, or changes in volatility are also going to come into play. But you're gonna, if the stock moves up, your put spread's gonna, it make you $5, and your call spread's gonna lose you $5. Like it's a lot of, you really need it right in the middle for both of those spreads to really decay, and that's why iron condors, it takes some time to get for that extrinsic value to come out, as long as the stock kind of moves in a tight range here. Another thing I wanted to point out here in this visual, it's cool because with iron condors, and we talk about this a lot, when you put on a $10 wide iron condor like that one I did in Visa, it's going to actually lean slightly short delta if you're going to the same delta on either side, because the skew is in a lot of stocks to the downside. So when you're adjusting these to be neutral, your put spread is typically going to be further out of the money than your call spread. And you could see that here, in that the put spread and the break even on the downside is further away than on the upside, the call side, because of that difference in skew.
Yep, totally. And another call out here, when you're looking at naked option strategies specifically, it doesn't matter whether the option is in the money or out of the money, because you don't have that long premium component that's decaying against you. And that long premium component in a spread, of course, like we've been saying, can have more extrinsic value than your short option if it moves in the money, because extrinsic value is just this umbrella that follows the stock price. Doesn't matter whether you have, a short put on with a put spread or just short put, like the extrinsic value is going to decay. It's just a matter of how much extrinsic value there is relative to your short option. But if you have a strangle or a straddle or a short put or a short call, if it's out of the money, at the money, in the money, it's still going to decay in your favor, because all extrinsic value goes to zero by expiration, and short options have that theta decay working in your favor. So if you have a in the money put or call with 20 days left, if the stock price is right there at expiration, your P&L will have a less of a loss because extrinsic value is moving in your favor. Not always the case with spreads, which we'll take a look at next.
Next slide, please.
So yeah, risk-defined strategies like iron condors exhibit more complex theta behavior. And again, it's simply because when you have long options that are there to define your risk, if the stock price moves to a point where your long options have more extrinsic value than your shorts. And another thing to call out here is, if you have a short put spread that goes completely in the money, or a short call spread that's completely in the money, your short option will have a higher value overall, because it will have intrinsic value, more intrinsic value than the defining risk long option.
But again, it's all about extrinsic value. It doesn't matter what your intrinsic value is. This theta number is all about extrinsic value. It has nothing to do with intrinsic value.
This one is also cool because it shows we get that email all the time, like where the stock rallies and it's still, your iron condor is still out of money, but you're not making any money at 21 days. And that's because when you get closer to at the money on either side, the decay component has come in your favor. Like that has happened. 20 days or 21 days have passed, but it comes down to the at the money options. And when you're, that call spread that you sold, it's going to buffer you to the downside. But if your put spread is right at the money, you're still probably going to be at a scratch or maybe a small loss on that position, even if it's 21 days and even if the stock is quote unquote in the middle of your spread. It's important to understand that when you're looking at an iron condor, it's much tighter a range than just the binary risk profile that you see in terms of the 21-day mark. And that's why a lot of times with iron condors, you might have to hold these past that 21-day mark. And while, with single spreads, if you're short a put spread, short a call spread, whatever, you might have to hold it a little bit extra, even if it's in the quote unquote in the middle. E-mini's only up 4.
Yeah, NASDAQ just ticked red.
Ooh, scary. Next slide, please.
Sweet. So outside the zone, theta becomes negative in 2 distinct areas. So traders will lose more day to day when holding these losing credit spread positions that are in the money for too long, even though the credit was initially collected at order entry. So again, it's because your long option has more extrinsic value than your short, and that long option losing extrinsic value basically gets you closer to the intrinsic value loss of the position. So one nice thing about spreads that move in the money, especially ones that have 25 days, 30 days left, they're not going to be trading for pure intrinsic value. If you have a 10-point wide spread that's completely in the money, you will see that it's not trading for $10 until expiration because your long option is preventing you from realizing max loss because it has extrinsic value.
Extrinsic value increases. Yeah.
So that's one of the nice things about a spread. And we talk about this all the time. Like if we have a put spread or an iron condor on and it gets totally blown out, it's in the money, we're just going to hold on to that position because we know our risk is defined. We know that, yes, theta will be ticking against us. And day to day, if nothing changes, we're going to get closer and closer to that intrinsic value loss. But we're already realizing a pretty substantial loss and we can only lose a little bit more. We can make a lot more back if there's a directional move in the stock. So positive theta between the strikes for defined risk credit spreads. Negative theta, you will see that when the spread moves completely in the money. Now, this also explains why you can't roll an in-the-money credit spread for a credit, because if you're moving those strikes further out in time and you know that your long option has more extrinsic value than your short option, what does that mean when you're moving it out in time? It means that you're paying a debit because you're paying for more extrinsic value in your long and you're collecting in your short, even though your short option has more real total value, intrinsic plus extrinsic. Your long option has more extrinsic than intrinsic compared to your short.
Perfectly said.
To understand how theta evolves through an iron condor's life cycle, we analyze 45-day SPY iron condors. So we're just going to look at this in practice, short the 20 delta strikes, and then we're going to define the risk 1 point wide and 5 points wide beyond those short strikes. No position adjustments, and just recording the daily theta change. There's some interesting takeaways here.
Yeah, these 2 slides are pretty cool. I think it explains why sometimes you have to hold these, and we're going to look at them here. So
yep.
Let's jump into it. Slide 7, please.
Okay, so the analysis shows that iron condors can have both positive and negative theta values depending on where the market price is relative to the iron condor. So again, if the market price is between the strikes, you're going to have positive theta. If the strikes move in the money, it's going to have a negative theta reading. Positive theta represents positions performing well, like we just stated, but negative theta indicates that you will have an in-the-money spread. Simple as that. One thing that's interesting about this is the 20 delta $1 wide iron condors. So look at how narrow this band is from 45 days till it starts to get crazy near expiration.
Yeah.
There's almost no change in your theta value, which also speaks to the fact that you might hear us say like really narrow spreads are Greekless.
Yes.
And that's because the closer your short option is to your long option, the closer those options Greeks are going to be as well. So you could have a 60 delta option, but if you're looking at buying an option 1 point away, it might be a 59 delta option or 58. Like the deltas are offset, the more narrow your spread is. Same with theta.
Yep. And those things become even more elevated, like specifically with put side. If you're doing $1 wides in SPY or something like that, if you're tested on those, you're probably seeing volatility expand too. So those options move, the raw value of those options get bigger and bigger. So those spreads, they really don't move all that much.
Yeah, they're really very binary in the sense you just had to hold them until all theta decay.
And they got to be out of the money.
Yeah.
Yeah. No management, basically.
So the next slide, you will see a similar image, but wider ranges. So this is the same 20 delta short options with 5 point wide wings. So biggest takeaway for me here is that the theta range is significantly wider compared to the other one. And this is well before expiration.
Yeah.
So you can see the positive and negative theta readings are wider. And it still is crazy when you get closer to expiration because you're dealing with options that have, very, very dynamic theta and very dynamic extrinsic value. It's flying around. Yeah. But this is the biggest takeaway for me is that the $5 wide iron condors can have a bigger theta range. And again, it's because your $5 wide spread is 5 points away compared to a 1 point away long option. And that means your deltas are going to be different. Your thetas are going to be different between your short and long option, which enables this to have more of a Greek exposure compared to a 1 point wide spread.
Yeah. And $5 wide really isn't even that wide either. Yeah. I mean, like this, change in these two charts, you can extrapolate that out to even wider spreads. And it tells the story of why we look for those 10 or 20 or 15 point wide spreads, as opposed to doing 15 $1 wide spreads that just won't move until expiration.
Yep.
Next slide, please.
So, testing across various iron condors reveals a clear relationship. Wider wings result in fewer days with negative theta. So why is that? If you're looking at a 1 point wide spread, you basically, if your spread's in the money, it's completely in the money.
And it's going to be negative theta.
Yeah.
If it's fully in the money.
Yep. $5 wide spread, harder to go completely in the money. You now need a bigger move in the stock price for a 5 point wide spread to go completely in the money. And same thing with the 10 point wide spread. So the wider your wings are, number one, the more Greek exposure you're going to have because your short options now have a much bigger exposure to those to the Greek figures there relative to your longs because your longs are much further out of the money. You also have more range for you to maintain positive theta because for a 20 point wide spread to go completely in the money takes a lot more out of that stock price compared to a 1 point wide spread. So the wider your wings are, and this really emphasizes why if you're doing 20 $1 wide spreads, you are doing yourself a disservice as opposed to just doing one 20 point wide spread.
Yes.
Because not only are you going to have way better break evens, your 20 contracts for $1 wide or 4 contracts for $5 wide, your max loss is so much closer to the current stock price than one 20 point wide iron condor, where the stock literally has to go significantly further away, and you're still going to be in a profit zone or a scratch where you're realizing max loss on those other strategies. So almost every time, instead of doing multiples of a $1 or $5 wide, we're going to do one contract of a wider spread.
And everybody focuses, or a lot of times focuses on the marginal difference in the credit. Like if you did 10 $1 wide spreads for 50 cents, you might only get $4 for the $10 wide. Yeah. And they'll say, well, I'm getting more premium for the same amount of risk. And that's because your risk, where your $500 or $600 or $700 of risk is significantly closer and a higher probability of realizing that max risk relative to the 10 point wide, where yes, you give up 50 cents or $1 in premium, but your risk, the probability of you realizing that same amount of risk is maybe 10 or 15%, whereas the $1 wide might be 30% or 40% or 50% of realizing that big, max loss. And so we're always going wider versus tighter and more contracts.
100%.
Last slide for takeaways.
Takeaways here. Iron condors don't always benefit from time decay because they are defined risk trades. So that applies to any defined risk trade that you route for a credit. It can eventually tick against you in theta if it moves in the money. Time works in our favor, but only when the stock stays in the middle of the range or out of the money. So even if you just sell a put spread or just sell a call spread, if the spread is out of the money, it's going to be ticking in your favor. If the stock moves too far and that spread moves in the money, we lose money from both the direction working against us and time working against us. So this is another scenario where, if I have a credit spread that's completely in the money, not only am I seeing negative theta, but I now need a delta move to move it back out of the money. So if we're rolling credit spreads to defend them, we have to roll them before they move completely in the money. And that's really it. Like, it's not about 21 days. It's not about 14 days rolling, whatever. It's about where is the stock price relative to the strike price. And I need to make sure I'm rolling before it goes in the money if I'm trying to defend it for a credit. And last but not least, certainly not least, using wider spreads is going to give you better results, especially if you're doing multiples of narrow spreads compared to just one wider spread. And someone in the YouTube chat called out, not to mention commissions and fees too. Yeah.
It's another factor. Yes.
Yeah, totally. So yeah, using wider spreads, especially if you're doing multiples of a 1 or 5 point wide spread, knocking that down to one contract and making it as wide in terms of max risk will not only reduce your max loss probabilities, but it gives you a better Greek exposure, it gives you better break evens, and it's just an overall higher probability trade.
Very nice. A good segment from the boys, from the research boys. Yes. Good visuals on the theta decay. Important to understand that stuff. Beautiful. Well, 855-238-2789 or 855-BE-TASTY is the phone number you can call to talk with Mike and Nick. No talking with Tom and Tony. They're out gallivanting in the UK right now, and Tom's on his way to Milan, I think, after this. We're going to take a quick little 90-second break and come back. Give us a call, 855-238-2789 or 855-BE-TASTY. We're also going to be taking chats from the YouTube chat. So if you got questions for us or questions on the technology, questions on whatever, you want to know what's for lunch today, chat us in. We'll be taking those. We're going to take a quick little 90-second break. You're listening to Tasty Live.
You can get up to $4,000 when you open and fund a new account with Tastytrade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tastytrade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tastytrade. Make your move.
If you missed the live show, here's our cherry on top weekly recap.
I made a list of the 7 places in America that I've been to. This is my list. I don't care what anybody else says. There are 7 places that you would drive out of your way, like get off the highway if you're going somewhere to go get a certain food.
Okay. We are ready for your presentation, my lord.
In New York City, you have to go to Katz's. You get to Chicago, you have to go to Riccobenni's. You have to get off the highway in New Haven, go to Worcester Square, go to Pepe's. The original Pepe's. Some people go,
Pepe's Pizza, yes.
You drive straight up 95 until you get to Maine, and you go to Ken's in Scarborough. I was there this weekend. I put it easily among the greatest meals I've ever had. Then my 2 final stops are actually both in Texas. Pecan Lodge in Dallas, and then you go to Austin, and I'm a Terry Black's beef rib person. It's the best I've ever tried. We're going to be in Pilsen. I'm going to buy you a Rico Benny's after the show. I don't want you to buy me a Rico
Well,
Benny's.
that's nice of you.
It's very nice of him, but I don't need him to buy me a Rico Benny's. I was going there when you were pooping yellow. Oh my God. I introduced you to it. The first time you saw it, you were buying it from the truck outside the CBOE.
God.
Sorry, SIBO.
You gotta stop.
No, you know that's true. Sadlov, you know that's true.
God.
There's not a chance.
My guys, that's the reason why you did what you did in the restaurants that you made, was because I showed it to you. You know that's true.
Do you know that I brought the chicken parmesan sandwich to Chicago?
What side of the aisle is Tom on? Is Tom stay in school kids, or is he more towards Peter Thiel? I'll pay you $100,000 to go start your own business, scrape your own knees.
I would chop my own off before I would say that I'm on the same side of Peter Thiel of anything in the whole world. I hate that more than anybody.
Absolutely on cloud nine. I was walking around the city yesterday, right? 3 different locations.
What
3
city?
different people all commented about how luscious and beautiful my hair was.
You're walking around St. Petersburg and a random person would ask you about your luscious hair.
They really just wanted to admire it. I was at church, I was at the gym, and I was at Publix. And so at all 3 different locations, had 3 individuals, 2 older gentlemen and 1 young woman said, man, you've got some beautiful hair. Now I understand the older men, they had, their great hair days were behind them. So I understand that. But I'll tell you what, man, I was feeling pretty good. That 22-year-old woman was like, you've got some beautiful hair. And I was like, well, thank you very much.
Did she want to touch it?
No, not necessarily. I turned into the aisle, and she's standing right there, and she saw me. She did like a triple take.
Well, she probably thought you were a Manny since you were doing the grocery shopping, and she was probably looking for a Manny herself.
She
that could do her
probably
grocery
needed
shopping.
somebody to reach the top shelf to get something
And
to...
she picked Jim. There was nobody else in the store.
Exactly.
I'm 5'10", so it makes sense.
Get the full scoop by checking out the archives at tastylive.com.
Damn.
Wow.
Long live the trader nerd.
Man, you're a turd.
Trade junkie.
Hey, it's fun, see? Tom and Tony in the morning.
Mikey, we are back, my friend. E-mini S&P 500 futures just under 60.40 right now, up 5 or so ticks. You got the NASDAQ up 8, the Dow up 115, and the Russell up 8. A little bit of a sell-off from the highs this morning. Oil futures chopping around. They're currently down 9 ticks. You got volatility futures back to basically unchanged. They're down 6 to 8 ticks. Bonds down 18 ticks. You got gold and silver both off the highs. Gold down $25, silver down a full $1, Bitcoin giving it up as well. The VIX itself at 1980. Maybe we get a little bit of a bid in the VIX into the close today. You got a whole bunch of weekend risk, or at least I would think so. What say you? Got anything to throw out there?
Yeah, E-minis and NASDAQ just ticked red together for the
Ooh.
first time today. At least
They were down. The E-minis were down like 5 or 6.
Yeah.
I think was the lowest of since the morning session.
Yeah. So yeah, it feels like this is going to continue. I think we get sub 6,000 today.
Okay, so down 20 or 30 handles.
Yeah.
On the E-minis. Okay, I like that.
We were talking about how the E-minis felt a little light in terms of a 30-point move.
And you can't just forget about a 60-point move that we had yesterday. You can't just erase that in an overnight session.
But I mean, it's a mixed bag because Bitcoin's still holding up. I mean, it's still net up, selling off a little bit, but yeah, I don't know. Maybe we chop around here, but I would not be surprised to see this go sub 6,000.
855-238-2789 or 855-B-TASTY. Phone lines are open. We got a couple lines open. You want to get to the calls?
Let's do it.
Let's do it. First call we got is Dylan in Louisiana. Dylan in Louisiana. I think he gave us a trade idea for fast market. I forget exactly which one it was, but I remember a Dylan in Louisiana or somebody in Louisiana. Was it you, sir?
Good morning. Good morning.
Good morning.
Not lunchtime yet, but we're working up to it. I was just listening to you guys talk up top of the options. That was all very, very good information. Thank you all for chopping it up today.
Thank you.
I've actually taken note of a lot of the stuff y'all are working on with, the strangle spreads and condors, and trying to learn some of that as kind of a beginner, small account. Taking a hit myself with some of the puts on some of these smaller companies with like uranium and stuff, trying to get more like you guys and be a little safer, but I'm just doing some kind of basically like a synthetic, strangle where you just buy the calls way out.
Yep. Yeah, I
go with that.
Yeah, I think that totally works. I mean, you're in the lower price stocks. I know you said some of the uranium stocks like CCJ or Oklo. I mean, there's tons of volatility there, so you could certainly sell puts and then just buying a wing to just reduce the buying power requirement, especially if you're in an IRA or cash type account. It's a no-brainer to buy a 5-cent option, 10-cent option. It just depends on how much capital you want to use.
Right. And they, like you said, they are volatile, definitely. And that's why I'm picking up some of the way that they kind of switch. They'll go from, say, like a short put where it's a tight spread, and then all of a sudden it'll go reverse, and the puts will go way down, and the calls will go way up. I'm kind of noticing that a lot. Do you guys have any kind of answers as how like that kind of technically works out, or is that just volatility in markets here?
That's just volatility, man. Yeah. I wish there was something technical I could point to that'll tell you if the stocks can go up or down. That's always that would be the holy grail. But when you look at something like OKLO, which I'm sure is one that you've been messing around in, it's got over 100% implied volatility, and that's on a year time frame. And what that tells you across any of the expirations, and you could see it here, going out as far as January of 2027, it's 100% implied volatility. It tells you that the market and the option prices expect this stock to either double or go to zero in the next year. So when you have that sort of volatility priced in, you should expect to see big up and down moves. And with those sort of stocks, when you have over 100% implied volatility, it means that there's more upside. And so you see, because it can only go to zero. You know what I'm saying? So
right. So they're just kind of using leverage on the upside.
Well, when something
buying all the way in on the puts, because I mean, it's kind of hard for me to understand why they it's down, say 30%, and all the calls are down as well. I mean, I'm sorry, the puts are down, and the calls are up. You're seeing like 300% gain on the calls, and to me as a new trader, that kind of it shocks me to see that. You would think it would be the other way around, but I guess they're selling the upside, like you said.
Yeah, when you see situations where the stock is down and the puts are down, it tells you that it's really an implied volatility crush move. Like GameStop, AMC, we were seeing that a lot after the moves. Like we would see the huge rip to the upside, implied volatility would be going crazy. And then you'd see a small sell-off in those stocks, but implied volatility crush would be so much greater that you would see those options actually lose value, even though it was moving in that direction. So normally, yes, you would expect to see, if the market's going up, puts are losing value, calls are gaining value, but sometimes changes in implied volatility can outweigh what is happening with the stock price move itself.
And there's going to be so much more volatility on the call side here in these stocks because of the nature. These things.
They kind of lose their intrinsic value as
extrinsic value
in that kind of situation.
Yeah, they lose so much more on the call side because you have that volatility skew. The stock can only go to zero, but when the stock is moving $20 or $30 to the upside, it can move another $20 or $30 to the upside. You know what I'm saying? That's why the puts don't move in this situation. It's so hard to short these stocks, even. Like if you were buying those puts and I told you the stock has gone from 75 to 60, you would think that you made a lot of money. You don't make any money because of how high the volatility is. And that's why those calls lose so much value and the puts, they don't move all that much, which is a benefit if you're short the puts. You don't lose a lot against the calls that you're going to make a lot on if you're doing those wide iron condors.
Right.
It's a good trade out of you, Dylan.
That puts it in the context. Yeah. But I won't take up too much of you guys' time. But I was kind of interested in some of the Tastytrade API functions as far as working with integrated AI or something like that does some kind of analysis to take advantage, because I know there's a lot of people wanting to get a taste of that tastylive, analytics.
So I will be completely honest. I am not the technical. I'm a show dog, so to speak. So they do have a specific team on the Tastytrade side that has all the documentation for the API, and they can get that over to you and help with any questions. I know it's pretty much open. I mean, anything that you see on the platform, you can pull. So if you shoot them an email just to support at Tastytrade, .com, they'll direct you to the API, to the team that handles the API support, and they'll be able to get you.
Yeah, because I'm kind of a dummy when it comes to that, too. I didn't want to just go touching it with my greasy hands.
See that?
I wanted to talk to somebody that knows what they're doing.
Yeah. It's unfortunately, I don't know what I'm doing, but I could see if we could get our team to kind of give me some information on that.
But yeah, you can see everything too. If you go to the Tastytrade Help Center and just type in API into Help Center, you'll see the documentation there that's listed.
Very good.
All right, great. Thanks.
Thank you, Dylan.
Thank you.
855-238-2789 or 855-B-TASTY. We got a couple phone lines open. Larry in Seattle, how are you? Good morning.
It's actually Seattle City, but thanks for taking the call.
Oh,
it's nice to see. It's nice to see that you guys have been promoted to the morning show, but I'm still waiting for some Batista bashing.
Oh, no, we can't do it. We can't. You never go against the family, Larry. I can't. I'm not going against my dad here. Come on. But I will say their seats are getting hot.
Yeah.
You got two young guns ready to take over.
That's why I called. Maybe I'll get some real answers.
We try. We won't beat around the bush here. Okay. We tell you how it is.
So I'm looking for some mechanics on selling covered calls against my long-term stock positions.
Okay.
So I back-tested Meta from January 1st. I sold the 30 Delta call at the monthly cycle that was at least 45 days or more out, and then I rolled it at 21 DTEs to the next monthly cycle that was at least 45 days out, and bought a 30 Delta call at that cycle. I did that date, and it didn't work. Overall, I would be better off just holding on to the stock and not working I basically would have been down $3,000 or made $3,000 less using that covered call strategy. What do you suggest that I test, and how do I make it work?
So,
Does that make sense?
Yeah, I think the first thing is the backtest is great in the sense that it gives you a general idea of a pretty basic strategy. But if you're trying to make the most you can out of a stock position, pairing it with a covered call, what you really want to learn about is how to offensively roll the covered call.
Yeah.
Because if your whole thing is like, I'll hold this stock forever, but I want to manipulate the strike so that I can make more if the stock reaches my short strike. I just put a link in the YouTube chat, but if you go to tastylive.com and you search for offensively rolling covered calls, you'll see the video with Nick and I. But ultimately, like I'm looking at Meta right now, it's at 687.
At the start of the year, it was at 600.
Right. Yeah.
So it went 600 to 740, 740 to 500.
Yeah.
And when you're looking at the back test, it doesn't put any sort of emotion or anything in there. I know it's easy to say you're going to be mechanical, but were you going to sell them when the stock was up 30 days in a row at 760? Were you going to sell them in the hole when the stock went to 500, or would you even be able to hold at 500? It's hard to say. I mean, it's a short period of time. I also agree with Mike. There's some variability with cover calls specifically. If you want to be long Meta, are you really selling calls at, when the stock's at 500? You're probably buying more, or you're trying to get some long delta. back tests are agnostic to variability.
Yeah.
Which I think is hard in trading.
But yeah, I mean, I think I was just going to say, you know,
you're saying pure mechanics just doesn't work with a covered call strategy.
No, it does, but it doesn't give you the whole story. So if you're trying to going back to like your original idea, I want to make the most I can out of meta stock while also having a covered call. You want to learn how to move your call out in time and up strikes. So like right now I'm looking at meta for the 28-day cycle. Let's say you sold a 700 strike call against your shares in meta. The current 700 strike call is trading for $1,600. So let's say right now you were like, okay, I want to maintain my position in meta. I want to move this strike out in time from July to August, and I want to move it up as high as I can while still collecting a small credit. If you look at the 700 strike call right now trading for $1,600, all you have to do is say, okay, I'm buying this back for $1,600. Where can I roll to collect a little bit more than $1,600? Right now, I'm looking at the August cycle. You can move your 700 strike call to the 750 strike call for $1,700. You can basically pick up 50 cents, moving your call up and out in time 50 points. And anywhere in between there, like the backtesting strategy would have just rolled that call to the 700 strike. But you can give up some of that premium. Right now, rolling from July to August at the 700 strike, you're picking up $1,900. You could move that strike up to the 725 and give up some of that premium. You're still picking up $800 in extrinsic value, but you're giving your shares another 25 points of upside to make money on those shares. So if I were you...
Am I rolling the call when the call starts to get breached and the deltas, as opposed to the typical strategy of on a strangle where you're rolling up the untested side? Here, once the side gets tested, I'm rolling it up and out.
Correct.
Yeah.
Yep. If you're
ideally with some decay, like it's ideally not happening right after you sell the call, but if you're 20 or 30 days in and you're close to at the money, rolling it up and out allows you to participate in the stock movement to the upside, which is ultimately what you want with the covered call. Like you know, you're not looking to roll the same call each time. You're trying to hold the stock and lean directionally long.
Yep. And doing it before the call moves in the money makes it a lot easier to move it up and out as far as you can. Because once that call takes on intrinsic value, if you're trying to buy back intrinsic value and replace it with an out of the money option further out in time, you're going to be paying a debit to do that most likely. So if you're just cognizant of the fact that if I buy this back when it gets close to my strike and I move it out a month and up to a couple strikes higher and still collect a credit, that is the most offensive move you can do while still reducing your cost basis to the downside.
What would you use for the mechanics if, like in April when the stock dropped down? Would you use a 50% or 80% of the max gain to close out the position, wait a few days, wait for it to recover, to buy back the call or sell back the call?
Yes, 100%. So to Nick's point, like
the back test doesn't factor that in though. The back, like when you're looking at these periods of time, it's the emotion is completely taken out of it. You might have said at 500 when the world was imploding, you might not have wanted to be long meta. It's hard to kind of take that out of the equation. I think.
Well, I was trying to back test as mechanically as possible, just as your researchers would have done. Yeah. And I learned that pure mechanics does not work, at least for that stock.
And for the last 6 months.
Yeah, it's been crazy for sure.
Pretty volatile times, but still, who says we're not going to get that again? I mean, we may not.
Well, you're not looking at like a long period of time. A 6-month back test with 3 or 4 trades.
But
is not a
But to put it simply, I think if your whole idea is I'm holding the stock for as long as I can and I want to maximize my upside profit potential, the thing I would be looking at is learning about offensively rolling covered calls and just manipulating that strike higher while rolling out in time and still picking up a small credit and doing so. And that will help you shift your extrinsic value higher and just give yourself more offensive room for that stock to grow to the upside. And to your point, like, let's say you own the stock and it dropped dramatically. Yeah, if you're at like 80% or 90% of the value in that short call, you might just buy it back and then wait a couple months and see if it comes back up to where your basis was or where you were at, break even. And then you redeploy that call and you start over.
Larry, we got one more call on the line in just a couple minutes.
Thank you very much.
Send us an email.
Thank you very much.
Thank you, Larry. Send us an email. Kevin in South Carolina, you're going to be our last caller. Good morning. How are you, sir? Did we lose Kevin?
Kevin.
Hello.
Oh, there you are. Good morning, Kevin.
Hi, it's actually from California, but okay.
They're messing me up. They give me from California, not Southern California.
Yeah.
But yeah, really excited to finally get the chance to talk to you guys on the show. Got two quick questions. One of them is PDT related.
Okay.
If I were to leg into a iron condor and then close it in one transaction, is that considered 1 or 2 day trades?
So it's going to be the number. So if you did it all in one day, that it would be relative to how many entries you have. So if you sell the strangle and then buy the strangle and then close it all together, which you probably wouldn't do. Let's say you did the short put spread first, and then you sell the call spread in a second transaction, and then you close them all together. That would be 2 day trades. It stinks. It's each transaction.
Yeah.
Is going to count as a day trade.
So the only way for it to be 1 would just be if you sold the iron condor and then you took it off.
Yes.
Okay.
It stinks. And this is all regulatory, not tasty related. This is just, that's how it is. And from Scott last week when he was on, kind of mentioned that there's some things happening behind the scenes. We're knocking on doors. We're sending the Batistas to the doors and knock on some doors, a baseball bat type thing.
All right. Thank you for that. And then the second one is I started with a custom spread in Apple and then rolled it a couple of times. Now I ended up with a September credit put spread, 200 and 190. But instead of collecting a credit, it's actually 491 debit.
Are you sure? Which one are you short?
Short the 200, long the 190.
So
if you've rolled into a net debit on a credit position, it's tough. I mean, you can only lose on this position if you have a net debit.
Did you have like this? Did you have it an iron condor and you?
No, I was just testing some custom setups and just somehow ended up with this headache.
Yeah, I think you might have just legged into just bad timing, but yeah.
Or you were long the spread and then you rolled up the put. It's hard to know. It doesn't matter how we got there. We're here now. You're at the money with a put spread. The stock is trading right in the middle of your spread, 200, 190. It's trading at $4 and change. And so going forward, that's the amount of value that you can make back. If the stock rallies, if we go above 200, that's how much value you can get back out of this position. And so it's a 50-50 shot moving forward. If you're in August, or if I didn't know if it was August or July, really doesn't matter. You're right in the middle of the spread.
This is in September, so there's so much time.
Oh,
I can continue rolling it out.
Listen,
what will you guys do?
Start fresh. Start anew. Close the position. Go to July, and if you want to be, or August, if you want to be long Apple, sell an at the money put spread and start fresh. Sometimes you can't. This was probably a trade that was fully in the money and you rolled it out. It's been a battle. You're in September, 90 days to go. It's just too much time.
Because right now the 200, 190 in July
is trading for a similar value. I mean, it's trading for basically $4. So at least in July, you can get that value back more quickly. Then you could sell August. Then you could sell September. Being in September right now, it's a tough one.
Yeah.
All right, got it. Thank you so much.
You're welcome.
Thank you, Kevin. And thank you to Dylan and Larry for also calling in and everybody in the chat that engaged with us today. It was great. It was a lot of fun. And we're going to be back next week with Liz and Jenny as well, hosting the morning sessions throughout. So we got some fun stuff. Come hang out with us next week while the boys are out of town, while the boys are doing their thing in London and Milan. We're going to take a quick little 90-second break, come back with Liz and Jenny. You're listening to Tasty Live.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tastytrade. Download today.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
Global markets never sleep. Explore them with Forex. Now available on Tastytrade. Get in on over 80 Forex pairs. 24 hours a day, 5 days a week. With the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tastytrade.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tastytrade. Make your move.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tastytrade. So spread the word and earn rewards. Terms and conditions apply.
Coming up on Bad Money with Jim Blamer. Blamer's hot stock tip of the day.
Trade ideas? Trade ideas? You're coming to me for trade ideas? I'll give you a trade idea. Trade me for tastytrade.com. Those guys are great. I love those guys.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, two female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tastytrade. Download today.
everybody, and welcome to the Friday edition of the Liz and Jenny Show. My name is Liz Deerking. That beautiful brunette to the left of me is Miss Jenny Andrews, and we made it to Friday.
I made it to Friday. It feels like it's kind of weird having been off yesterday. I'm all thrown off. It feels like we're getting another. It was like yesterday was a weekend, and we're getting another one. So
I did have to tell my husband, remind me I have to work today, because it was kind of crazy. But you know, I couldn't stop myself. I am an addict. I know I'm an addict now because I was watching the futures all day long.
Liz was calling me yesterday about work, and I said, take a day off, Liz. Take a day off.
Futures were firing off yesterday. So yeah, it was pretty, I'm a total addict. I can't stop, won't stop. Can't stop, won't stop. But yeah. So we, Jenny, it's Friday. We've got Kai's study today. We've got a lot of stuff to go over. Let's talk about run of show today, and let's talk about next week. I'll let you go first.
Perfect. Today we are taking live tweets. Send us the tweet, include the hashtag LIZJNY. We also have Kai's study. We are going to take a look at our FX positions. And I know, like, pre-show, you rolled any puts that were in the money that we just needed to roll out in time. So we didn't bore everyone with that.
Correct. Our GTC and Google hit. I'm going to go to Google right now.
Yeah, let's go to the platform.
There it is. So, okay, so if we can go to the platform, it's still up because we still have closed orders right there. And can you see that yet? Not yet.
Not yet.
Let's
hop into the platform and we can take a look. This was very lucky because this was expiring today, and Google is down $4, which saved us on this iron condor.
Yeah, and you can see our trade price was 154. Our P&L, we had a GTC in for 50%. And who would have thunk on the very last day?
I was going to say, look at the days open. It took us 43 days to get 50% out of that.
43 days. So
and who said they don't like? I don't know why I say I don't like these $5 wide iron durational iron condors. 43 days to get our 50% out of that.
Yeah, 43 days, but it happened. 43 days, but we did it. Okay, so that was Google. The other ones that I rolled, I'm just going to pop out the side real quick. And I know you pushed everything through. So Google, I closed a bull because we had already had the put in there, so we failed to close the other spread. And then these were just extending duration. So small credits, nothing to be wowed about live on air. So that's why we did it.
I know earlier this week, I don't know if it was last Friday, there was that IPO AIRO, and TP and I looked at it, but there weren't options. And I know it's gone down since then. It's down maybe $10, $11, $12 since then. Oh, still no. I was going to say down.
Like what was bonkers was, what was it? Was it CRC?
Circle had him right away.
Within like a day.
Yes. Circle had him so quickly, up $24 today.
I know, it's crazy. Another 12%.
It is crazy.
Crazy.
Okay, so I thought, well, if they have options, maybe we can sell puts. It's down like quite a bit in the last week, but they don't. So
I know, that's how I actually kind of looked at that this morning. Jenny, we're starting to share a brain, and it's slightly scary because I looked at that same thing today. They are down a bit, and we're waiting for the options. Maybe Monday.
I thought today, but.
Okay, and speaking of Monday, that was a good segue, don't you think?
Monday. Speaking of Monday, well, I'll see you bright and early.
Yes, Jenny and I are taking over the morning show next week. Hey, the boys are in London. The boys meaning the knuckleheads, because I think that Mike and Nick did a fantastic job this morning. I want to give them 2 gold stars. They did a great job this morning. But Tom and Tony are doing their live show today in London.
I was gonna say they're doing a show in London. They're doing a show in Milan. They're on their European tour. I don't know exactly what city they're in on Monday, but
no. But I believe their live show in London is today. Maybe John can tell me if I'm wrong.
I don't know if you have the events. Do you have the Tasty Live pulled up? You can go to the events.
Why, yes, I do, Jenny Andrews.
Let's take a look.
Thank you for asking. Hold on. Okay, so there's the DC Whitebook Tour. Yeah, today, Friday, June 20th. Yeah.
That was that would have, if that was I don't know what time. Oh, 6 p.m. Doors open at 5 p.m. and the trading starts at 6 p.m. So that's soon. So that's in like 48 minutes.
In 48 minutes, doors open.
No,
they're lining up right now.
I think it's 5 now. I think 10, 11, 12, 1, 2, 3, 4, 5. It's 5 now. So the doors are open.
Doors are open. They're all drinking beer. How many beers do you think Tom has had already?
He's gonna hold one. He's gonna walk around holding one.
You know, Tom is not a drinker. He does hold one to make people feel comfortable, but he does not drink.
I know. You know what? And it makes sense because my husband doesn't drink and he doesn't hold one and pretend he's drinking. He just doesn't drink. And people are always like, "Can I get you a drink? Are you sure you don't want to drink?" And at some houses, people feel uncomfortable if everyone in their house isn't holding a drink. So,
oh, you know what's so funny? Do you know what I will always have in my house because of your husband? Ginger ale. Like, no one in my house drinks ginger ale, but I always have it on hand.
Thank you, Liz.
Just in case he shows up. But yeah, so it's exciting. I hope they have a wonderful, wonderful, wonderful show. It's exciting that they're doing it. But Jenny and I are taking over the morning show on Monday and Wednesday.
Yeah. Go back to the events. What day's Milan?
Milan is Monday.
Monday. So we'll be taking over the live show, and they'll be in Milan.
So
doors open at same thing.
Doors open. Yes. The doors open during our show.
Well, Monday will be in the morning show. So.
Oh, true.
Yeah. Tasty comes to Italy, and Dylan. They've got Dylan there.
So I've never met him in person, but I love Rich McDonald's energy. I love it. I think he's got a lot of it. So yeah, I've never met him in person, and he's usually with Angeline. But yeah, Tom and Rich and Dylan are Monday. So it's exciting. And then here's Boston. Here's this handsome devil. Crash Course Live. Next up
July
is
13th. That's right around the corner.
It is. It's right around the corner. Okay, I'm going to go back into the platform. And then the other thing we want to say, public service announcement, which we're very excited for. So we want to give our production crew a huge shout out, as well as the SIBO's production crew a huge shout out, because on Tuesday, Nick and Mike are doing the morning show, but Jenny and I are going to be live opening bell on the floor.
It's going to be fun. So tune in to Don't Miss Nick and Mike on Tuesday because we're going to be cutting in live for the opening bell. And there's actually someone ringing the bell that day. So it'll be a sight to see, Liz, a sight to see. It's going to be lots of fun.
It will be a sight to see. And we will be in a different location than our normal spot. I think we're going to be up higher. We'll see. It's all going to work itself out, but it's a very exciting time.
So there's the bell right there. See where I'm pointing?
Yes, I can see that.
And we're going to have a much better view of the bell and the people ringing it.
Yes, we will. Yes, we will. So it's an exciting time at the Tasty Studio. It's a very exciting time. Okay, how about we go to Kai Study, and then we'll go to Twitter.
Sure. Let's see what we missed this week. It's just a recap. If anyone missed any of the market measures or options jives, here's a recap, weekly summary of the market measures. Okay.
Yeah, here's a weekly summary of Kai's market measures, which is great. Okay.
And they're not just Kai. They're not just made by Kai. They're made by the whole team.
No, I'm sorry. You're right. I misspoke. This is what Kai puts together for us with all the market measures. So this is
Yeah, they're all working on them.
We only asked for the beginning and the end. We didn't want the sausage. We don't want to know how the sausage is made. We wanted the key takeaways from the week, and Kai has brought it with a vengeance each week.
Yes. So here is the study and the takeaways, and if you want to know the details of them, you can go back in the archives, and these studies are all attached to the episodes of Market Measures.
Right, and they're just by the title. So whatever the title is, go in and search by that, and you'll find it. But here, the first one is investigating pairs signals.
Okay. Pairs trade strategy involves taking a short position in one underlying and a long position in another, highly correlated underlying, in order to mitigate risk while earning additional premiums. And you often hear Tom and Tony talk about pairs trades. They might be in like the NASDAQ Russell or what other pairs have they had on lately?
I mean, you always see the gold silver ratio. You see NASDAQ versus either S&Ps or NASDAQ versus the little ones. So those are your normal ones. But for instance, over the last 12 years, daily price changes in SPY and triple Qs have had a correlation of 0.93.
Well, that's highly correlated.
That is
highly correlated. This strategy becomes particularly attractive if the current ratio between the two underlyings deviates significantly from its historical average, and there's an expectation of reversion.
Right. So when the correlation becomes less correlated is when a lot of times they'll put it on. However, the question arises, how far back should one look to determine the average ratio, and what degree of deviation from its average should trigger action?
Okay.
I'm on the edge of my seat.
So if normally it's 0.93, if it hits like 0.75, do we jump in with the pairs trade, or do we need to wait till it hits 0.5?
Or is 0.9 a strong enough deviation where you could jump in instead of 0.93? Do you know what I mean? The world may never know. Okay, here's the takeaway.
I hope we get the answers. I hope we get. We might have missed the answers lying in the middle of this study.
We might have, but no, we got the takeaways. Okay, hit it.
All right, using the historical average ratio between SPY and Qs to guide pairs trading has generally been effective over the past 12 years.
And the choice to cut off trading signal, the choice of cutoff for a trading signal depends on individual investment goals. Waiting for larger divergence typically yields better price per trade performance, but results in fewer trades. Okay,
Yeah,
so
of
when
course. Waiting for a bigger divergence further away from that 0.93. You're going to make more money, but it's not going to happen as often. Comparing the current ratio to a longer historical average means looking for more significant deviations. For instance, using a 30-day average and waiting for a plus or minus 2% divergence in the SPY-Qs ratio tripled per trade profits compared to a plus or minus 1% divergence, but reduced the number of trades. So 1% or 2%. So that's not much.
It isn't. That's what I'm saying. Because you were saying 0.75. I was like, I think that's going to be, I think we got to wait till it's 0.3. So did you read the book Divergent?
I think I'd listened to it with Lily.
That's what I was going to say. It's you probably would have done it with Lily, but every time they say the word divergence, it makes me think of that. Okay, so conversely, the ratio is up or down 10% from its 5-year average about 2/3 of the time. Okay.
Conversely, the ratio is plus or minus 10% from its 5-year average. So 10%, if it's 93, then 10%, you're getting, 84 or, you're down to 84.
Yeah.
2/3 of what? The ratio is 10% from its 5-year average 2/3 of the time. Seems like a lot.
It seems like a lot. And then ultimately determining the optimal timing and ratios for pairs trades is more art than science, but greater deviations from historical norms tend to be more appealing.
So there's not like if this then do if it hits this number then put on the pair. It's not, timing is more art than science.
Timing is that well said, Jenny Andrews. Well said.
That's what I said, more art than science. So it's not like you have a playbook. When it hits this number, put on this pair.
Correct. Everybody wants that, but I don't think there is that.
It's tough. I mean, if pairs trading were simple, everyone would be doing it all the time.
Correct.
Right?
Correct.
Or not all the time. Not all the time. 2/3 of the time.
2/3 of the time. But what's crazy though, Jenny, and you and I both know, like we're options traders and we've tried every which way but loose to try to do pairs trades using complex option strategies or call puts or call spreads and put spreads. You almost need product to product or future to future. It's got to be like the real pair. In my mind, it just doesn't work that easily.
Right, and I like the idea of pairs trades, but you don't see us do a lot because you need a lot of buying power, right? You need a lot of capital. We don't have it. When we try to do a pair, we're like baby scale, very small, because we don't have that a big enough account to be putting on these bigger pairs. Even sometimes using the micros uses a decent amount of buying power.
And typically in pairs, you don't get the margin relief, even though the risk isn't.
No, unless you're in like portfolio margin.
Yeah, unless that, because that does kind of take it to advantage. All right, let's go to the next one. I think these are long. I don't know how many slides we have though, to be honest.
Okay, when time decay works against you. Yeah, we know if you have a spread and it goes towards your long of the spread, then your theta flips.
It's working against you. It's weird that you can see the theta flip, right? You think you're putting it on right, and then when it does flip. Premium depreciation is an ongoing process that continues until expiration. This benefits premium sellers through positive theta. When theta is positive, traders can collect time value regardless of stock price movements or implied volatility levels.
However, this doesn't apply uniformly to risk-defined strategies. Right, yeah, when you have defined risk strategies, you have a short and a long. And if the underlying moves, theta's greatest at the money. So if your underlying moves towards your longs, now that's the at the money or close to the at the money, and now you've got negative theta.
Yeah, and so that's what I like. So we know naked options. It will always, you can even roll them, and you should always be getting something for it. But it's not the case when you have a defined risk strategy.
But that's kind of the cost of defined risk. If you're putting on defined risk, you need defined risk, or you have a smaller account, and that's almost part of the cost of defined risk.
Agreed. So, in this one, risk-defined strategies like iron condors exhibit more complex theta behavior. The chart shows that only the central profit zone generates positive theta, benefiting premium sellers daily.
Yeah. Now, the wider you make your spread, the less this affects you, and it's more of like a synthetic naked strangle if you make your wings very wide. But with narrower iron condors and narrower spreads, yeah, you're battling this. But I wouldn't overthink it. I wouldn't worry about it. I wouldn't think like, oh my gosh, I can't put this on because it might turn to positive theta or negative theta.
No, but I do love the research team because some people want all the analysis. They want to know why. They want to know what is the negative of defined risk. And this is it. This is if you're a theta, if you're your theta can flip and it can turn on you.
And you know me, I'm a big fan of naked options. So I say if your account is too small to trade naked options in certain products, find smaller products.
And there are smaller products. The good news is they're out there now. Where before maybe even 20 years ago, you couldn't say that. Now you can.
Right. Yeah, there are plenty of products to trade out there.
Okay. And then it looks like I didn't switch, but I did. Outside this zone, theta becomes negative in two distinct areas. So traders will lose more when holding those losing positions for too long, even though credit was initially collected at order entry.
Now, in the case of our Google Iron Condor, God bless you, Liz.
Thank you.
In the case of our Google trade that we left and it finally came in on the last day, that trade, which was positive theta originally, turned to negative theta, and it was negative theta for most of its life cycle, I think. But we just held on to it because it was a defined risk and $5 wide where we collected, 20 close to a third of the width, and we thought, well, we're just going to leave it. At 21 day, should we have closed it and taken the loss? That's a question that's been a question for 14 years with these iron condors.
I don't believe defined risk. If you place a defined risk, I thoroughly do not believe that 21-day mark matters to you. Unless you just are extending it, unless it's something you're just extending, it's part of your core position.
I mean, I don't know. I don't know. There's no cut and dry answer.
There isn't. And I think the problem is the $5 wide. If you're looking at something that's real wide, absolutely 21 days. Let's see what the takeaways are.
Iron condors don't always benefit from time decay. Time works in our favor only when the stock stays in the middle range.
If the stock moves too far, we lose money from both the direction and time working against us.
Use wider spreads for better results. There we go. Wider iron condors have higher win rates and fewer days where time decay hurts our position.
Yep.
Yeah.
True story, Kai. True story. Okay. Let's see. Oh, I didn't see this one, but I heard them talking about it.
And you know what we forgot to do? We forgot to do our morning SPX trade.
Oh, shoot.
It's 10:25.
It's already 10:25.
I don't know what happened with the other day. Let's take a quick pause. Well, yeah, take a quick pause. See if we ever got out of our trade from Wednesday, which Wednesday was the FOMC meeting. I'm curious what time we got out.
I don't know.
Did we get out before or after the FOMC meeting?
We did not.
We never got out.
We never got out.
10:07, never out.
But we only risked 110.
60.15. Where did SPX close on Wednesday?
Let's go back and look. This is today.
Yeah.
Is there yesterday's in there?
Yeah.
No, just close to 18.
Yeah, let go to the day before. That's Wednesday.
This is 18, yeah.
Close 59.80.
59.80.87.
And what was our center strike?
Let's pop this back out.
60.15.
60.15, yeah.
Oh, that was the day we were like, what happened at the end of the day?
Yes. Okay, so we have not look, spoos are bouncing.
I know.
Unbelievable. Okay, let's go back to Kai's study.
Yeah, let's finish that. And then after we go through these market measures, the recap of the market measures, I want to take a look at our FX trades that we have on.
And then we also will get to Twitter. So let's go through this. Okay, and this is selling in the money puts versus covered calls. In the past, we discussed the similarities between a short put and a covered call and showed how to use the delta of the short put and the covered call to create a positional equivalency between the strategies.
Let's now do a backtest of a covered call and an in the money short put to see how well the theoretical equivalence holds over time. I would think they'd be almost the same, identical.
Hold, please. They're using the same exact strikes, correct?
Yeah,
if you're not using the same exact strikes, it is not It's not an apples to apples comparison.
But if they are, then it should be. It should be. So let's move on to the next page and see. I know if you have, let's see, takeaways. Theoretically and practically, selling an in-the-money put is equivalent to selling covered calls on the stack you own.
If you're using the exact same strike, correct. Go ahead.
Okay.
In this segment, we're using equivalent to refer to the risk and return of the strategy or how it performs over time.
There may be some differences between these strategies when it comes to management and capital usage.
Well, capital usage, yes. Capital usage, 100%, because owning the stock is way more expensive than selling the equivalent in the money call or in the money put.
Yeah, unless it's something that's cash secured, and unless it's like a product that's cash secured. Otherwise, you're using a lot more buying power to own the stock. But if you own, some people who bought stock don't want to sell it for tax purposes or whatever reason they have for not, or wanting to get the dividend, they don't want to sell it, and then they'll just keep holding the stock and selling calls against it. Whereas other people are thinking more of capital, and they want to just sell the in the money put. It uses less buying power.
Yes, absolutely. So let's see. Is that
now,
it?
Okay, I have some stock. I have some stock. I did this the other day. You'll laugh at me, but I have some stock where I didn't want to sell the stock. I didn't want to sell the stock.
One example would be OKLO. I know you don't want to sell that.
No, Disney. No, my Disney stock. So I have Disney stock and calls against it. It's blown through my calls by a landslide. I'm pretty sure my calls are. So I had to roll my calls. If you look at the chart, because Disney's gone from like 980 to 117. So it's blown through my calls. And the dividend's coming. So this is something to be aware of. I had short calls, the dividend's coming. If I keep my short calls, I'll get assigned on those and it'll take my stock away. And I just didn't want to sell my stock for tax purposes. And so I'd roll my calls out to like September or October in order to roll them far enough to not be affected by the dividend.
And that makes sense. I mean, if you need to get it the heck out of the way, get it the heck out of the way.
Yeah. What could I do?
Yeah, you can't. There's nothing you can do. And that's when you sold the calls against it, you kind of made your bet. You want your stock to go up, but it did go all the way up, and you can roll it out pretty far. Yeah.
And so then in that scenario where my calls are so low, it's like, you hope for the stock to go down, come back. So you could be rolling them at a decent credit.
Yeah, for sure. For sure. Okay. So we finished Kai's study. What else did we want to do?
Oh, I know. Let's look at TastyFX. Let's check out our
Twitter.
All right. So TastyFX, I had Glenn on earlier this week. He was on Tuesday and he was wonderful. And, oh my gosh, what a change. The Euro USD, it was up $36 or $40 right before our show when I was looking at it. And we were up, our equity was, over 1,500, or everything was pretty unchanged, where US dollar shekel was down $36. The Euro USD was up, and we were going to close it, but now it's not up anymore.
Yeah, it's not up anymore. I mean, I did know that. I did hear that Glenn say that when you see your profits, got to take them pretty quickly.
Okay.
So that is something that you and I might not manage on the show. So I'm just going to be, I don't know if it's true or not true, but whenever we see this, if you see something, we should maybe, when you get Glenn on Thursday.
Please don't get pushed out on the follow page.
And can you please do me a favor and ask him how to put in the orders to close it and what price point you're making? So we'll have the closing order in for a profit.
Sure.
Okay, thank you.
Because if you just two finger scroll to get to move to see more of the right after stop loss, see how it's like symbol, profit loss, opening, latest, not 3 fingers, just 2 fingers. Yeah. So there you see on the right there's the 1-click close, and that would be to close. So if you're ever in this or I'm in this and we see something up, $40, $50, you just hit that 1-click close and it closes it.
And that's why they have that 1-click close, because they think 2 clicks would be too much. That's how fast these pairs move. I'm being serious. I'm being dead serious. That is what I heard Tom talk about that. Like these move so fast, you need to be able to close them when you need to close them. So that's why this isn't gonna, we're not gonna close one right now, but when you click it, it's then the closing order. It's not like review and send.
Yeah, it's one click close. That's not a lie. That's not a lie. One click close. All right, so I'm gonna talk to him about putting orders in, and we'll check this again at the end of the show because see, it's moving again. It's moved quite a bit just in the last 40 minutes.
Yeah, for sure. So we'll keep an eye on that. Okay, I'm gonna go back to the trade page. Jenny, I'm gonna pop into Twitter because I know we have some tweets coming in. Okay, and I'm gonna go only because I'm just gonna go top down, just because, to make sure we got to everybody. Jack JT.
Happy. Happy open OPEC. Oh, happy OPEX.
OPEX. Okay, I'm feeling thrifty. Right. Are you locked in dollars in the down move? Any IV interesting to you ladies? Also, good morning, Frank. Not tagging him directly. Good morning. I love Frank. They're great.
Right. Yeah, good morning, Frank. Let's see. Already locked in money on the down move. Good for you. Good that you're locked in because we're bouncing back up. Any IV interesting to your ladies? Well, do you know who always posts high IV is
Ajit.
Oh, Ajit. Yeah. He does.
Ajit. Yeah, so he always posts IV. And we'll take a look at that. We will. Jack, good to see you. I miss him on this page.
Yeah.
It was good to see him.
And we can go to the watch list too and look.
For high IVs? Yeah, let's get through some tweets and then we'll go back into the platform because it's 10:33. And then Florida 7, I wanted to get to this. Based on the follow page, are we to assume that you've let all of your SPX iron condors since June 3rd run to expiration? So no. Florida 7, we have not pushed. So these, when we put those iron condors in, they usually fill around 2, and we've not been pushing through the closing orders, just the opening orders.
Yeah, we only push through the opening orders because later in the day, we're only in this show account from 10 to 11. So we're only in the show account from 10 to 11.
By design. Yes. Because, I mean, we can look at them, but our whole point was what we do here, we do here. We're not in here trading behind the scenes. Everything that we do, we do. But from this perspective, with this style of trading, they do have a tendency to close later in the day. It's not as Zoom.
You can go to SPX and go to our activity for 30 days and see. You can see there's opens and there's closes, but every close, let's take a look at the times, the time frame of those closes. Those don't get pushed out on the follow page.
Okay, and I've been doing them as well, and I'm going to say they close between. Let's go the last 30 days.
30 days or something.
So the closing orders are usually around, here's 142, here's 1238, here's, you know what I mean? They close later, 1240. 1230, 246 one took to hit.
Whoa.
So they are 114. They are later. Here's 1251. I don't think they close before noon.
And it's tricky too with the order chains because we've looked at the order chains to try to see our P&L and someone said order chains does not take into account if it's left the expiration, exercise assigned.
Yes,
so it's not accurate. I can run through and add and subtract everything. We can do that on our own time. But we haven't.
But I did want to address that because that is a very, very, actually Florida 7, amazing catch, by the way. But we have talked about it before on here. Those closing orders are not getting pushed through. Unless we did it we could probably do it the next day. But that's a moot point. Do you know what I mean? Because it's already gone. They're gone if you push it through the next day.
Do you remember what study that was?
The iron condors and 10%?
Yeah. Mm-hmm.
Yeah, it was one of Jacob's. And I mean, but literally, we keep talking about the iron condors and 10%. Or iron flies at 10%. It was the iron fly, not iron condor, iron fly at 10%.
Right.
I think it was 2 weeks ago Wednesday, not this week's SIBO, but I think the Wednesday before.
Oh, and that one is the one that came from the consecutive losers, right?
It originally came from the consecutive losers. Then we reached out to Jacob and he brought us that study again.
Yeah.
So they all of our slides are tagged to there as well. And then look at this, Permabull. Liz and Jenny saved the market. It rallied right when they came on. I'm kidding.
Look, he's busy. Look at all of his orders.
I know. I love it. I love the Permabull. Ooh, look at that. Is that a drone or a plane? That's a pretty cool picture. Okay, and then Paul Smith, options trader. Love it.
Welcome. We've got lots of new tweeters, so welcome. Quick SPX 0DT trade all in 5 minutes. 5 minutes.
This is Jajun of epic proportion. Jajun.
So he sold a $5 right call spread. Or bought it. Well, let me see. Sold a $5 right call spread for 85 cents. Bought it back for 40 cents. Awesome.
Well played. Well played.
Yeah.
I like it. Okay, and then Jack comes in. Now I don't know if we need to go. We should go bottom up.
This is not Jack. This is not Jack Tucker. This is a different Jack.
This is not Jack Tucker. Okay, but I'm going to go bottom down with Jack because they come in order that they came in. So $63 call spread, 60.55 SPX done for the day. Excellent.
Nice. Statistics says 68% likelihood SPX closes between 60.50 and 59.45. We used to hate choppy and non-directional market until you learn to sell a credit spread. Credit spread is something Tasty taught me that just makes sense. Great, Jack.
Love it.
And thank you for tweeting.
I love it. No, he usually comes in and gives us the likelihood of SPX closing between certain levels. So we love it. I like the extra information. Now, Eric, fantastic Friday. 2 tasty 5 lots today, 80 points wide between the shorts at a 16 and 17 delta.
Nice.
Look at all that. So
we're bouncing a little on the day, but we're still not near his calls. No.
No. So where are we right now on SPX? I'm going to take a look.
59.80.
I mean,
where did we open? Where was the open today?
So the open today was 59.99. Like it's 6,000.
So we were up on the open.
Oh yeah, we were up on the open. We went up a lot higher, and then we sold off a little bit. I think we were up as high as like 25. When you look at that, the high was like 60.
How low did we get?
And then the low is 59.59.
59, quite a bit.
Yeah. So then we were down quite a bit, but now, we got green on the screen. Green on the screen. Okay, so I'm going to go back to Twitter. There we go. Eric, thank you very much. Good luck. Hopefully this all works out, and maybe it'll close for him quickly. Now here's our Jack Tucker.
There he is. Too early, 5 minutes after open. Double tranches, 20 contracts, 35 points wide. Shorts were at 90 delta, so similar. I'm going to try to watch these rather than setting any GTCs. Collected 25,000 in premium today.
I know. Can you see what I'm holding at my chest, or do I need to bring it closer?
Certified options badass Jack Tucker. 25,000 in premium. Crazy.
I love it. I love it, Jack Tucker.
I missed it today. I am, I'm not at home. I'm up at the lake. We were walking on the beach. I missed the whole open.
Jack Tucker, I gotta tell you, I'm a very proud mom today because my son put it in.
Oh, good.
Yeah, and he's watching it. So he's up. His GTC could get hit pretty quickly. So we'll see.
Nice.
My son's got it, but I'm using ES with him because I told him how to use ES. Yeah, because of pattern day trading rule. So he's very, very small. He's not Jack Tucker S. There's no $25,000 contract.
But that's good. I'm glad he did it.
Yeah, he did it this morning, so I was proud of him. And then Frank the Great comes in, which I love with our economic calendar, but I don't think there's much today.
No.
Yeah.
Well, I don't think so.
No. Okay, so that being said, Jenny, let's go. Do you want to go high because we promised we would do this? Let's go to the watch list and look for high IV for our friend Jack.
Sure.
Watch list. High IV. Wait, how do I find that?
52-week
he's going to go tasty IVR, and then we'll sort by IVR, right? There we go.
Sure. Now you look at the side, and I look for something that's familiar to us. Like Nike, we have a position on. FedEx is high, but
look, all these have earnings, so you can see right now a lot of these have earnings that are coming in there.
First Solar's on there. We know we looked at that the other day.
And Phase Energy.
Yeah, those are on there.
Yeah.
But what I will look at, Campbell Soup is on there, and we sold. Well, let's go to Campbell Soup because we sold.
Where do you see Campbell Soup?
CPB.
Where?
So CPB.
I know. Where is it on this list?
There, right, like right below.
Oh, there we go. Okay.
Yeah.
So it's got a 50 IVR, no earnings on the horizon.
Okay, so we sold puts in there and then got out really quickly for 50%, and now it dropped. If you go to the chart, so we sold puts in there, it kind of popped up, and now it dropped. So do you see? it dropped. I don't know when we sold puts, a few weeks ago, and it had this big drop over the course of this last week. So you just see the move of this last week.
Oh God, look at this.
Yeah.
30, 40, 30. This is like a downward spiral, but I don't mind jumping in front of a train with a 50 IVR. Let's see how much capital it holds up.
No, it's not bad. It's not bad. You're getting, $65 and using 550. It's not bad.
No, let me only because it's fresh on my brain. Not that I want to do this, just a discussion point, Jenny. So I'm not trying to talk you into or out of anything. But what if we did this? Just because you're looking at it, it's still the same amount of extrinsic value. By moving it from the 31 to the 32, we're creating a synthetic covered call, meaning that we are doing the exact same thing as buying Campbell's soup at 31.83 and selling that 32 call against it.
Right. This is the money put synthetic covered call. And so to talk about the differences, what that research study was referring to. So here we're going to get $1.10, $1.20, or $1.15, somewhere in the middle there. So we're going to get $115 and use 637. Now let's look at the cover. That's if it goes up to 32. If it goes up to 32. So let's look at the covered call. The covered call,
and it brings your break even. It brings your break even to extrinsic value beneath where it's trading right now. So I just want to keep that.
Hold on. I'm going to do the math. Here. So let's say we're going to assume it's at 32 at expiration, just to do the math here, and we're going to get $117. We're going to get $117 and using 637. So 18% return on capital.
There you go. Okay.
18% return on capital. Now we'll compare the covered call, clear this out, and then close it. Let me see if there is a dividend coming up. So if you buy stock, if you buy 100 shares of stock and sell that 32 call, okay, you're going to get $75 on the call. Yep. And then you're going to get the difference between 31.84 and 32, because we're assuming it's at 32. We're assuming our put ends up. So then you'd get another $16. You can get $75 plus $16 plus, pop out the side, what's the dividend? Plus you're going to get $39 for the dividend. So you're going to get $130. And how much buying power are we using?
1519.
Divided by 1519, so 8% return on capital versus 18% return on capital. So that's why people will choose an in the money put instead of a covered call if capital is an issue. If buying power is an issue and they're looking for similar returns, similar credits, but they don't want all that buying power at use, you're getting a higher return on capital.
You are, and it is fascinating. It's fascinating to me that the margin gods, whoever they are, whoever the margin gods are, have not figured that out yet, right? That they've not figured out that they are synthetically the same.
That you get the better margin on selling the put.
Because to me, it doesn't make any sense, right? So the margin gods haven't figured out that the synthetic positions need to have the same margining equivalent, right? Because you can't lose any more. There's no more loss with selling this than there is with buying the stock. There's no more at risk, and there is no more loss with the two of these two trades.
The only reason I know of people wanting to hold on to their stock and not sell their calls is because they don't want to sell their stock because they don't want to pay. They want they don't want to pay when you sell your stock, then you pay taxes on it, and they don't want to pay the taxes on their long stock that they've made money on, or they're holding it so they have long-term gains versus short-term gains. That's the only reason I know of that people will sell calls instead of selling the puts. And hold on to the stock.
No, I get it, but I was just talking about the margin gods between it. It shouldn't be like that. The margining should be.
I don't want them to raise it. I don't want the margin gods to go raise it.
It should be less for the stock.
For the covered call.
Yes, that's.
I thought you wanted them to raise the margin on the put.
No, I need them to bring it down to the lowest common multiple. But yes.
Yeah.
So yeah, I don't mind. I'm going to clear this out. We are definitely not buying the stock and selling the call because capital is an issue in our account. So I'm going to sell the covered call. Yeah, let's do it.
If it's now over 32 at expiration, and we kept the full $117, 18% return on capital.
So, and I will tell you, I wouldn't have gone to the synthetic covered call if there was less extrinsic value in this call than there was in the out of the money put. I just want to be clear on my decision process there. When you can see you're getting the same extrinsic value, and we just had that on the brain, because this is technically would have been my go-to move.
Now you were really dissing Campbell's soup.
I'm dissing Campbell's soup?
And when you looked at the chart.
The world is dissing Campbell's soup. This isn't me. I mean, but Campbell's soup, it's Campbell's soup.
Tom's wall of Campbell's soup cans. It's going to be
my guilty pleasure in life, and I mean, I probably shouldn't say this out loud because it's pretty disgusting, is one of my favorite.
Oh my God, I don't even say it. I know what you're going to say. You're going to say the clam chowder.
It is Campbell's clam chowder soup is literally so delicious for me that it's like a treat. I can only have one can in the cupboard because I love eating it.
I make the tomato soup all the time.
I don't like tomato soup. You know what's so funny? I know your husband likes clam chowder soup too.
I would never buy it. I hate clam chowder soup. So like I wouldn't buy any brand, let alone Campbell's.
Campbell's is chef's kiss. Okay, so but anywhere, I'm surprised it's not up so high from the clam chowder.
From Liz buying all of her cans of clam chowder soup.
But I will tell you, I will get clam chowder if they have it at any restaurant because I love it so much.
Oh, he does. If it's at a restaurant, if we go to a restaurant, it's the soup of the day. For sure, he's ordering.
Oh, me too. There's a place, and actually, the next time they make it, I'm gonna get some for Keith. I'm gonna drive it to your house.
I don't bring it to my house. I don't want it.
Oh, I'm bringing it. I'm just gonna leave it in a container for it. So Tap House Grill, it's a place in Lemont. It's not like a fancy place or anything like that. They make all their soups homemade, and I probably call once a month, being like, "Did you make the clam chowder?" So one day he gave me the recipe, but it was as if you were gonna make it for. I mean, there would be so much math involved in this because it's making it for an army. It was like,
oh my gosh.
Yeah. So nonetheless, we are in. I'm shipping. Shipping this.
Yeah. I know you put in. What did we get filled at? $1.15. Okay.
Okay, so I'm gonna go.
I was gonna say. I thought you were shipping at $1.17. I was gonna say I don't think we'll get filled at $1.17. And our last put was the 33 put. So, and that was out of the money. Now we're in the money with the 32. Campbell Soup has been on a steady decline.
I know it has been. I mean, like I said, with that delicious soup, I can't believe that they've gone down so much. All right, let's go back.
Oh, and I guess when I was doing my math, I didn't factor in how the stock is decremented. When the dividend's paid, the stock's decremented by the amount of the dividend. So our assumption is really that it's going to be, at the put strike at expiration. And buffering an extra 39 cents.
But Jenny, I will tell you, there is no gaming of the system. No. The calls are less than everything's done. It's less than value. Oh, JD got out.
Of his ES strangle not strangle, iron condor. Excellent.
Yes, I'm so proud of him. He's gonna be so.
Which one did he sell today?
Okay, I will tell you right now. So he went to. No, hold on. Where is it? Closed. Okay, so we'll go to ES because I have his account down here too.
Yeah, I'm just curious what he's doing. He's brand new trader, 18 years old. What's he doing?
We went to the 0 DTE. And he sold the 60/50 straddle. And then keep in mind, this is a different multiplier than SPX. So if I wanted a $10 wide in SPX, I had to do 20. He had to do 20 here. And so he was right there.
So like a $10 wide, just like the SPX $10 wide. And so then how much did he...
I had him put a GTC in for 10%. So he sold it for, I can actually tell you the exact prices right here. He sold it for $15. So he sold it for $15.
Yeah, $7.50.
Yeah. So he sold it for $15 and then bought it back for $14 something. Yeah.
Nice. So he made $75 minus the fees.
Yep.
Perfect. Excellent.
Yeah.
Shout out congrats to JD.
I know. He's gonna
for his account for the day. That's great.
It is great for the day, right? So I was just teaching that. Just got a text from him because he's at the golf course.
Oh, so cute.
That's so funny. Now I'm going to see, because I did in my account the SPX. Let me see if that is any different. So my SPX, which I put on, I think he was a little bit before me, to be honest with you. I see his trades come through because I watch his account, and then I went in and did mine, but my SPX is not closed yet.
Well.
So I'm just kind of looking at that.
Now I know people are wondering, like, are these? Oh yeah, we've got this. So this is interesting. We have this upside broken wing butterfly that last week SPX was through that, in the middle of it, or maybe even through it. So 60, 55, 60, 65, 60, 80. We said we'll leave it and hope that it hits right at 60, 65. We're nowhere near there. So we just keep, that'll all expire. We just keep the amount we took in.
So we're happy. I mean, I'm happy with that because we took in 85 cents. So that's $85. So I'm happy with it down. It's just nerve-wracking when it's kind of moving towards our short strike.
Now, our center strike was 60, 65, and we've had this on for 18 days. If we go out 18 days, what's the expected move for the 18 days?
Whoa.
so much higher. Yeah. Do you want to put on this on, like one of these on again?
I would like to, Jenny. I would. So
1052. And then this could be one of the last things we do. We'll just put this in, double check Twitter, because we are ending just a few minutes early today.
So I don't know how, I just want to see how wide our strikes were. So we had $10 by 15, right? So it was pretty conservative. So here's $10 by 15. Whoa.
We're getting $235. $10. Did we really have $10 by 15? I don't think we risked $1,200 on it, did we?
Here we did $10 by 15.
65, 75, 80. Yeah. Okay, go back there again. Is it in right? Go back to the SPX. 40, 50, 65. It should be 65.
Oh, that's why.
Yeah,
okay, so there is no 65. So I'm going to shift it down. Hold on, let's go strikes down. So we're going to go 25. Hold on, let's clear this. So
there's no 35. Go 20, 30. And there's no 45. We're really lacking in strikes.
Here, wait, you could do this. I could do $5 wide. Oh, no, you can't.
No, it's weird. Maybe choose a different cycle, not 18 days. We'll just go July monthly.
Was I in the... Okay, let's try this one. Here, no, this goes up by $25.
No, I think you've got to go to the regular monthly. Go to the July 18th, not the AM though, the PM.
Yeah, I'm in the July 17th because it's the PM. So here, these are it's $25.
Wait a second.
It's $25 wide, Jenny. This is the regular. This is the AM. I'm going to. Oh, we'll go to the 28th.
No, yeah, the 18th is the regular monthly.
So $5, $5, $5.
Yeah, now we have every strike. So do what we had, $10 by 15.
So here, no, it was $5 by 10, right? Let me just look. Or was it 10?
It's 10 by 15.
10 by 15. Okay, so then I'm going to move this to 15 and this down.
And you've got like 2 by 2 by 2. Oh yeah, you've got
80 cents. That's what we took in. 90 cents.
Yeah. And our risk is very minimal, $420.
It's shipped. We're going to try to take in almost the same thing that we did before. We got to let it work. I'm not going to go for, because it's working. You know what I mean? It was $1 and I'm trying to sell it for 80 cents as it moved.
Are you surprised that we're up to almost 6,200? Like our break even on this is 6,200?
No, I mean, that's in the next 28 days.
I know.
6,200.
But I don't know. Like, I don't know what is going to happen. I really don't know. I'm not up on the news, but
in the chart, it doesn't look that crazy, right? It would just be all-time highs, but not, it's not off the chart, right? So.
Right.
All right.
Okay, 10:55. One last peek at Twitter to make sure we got to everybody, and then we're going to call it up for the week.
For the week. Okay, Florida 7, thank you for the response in the 0 DTE trades. Pushing the closing transactions out even on the next day would be interesting to see how many. We'll do. You know what we'll do? We'll do that at the beginning of the show. What we did. Okay.
Yeah.
So
we could.
And I appreciate that. We got that. We'll work through that.
And then Frank posted this. This came from YouTube, from Scramble Everything. One for Liz and Jenny. LOL. Maybe I just sell NBIS July and AUG 40 puts. Sell NBIS July and AUG 40 puts. Let's take a look at NBIS.
I will, for sure. And then let's do this real quick. The guys have picked a good time to be in UK. We're sweltering over here. Oh, I didn't know it was that warm.
Oh, really? Yeah. It's going to be hot in Chicago this weekend, right?
Yeah, it's going to be hot.
It's going to be in the 90s tomorrow.
And then Eric we're swinging, rolling, and layering. Oh my, I love it. Okay, good. So thank you, Eric.
All right, so what was that? NBIS, July and AUG 40 puts.
NBIS, never heard of it.
Me neither. NBIS. Stay slow so I can see what it is. Go click on it. Type it in again so we can see what it is. NBIS. Nebius
Group, of course. Okay, so they were doing the 40 puts, right? 130, it's not bad.
Well, no, it's pretty good. I mean, the almost 100% implied volatility. What's the chart look like? Yeah.
The 40 puts would be right here.
I'd stay small with something like this.
It is an amazing return on capital. Take a look at that because you're getting 127 for 400. Yeah. I'm glad you gave us this idea. Sure.
How many stars does Nebius get?
Let's take a look. Oh, I can't move it. Hold on, I'll have to go this way.
I mean,
3 stars.
3 stars. Okay, let's go to the activity and push everything out so everything went to the follow page because I don't think we've done it yet today.
I did. I've been doing it as I've been calling.
Oh, you have? Okay.
Yeah. The only thing that we have, these were all pushed. We got filled in our SPX. Campbell's already pushed, and then here's our new SPX.
Okay. Got it.
So there's the new SPX.
All right, everyone. Have a wonderful weekend. If you're in London, I hope you're enjoying the show. And if you're going to Milan, have a great time. We will see you bright and early Monday morning. We won't be on from 10 to 11. We will be on at 7 a.m.
7 a.m. Everybody remember to trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Jenny show. We'll see you on Monday.
You can get up to $4,000 when you open and fund a new account with Tastytrade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tastytrade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tastytrade. Make your move.
All right, so you've got a couple spread trades under your belt, and you're ready to start scaling up your trading. The common thought is to just increase the contracts, but this is only multiplying the risk and the reward of the position, essentially pushing the chips in and doubling up. Instead of adding contracts to the position, consider widening out those spreads.
One of the things that I do differently than a lot of people is that for the purpose of the show, I have multiple accounts, right? So I'm trading in a lot of different sized accounts. So I've got to balance finding ideas and finding opportunities for smaller sized accounts as well as finding opportunities for those larger sized accounts. I think that the variable of trading on a day-to-day, hour-to-hour, minute-to-minute basis is really powerful and really fun to have access to.
What's up, everyone? Welcome back to the show. My name is Mike. I'm here with the one and only Glenn from TastyFX. And this is Options Trading Concepts Live. Nick is gallivanting, playing golf.
That guy, man. Yeah. That guy.
Yeah.
Is he a better golfer than you? You've played together.
Yeah. My volatility is very high.
Okay. Nice.
I'm due for a birdie. I get a birdie once a round on a good day, but I also get some others.
I'd hate to be in that position. I'm consistently bad. So we know exactly what to expect. We get out there and we just try not to get too discouraged.
Yeah.
We come with a lot of balls, try to lose less than 10.
That's perfect.
And then
Keep
we're
the
okay.
vibes high.
Exactly. But yeah, I think he's just upset maybe his brother-in-law, better golfer than him. So hopefully he comes out ahead.
Yeah. But yeah, he his playing partner won a free tee time for 2 at Whistling Straits.
No way.
Yeah. So he's actually teeing off in like 25 minutes.
We get a GoPro or something on that?
I know. I texted him this morning. I said, allow yourself to be great. And that I would be tracking his every move on the 18 Birdies app.
Good. Yeah. No, I'd love to just even get a Find My Friends of him.
Mm-hmm.
Just constantly track. Oh, he's in the woods.
Yeah. What's this GPS?
That's pretty far.
You're off the fairway. What are you doing? Oh, man. But yes, good for him. Having a day. Other things having a day. The market up 25 points.
Man, yeah. Where do you look first when
I wake up?
On a day like today, from yesterday, we've got some war situation. Don't know if it's escalated or de-escalated overnight.
A lot of tweets.
A lot of variability there, as well as FOMC today. Does that matter for you when you're waking up today? What do you look for first? Obviously, you have positions on.
Yeah,
that's key.
I mean, I would say first and foremost, I always just check the E-minis and the NASDAQ and Bitcoin, see what the general market. For me, that's the general market.
Okay.
I also looked at oil this morning just to see how that was moving in relation to the potential war situation we've got going on. And yeah, I mean, I'm actually surprised to see the market up today.
Surprised by every piece today.
Yeah. Nothing really makes sense.
Oil down. Gold, where's gold now? That one back and forth, down still.
Yeah, it's actually up a little bit. Silver's down.
Yeah.
But I think the big thing is, it feels like we're in this holding pattern where we're just waiting for something to happen.
Waiting, but I mean, we could be sliding a lot more while waiting. So I guess a reassuring sign that geopolitical tensions, even if our involvement is increasing, not hammering this too hard.
Yeah, it's definitely an interesting time. But yeah, the last 2 weeks we've chopped in this 100-point range between 6,000 and 6,100 in the E-minis. And speaking to the CME FedWatch tool, I look at that for the probabilities for interest rate cuts, hikes, what have you.
Yep.
Not looking like anything's going to change. 99.9% chance that we stay at the current rate.
Absolutely. That one pretty telegraphed, but I'm seeing December still, for the rest of the year, still 2 cuts.
I guess.
That's a little bit surprising.
Yeah.
None so far. Running out of dates. We've got today, July, September, October, December. 5 meetings. 4 meetings without today, and 2 cuts. You believe it?
No.
You buy it? No.
Absolutely not.
Okay.
I think we get 1, maybe.
1 cut.
It's very similar to last year. We had projected 7 cuts.
Right. Not even close.
Didn't even happen.
But what we did get, a jumbo cut. Nobody saw that coming. Jumbo cuts. Maybe we just go for it.
Long cuts. Yeah, I mean, right now, September projecting a cut and December projecting a cut. But yeah, I think the rise in oil price, the swift rise in oil price, can maybe help them along in terms of not doing anything, but we'll see. We'll see. And yeah, I think today, no cut projected, but what is the narrative? What is said from, what is J-Pow's narrative, really? I think that's how people are going to be looking at this. But when you take that a step further, so to answer your initial question, how am I looking at the markets for potential movement from this news event we have where he's taking the stand in 2 hours? I just look at the expected move in the E-minis, and for today, we're looking at a 30-point expected move in the E-minis for the rest of the day, which is extremely low for something like this. So yeah, market's telling us we shouldn't expect anything crazy. We could see something crazy happen, though. We could see a narrative shift. We could see these probabilities shift around. I think it's always interesting to look at the probabilities today before the meeting, and then look at it after and see if anything's moved. But yeah, 30 points for a Fed announcement, I think, is the lowest I remember seeing this year.
For sure. I think everyone expecting more of the same. Jay Powell, love the guy, but doesn't really want to stir the pot. I love the purple ties.
Yeah.
Great purple ties. Go Cats.
Yeah. Red and blue together is purple.
One nation.
That's what I'm saying.
Maybe we should just change our whole flag color.
Yeah.
Just a straight purple. But yeah, I think everyone kind of over the whole wait and see, everyone thinking they're not going to do anything, that they maybe are handcuffed into doing nothing for the moment. But we will get today is more numbers. It's what every other Fed meeting or quarterly, we get more data projections from them, more dot plots, a lot more numbers to scrutinize over. What it all means, who knows? Not my job to sift through that. But in my mind, maybe the opportunity for a sharper reaction on the actual release of all those, then we'll see what his actual commentary says. That usually 30 minutes later tends to be, could be a nothing burger. Just people bored of his he's very good at navigating the line. I'll give him that.
Yeah.
But doesn't always stir markets. So today I'd be curious what the snap reaction is as opposed to what Jay Powell is actually going to say.
Yeah. I think especially now with so much uncertainty globally, stirring the pot is not what you want to do.
Who knows? Maybe he's feeling crazy today.
Yeah. But yeah, they know that, we know that, and I think that just compounds to why we are seeing such a narrow expected move for something where we normally see a much bigger range. So yeah, markets are up a little bit. E-mini's up 25, NASDAQ up 100, Bitcoin flat at 105, the futures are. But yeah, oil's selling off a little bit. We've been looking at that. We've been looking for, oil rallies signaling escalation, oil sell-off signaling de-escalation, but implied volatility of the oil markets is through the roof.
Yeah.
So we should still expect to see some big ranges there. I have an iron condor on in the oil futures between 60 and 70, so breached through the upper bound, but we'll see if we can come back through that range over the next couple weeks.
What is the time horizon on that? Are you trying to long game?
29 days.
Okay, longer game. Is there any, that's what the August contract. You doing anything crazy in oil with this backwardation? Anything in July? Is that worth doing?
We talked about it yesterday. I think it's important to understand how this kind of move really just pumps up that premium on the call side. So any strategy, whether you're bullish, bearish, neutral, with a short option on the call side, takes advantage of that. I had a covered call in the micro contract, but I took it off before this move.
Okay.
So that's fun. But yeah, I think if you think it's going to continue higher, there's a lot of people calling for 100.
100.
In crude oil futures, which would be wild.
That would be, we're just in the 50 handle.
Yeah.
And that's the pressure
for a cool double.
For some people, 100, colloquially, the pressure for buyers.
And this is why I love my little Honda Civic. It affects me very in a very small way.
Good.
Yeah.
Is it hybrid?
No.
Oh, so you're still all gas all the time?
All gas, no brakes.
So you would feel it.
A little bit. Maybe $5-6 more. Well, I guess if it doubles, then that's not going to be the case. But we'll see. We'll cross that bridge when we come to it. How about that?
Sure.
Rest of the market, not really doing much. I like to look at the watch list, the futures watch list, and just sort by percentage change. Anything within 1%, I don't really look at because that's kind of expected day to day. But to the downside, we're seeing volatility come in a little bit, which is interesting. Again, very weird given the global situation we're working with. But yeah, crude oil is second in terms of the percentage move to the downside. To the upside, wheat.
There you go.
Yeah. We had Thomas on yesterday. We were talking about some trade ideas in those futures, the agriculture products. Wheat seeing a big bounce. Natty gas seeing a big bounce. Platinum futures seeing a big bounce. I mean, platinum futures have been
pull up that chart.
Like, what is this? I guess a
good run is what it is.
Yeah, that's true. But yeah, everything else kind of within 1%. So
it is worth calling out. I mean, I take the same approach in scanning the markets and net change, but especially with where the geopolitical risk is taking place. This causes gold to be unchanged on this rolling 24-hour clock, but doesn't always tell the full story for overnight, whipsaws. But But yeah, nice to see a stable market, considering all the tweets. Are you out there tweeting? Are you contributing to the headlines?
I am tweeting.
Parentheses kill.
I have quote. Yeah, I mean, I'm just retweeting stuff from the London Tasty Live show. That's actually the last thing I did.
They're pretty good.
Yeah,
I
they're
like
out there.
I like jet lagged.
Yeah. Oh,
Tony.
yes. Yeah.
Funny guy.
But yeah, London show, Milan show coming up. tastylive.com/events if you want to join. But it will be certainly a grand old time.
Where are you next? You have your own. You have a headline tour now.
We're doing it. We're doing the thing. Yes, Fabrique Milan.
Mike and
June 23rd is the next one with Dylan Radigan, Tom, and Rich. But yeah, they're doing London. What is that? 2 days from now?
Yep.
Friday. Doors at 5. Show starts at 6. The nice thing about that is they have the ability to trade markets live.
Right.
Because 5, 6 that time is 11, 12 here. So
perfect.
Love to see it. But yeah, tastylive.com/events if you want to check out the other ones. We are going to Seattle next.
Okay.
Yeah.
You went there pretty recently, right? Last year?
I think 2 years ago.
With the other show?
Mm-hmm. Yep.
You a fan? You pro Seattle?
I do like Seattle a lot.
I've never been. So.
Yeah. Seattle's fun. Fish market's fun. And
the Crocodile. You ever been to the Crocodile?
I think that's where we were last time.
All right.
I'll confirm with you.
Okay, thank you.
But yeah, August 10th, Seattle show. Seats are filling up. Sign up sooner than later. But yeah, it's always fun. So yeah, it's me, Nick, and Katie. Ryan is having a child, so he's out for the rest of the year.
That gets him out of it?
It does.
What the heck?
Yeah. If you have a child.
I'll factor that in.
Yeah. Yeah. But yeah, congrats to him. He's
Absolutely.
excited. It was a fun time hanging out with him in DC. We just did DC last week. But yeah, sign up, tastylive.com/events. There you go. There's the whole kit and caboodle. Dallas after Seattle, and then San Diego, November 2nd. That rounds out our tour. But we also have Options Crash Course live with Dr. Jim. July 13th in Boston. I think that might be his favorite city ever.
Really?
Yeah. He's a big Red Sox fan. Massive.
That hurts.
I don't know why, actually.
I was going to say, there's no good answer. I don't even know if it's worth asking.
Yeah. His Florida team just won the Stanley Cup.
Right. We've got someone in office, full gear.
Really?
Yeah.
Wow.
David Sapio rocking the...
Really?
Yep. Yeah.
I guess he's
the
a
long
Florida State
sleeve.
boy.
Yeah.
Yeah. I'm going to have
Looks
to...
good. Clean white.
Yeah. I was talking to my friends. I'm like, should we just move to Florida? Because they just win every year.
Turns out. Who knew?
If you're seeking a Stanley Cup, that might be the move. Might be
just live squarely between Tampa and and wherever the hell
precisely
Panthers play.
But yeah, if you want to join us on the YouTube channel, we're going to take a look at the FX markets. I have some burning questions for Glenn here.
Do you?
I do. But yeah, Tasty Live YouTube channel. We're streaming live. You can throw in your trade ideas questions along the right-hand side chat. I've got the Forex page for tastytrade.com pinned to the top of the YouTube chat. You can check it out. All right. So I actually have some positions on. And by some, I mean one. I'm long. No, I'm actually, I'm long the Aussie dollar. So.
I believe you're short.
I'm short the Aussie dollar.
Yeah.
I'm short the Aussie dollar.
Yeah.
Yes.
So the in between the symbol and the profit loss, that negative 0.02 means you are short 0.02 lots, which equates to 2,000 Australian dollars. You're short 2,000 Australian dollars.
Hasn't really moved.
Yeah, I mean, if you took it off overnight, you would have been scratch or perhaps even profitable. But that at least is one of the trending markets. What we're seeing today, pretty interesting picture. Dollar down overall, but we're seeing a bit of consolidation in the euro market, the pound market, but seeing some trending markets in Australian dollar, getting a big bid tone. That one has some correlations to U.S. equities, Chinese equities especially. So that one overnight, got hit hard, bouncing back now. U.S. dollar, Swiss franc, definitely the most interesting pair to me since the onset of this Iran-Israeli conflict. But that one is holding in today as we're not seeing the risk-off sentiment that we have, or you and I might have expected from all the tweet headlines, but not playing through into that market. So that one holding firm. Euro dollar dipped below 115 for the first time in a while, but now that is back above it. So yeah, we tend to see this kind of consolidation into something like a Fed event, but it's nice to see. Most surprising thing to me is this dollar yen market. That one trending down right now from overnight, now sitting around 144.5. This one, in recent months, had some stronger correlations to U.S. rates since the whole bond market started making headlines on more supply-demand factors. Hasn't moved with it as much, but this will be definitely one to watch around a Fed meeting. Japanese yen getting a lot of safe haven demand over the weekend, bounced back to about 145. So this one, definitely curious where it'll go. What kind of questions you got for me?
Well, the first one was, which currency pairs are you focusing on if things were to escalate or de-escalate?
Yeah, absolutely.
You mentioned a few, but...
Yeah, so the U.S. dollar Swiss franc, which our good friend Nick had trouble finding, and rightly so, because it's USD CHF. Nice, one shot, one kill. That one, I think that is the Latin name for the Swiss Confederation.
Interesting.
Everything else more self-explanatory, but this one is definitely one to watch near 10-year lows, just bouncing off of it in recent days, and was trading above that 82 level prior to the onset of the Israeli-Iran conflict, the outbreak of that. Hasn't quite recovered yet, but now building some strong tape action in recent days. And like I said, not necessarily falling today as the panic alarms across markets not really going off.
So is this one that so we're at 10-year lows. Mm-hmm. I've got the cross axis here, for lack of better terms. Jan 1, 2015.
Yep.
Is the last time we hit this level. Are you just trading this just purely based on price extreme, regardless of what's going on globally?
So, that 2015 level was when the franc depegged from the euro. So that one caused quite the whipsaw there. Mm-hmm. But yeah, there's definitely a lot of strategies around this market swirling. It tends to be a less volatile market, but right now you have a lot more components at play. You have this 10-year extreme where in currency markets over a long period, you tend to see way more mean reversion than something like U.S. equities. So if you're taking a long-term position trade, that would be the strategy there. That historic precedent says this will revert to its longer-term mean. You also have the carry trade dynamic. If you look up at the top there, where you see the bid, the ask, the spread, and the swap bid and swap ask, those are quoted in pips, and that is the indicative overnight funding charge. So like you saw in headlines probably last summer with the dollar-yen carry trade, this market, given the margin requirements, how you could structure, how much you could put on in this market compared to a yen trade, this market, a long U.S. dollar Swiss franc position would get you more overnight positive carry than a dollar yen. So that's another strategy going into the long side of this. But then you can also, in the short term, you could argue that if war breaks out, that U.S. dollar has not gotten the typical safe haven demand that it usually gets when there's something like this geopolitical risk. And that on Thursday went all to the Swiss franc and the Japanese yen. So room for both sides here, depending on your time horizon and your underlying bias. But it's definitely interesting that it hasn't bounced back thus far, but is staying pat today.
Yeah, I think I'm going to smash this to the long side. The way that I size this, so the nice thing about this feature, if you just click the minus button here next to size, it'll bring you to the smallest possible tick size. So I'm looking at the notional $800. I think I like to live in that $2,000 range.
Yeah.
I feel like that's very manageable.
So if you scroll, we're fixing the kind of how this shows up, but if you scroll down in the trade ticket, there now you can see you've picked your direction. Now you can see your size and your margin all on one screen. So now you can make a better estimate without doing the math just from the notional. So this pair margined at 3%, so leverage of 33 to 1. You can command 2,400 Swiss francs with just $90.
Love it.
There you go.
Place, trade, smash.
Now you're in.
There we go. Deal confirmed instantly. I don't know if I like the instant fills. I feel like it means that I've done something wrong.
It's definitely quick. But yeah, you'll have on that trade ticket, you'll see in between the buy and the sell price, you'll see the spread right there while you're placing the trade. And so that's really the cost of entry that will reflect immediately in your P&L. Because if you're setting a market order, these are liquid markets, you'll get filled fairly quickly. And so that your immediate profit and loss will ding you a little bit on whatever that spread is. But you could also put in, if you felt more strongly about a certain price level, you could put in a limit order, and then you'd get your weight to fill. If that's, the feeling you're after.
Yeah.
Just waiting for it.
I mean, that's why we trade these things, so we can feel something, especially in the overnight session.
And Tom's feedback, no ding. He said you need a ding. He said filled too fast, no ding. Too slick, too easy to use, filled too fast, no ding.
That's amazing. All right, so we're in on this. I like it. I mean, I'll always bite on a 10-year trade extreme, regardless of what's happening. Especially if you trade small enough to where you can just withstand any variance, that's really the key.
Right.
So, different question, similar thing though. Let's say J Powell comes out and he's feeling a little loopy today, says some wild things, market goes crazy. What currencies do you think would react the most? You said the Japanese yen versus US dollar. Any other ones?
Yeah, so there's some historic correlation in that dollar-yen pair to U.S. rates, but a decision like this will affect the U.S. dollar as a whole, and so you can look to the euro-dollar market, euro-USD, as one of the most liquid proxies to trade just U.S. dollar exposure. So that tends to move on any of these FOMC events, definitely on the gut reaction. What is harder to tell is kind of how this plays out over a longer time horizon. Maybe there's more geopolitical risk in that euro dollar that doesn't necessarily mean one Fed announcement will categorically change the trading range. But Australian dollar, US dollar has been also more of a risk on currency. So if you're not seeing the sensitivity to the risk off side in that Swiss franc right now, the other side of the risk spectrum, we tend to see Australian dollar on the risk on side. So we're seeing an uptick in that market today with U.S. equities. And so if there's a similar price swing in those markets, you could expect some similar sensitivity in that market. And that also, in terms of minimum trade size, even though Australian dollars margined at 3% and euro dollars margined at 2%, because of the actual exchange rate, how cheap the Australian dollar is compared to the US dollar, you can actually enter this market for around $20, which I think is one of the cheapest from a margin perspective to get in right now. So this is one of the more volatile pairs, and so around a volatility event like this, I'd expect that to swing. But in terms of what the outlook is, who's to say if it has a more material impact on rates across the curve? Maybe look to that dollar-yen market, but you can stick to the popular U.S. dollar pairs for today's event for liquidity reasons and because it is such a U.S. dollar story. Otherwise, if you're feeling super crazy, you can go all the way down to emerging U.S. dollar, and you can directly trade U.S. dollar Israeli shekel. Not to add any commentary on, whether profiting from such a traumatic event or outbreak of war, but this is a market you can trade to speculate on the strength of the Israeli shekel, and could surprise you that the Israeli shekel is picking up here. You're on the monthly chart. Let's flip it to the daily. And you'll see that we're right back where we were in this market pre last Thursday. So we saw a big jump up, big rally in U.S. dollar prior to the weekend. Since then, we're seeing it come all the way back down, and the Israeli shekel actually now through however long this price extreme is, if you can zoom out, it looks like we're at the low in this market, all the way back to 2023. So this is a wider market. If you'll note, the spread there is 30, so perhaps a greater barrier to entry, but you'll still get filled very quickly, and this market is definitely more volatile than more liquid, popular U.S. dollar pairs. So,
yeah, I mean, even the last couple of days, you've seen 10% rip.
Yeah.
Also, yeah, big moves there. It is interesting to see this kind of consolidation near this level, though.
Mm-hmm.
So, yeah, crazy times. This is the really nice thing about the inclusion of this into the platform is you can trade all these different things that you really can't trade directly unless you have access to this.
Right.
Like, how else would you trade this in the equity world unless you had some kind of like wild stitched together?
Exactly. And at that point, you'd think that the closest proxy would just be watching crude oil.
Yeah.
Right. But yeah, surprisingly, among popular U.S. dollar pairs, the correlation to crude oil, not really there. Pretty uncorrelated. Now, of course, when we have something like this geopolitical event or ongoing events, those correlations tend to rise just because of the greater risk on, risk off nature. But in a day-to-day over the past 3 months, crude oil pretty uncorrelated to even U.S. dollar, Canadian dollar, which is thought to be historically a commodity currency on the heels of crude oil prices. But so that's been interesting.
Love it. I think I'm going to get involved in the Japanese yen. I feel like that is speaking to me right now. I'm short the Aussie dollar. And
so you are long U.S. dollar in both of these pairs.
So if I wanted to hedge, maybe I short.
You could short the U.S. dollar, Japanese yen, and that would be bullish on the Japanese yen. There's also the dynamic here is a very popular trading strategy around an FOMC event is to wait for the event itself, just because there will be likely increased volatility. And so you look at a chart like USD JPY here, and if you don't have a ton of conviction, I mean, just looking at these trading ranges, it looks like we're kind of in the middle of no man's land. We had strong support at 142. We've bounced against 145 a couple times in recent weeks. And so now closer to the upside, but pretty squarely in the middle. If you wanted to wait for the event itself, that's a popular trading strategy that gives traders, unique price points regardless, where you could look at this. If it goes how you thought it would, and that gives you a better entry, or if it goes not how you thought it would, and you have a longer term perspective on it, like take that US dollar, Swiss franc, for example. If you were getting into it just for the historic price extreme, waiting for an event like the FOMC, you could see it flash even lower if the sentiment around the meeting itself is bearish for US dollar, and that would give you the opportunity to get perhaps a better entry point for something you're already considering right now. Or, you miss out and you only miss out on a few pips while you're waiting for a lot more room to run there. So a lot of ways to play it. But you're thinking of getting in here before?
I think so. I mean, my sizing is so small,
right,
that I still have the ability to layer into another tranche of the same idea. So I think I'm going to throw it on now. I'm going to tune in at 1 o'clock, 1:30, see if anything's flying around, and then I'll just layer into more of the same idea if something is moving against me in a big way.
Gotcha. And now when you're considering your time horizon for something like this, I would also note the swap bid and the swap ask. So getting short in this market and holding it overnight, so past 5 p.m. Eastern time, today, because it's Wednesday, a 3-day roll on the majority of US dollar pairs, you're going to be paying an indicative value of 5 pips overnight. So at 20 yen per pip, not the biggest deal, but something to note that the other side of this market, that would be a positive value. But
20 yen is like...
That's nothing?
Yeah.
That's nothing?
I mean, 1,000 yen is like $5, $3, something like that. So
pretty close.
Yeah. I mean, 300,000 yen seems like a lot, but
and you're riding
like $500.
You're riding this thing to 100, so
yeah.
That's all going to be.
But yeah, I'm gonna go with the 0.02. That's a fun size. And we'll just see. We'll see what happens, and I'll just keep my eye on the positions tab, see if anything's moving against me in a big way, and I'll just layer in more. All right. What happens. All right, so we're in. Instant fill. No audio. No
ding. Sorry. Damn it. So late.
Oh man. All right, good stuff. So we're in a bunch of stuff. I'm gonna pop over to the YouTube chat now, see if we got anything going on here. Jimmy, SMR trade strat is a go. So how do you feel about nuclear energy?
It's been a fun one to watch recently. Yeah. Like anyone who's not in it, now is a good time to say, should have thought about that 2 months ago.
Yeah. I was actually talking to him yesterday, and he was like, yeah, at 10 a.m., for whatever reason, you see this rip in the price, and then it just trails off throughout the day.
Interesting.
And it's pretty consistent. It's actually pretty funny. Like, here's another one. Ding.
I've been seeing the same thing with a couple space stocks I've been watching, where open, it'll just rip, and then kind of fades away. But yeah, I have no intuition as to the granularity of which nuclear stocks. I've heard of Oklo.
Yep.
Know some people in that. But the difference between them beats me.
Yeah, but
it's a go.
We have a continued demand for AI. We have to power AI with something, and nuclear energy is at the forefront of sustainable, predictable, green energy.
It's beating windmills right now.
Yeah, the problem with windmills is you need wind.
Need wind.
What if you don't have wind? What if you don't have the sun?
I don't know. We're here in Chicago, there's always wind.
True.
Surprised there's no windmills. Those things are massive. Is there any scaling down there? I'd put a windmill on my roof that charges my phone or something.
That'd be amazing. If you can rig that up, let me know.
Solar panels, not so hot here.
Yeah.
But wind, we can do wind.
It's tougher. But yeah, solar and wind, fine, but they're just not predictable. Nuclear energy, though,
predictable.
I believe you're getting some energy out of that. Let's see. Nothing de-escalated. Vol sellers, FOMO as usual. Buy the dip. See what happens. Yeah. I mean, I'm shocked that we have a 30-point range today.
Yeah.
Feels very wrong. Feels low.
It does.
But maybe it's... And also, we have the holiday tomorrow, so that also plays a role. Half the office here is going to be out Friday, from what I hear.
I'm out. Yep.
There you go.
One half right here.
Yeah.
Small sample size.
There you go. So yeah, I think holiday week paired with no movement on interest rates, paired with let's wait and see. Probably that's what the narrative is going to be from Jay Powell. Is just let's wait and see.
Classic.
Yeah, it's
God. That guy never misses.
Frustrates me. Bullish Google call diagonal. Are you trading any of these Mag 7 stocks?
No. The opportunity in April was a good one for Mag 7.
For sure.
Just on long trade entry.
Mm-hmm.
So that was a play there, but day to day, it's tough for me. How do you delineate between them in terms of price action?
Really.
Okay. Liquidity, is that?
Yeah, I mean,
implied vol.
Implied vol for sure. It depends on your strategy. So like, if I wanted to get long Google and I look and it's got a 36% IV, like that's fine.
Okay.
In terms of like longer term leaps or diagonal spreads, because the lower the IV is, the cheaper it is to get that delta. But another way to look at it is like into the tariff information that was flying around.
Right.
You saw a lot of these stocks reach multi-year lows. So yes, the sell-off was likely emphasized by the fact that a lot of these Mag 7 stocks make up a huge chunk of ETFs, like the NASDAQ, QQQ, and even SPY. So the fact that all these stocks were projected to be impacted by tariffs, you see big sell-offs overall. But then at a certain point, you look at it again, you're like, oh, I can get Apple at 3-year lows.
Right.
Smash. So, I mean, it's. I think that also compounds why we've seen such a big rip to the upside. But you can look at the Mag 7 stocks and be like, okay, I want to get long one of these.
Mm-hmm.
Which one has not participated yet?
Right.
So Apple is kind of on the lower end of the range, where Microsoft is reaching highs, new all-time highs. So Microsoft's at 480. It's crazy.
Yeah.
So, like, would I get long Microsoft here? Probably not. Am I more comfortable getting long Apple here? Absolutely. So that's kind of how I look at it.
Yeah.
Because a lot of these stocks have a similar implied volatility. But Colin's looking at a Google diagonal, long August 175, short the July 190. So yeah, I like these setups because when you're buying the earnings cycle or buying in the cycle that contains earnings, you're paying more extrinsic value, but you also assume that extrinsic value is going to stay bid because the premium will stay bid until the earnings announcement happens. So if you're selling July against that for $1, you're reducing basis a little bit, but you're going to get all that premium in July because it's projected to be before the earnings announcement. So you're kind of getting the best of both situations where you're short a faster decaying option and you're long an option that's going to stay bid. And if you get this move, you're paying $9 for a 15-point wide diagonal. I might have to smash this.
And in terms of trade management, you let it play through earnings, or you're looking for the move?
Just the move. Yeah. The nice thing about if you're wrong and Google stays here or sells off, you can roll from the July 18th into July 25 and pick up a ton of premium because now you're rolling into the earnings cycle. But if you're right, this is a 15-point wide diagonal that you're paying $9 for. So if Google goes from 175 to 180, this will be a $200 winner, and you can take it off. I'll dabble. Let's do it.
There you go.
920. Do we have 920? I'm going to leave it there.
No ding. Ding.
James Bond, happy hump day. Indeed. What are you guys doing before the Fed announcement? I'm not doing anything because there's really nothing to do. If this was a 100-point expected move, I would do like an iron condor or something in SPX. But 30-point move, I'm not touching it.
Nothing there.
Yeah.
Fair.
Yeah. Glenn, what do you think about a short USD JPY play for FOMC at 1 o'clock?
Well, you got it right there with your man Mike. He went through the whole thing, and he's in.
Yeah. I think it's interesting. But yeah, again, I think you can just do it small if you want to do it before. And then if it moves against you and you still have the same opinion, you can throw on another layer, and that moves your basis. Dollar cost averaging.
Exactly right.
In those FX markets.
Easier to do than futures from a trade sizing perspective. So Will is he's doubting your judgment. Why wouldn't you be long Switzerland during a war, Mike?
You tell me. Yeah, I mean,
and there's no war.
What's the narrative?
I mean,
they do make good watches. True.
I like it.
Yeah, and this is the beauty of it. You can take any side you want, and you can trade it so small to where, like I could be right, you could be wrong, but I could take mine off, and then you're right 2 weeks from now. That's the nice thing about the ability to trade super small is you can just hold it forever.
And here you're able to have multiple U.S. dollar plays. You have two long U.S. dollar plays, one short, and able to layer those in and out as your perspective changes or your bias.
Yep.
Kyle, what about cable? Cable, British pound, U.S. dollar, sterling. That market is definitely one to watch off its highs for sure. Got a big move yesterday, down below 135. This is one to watch because not only do you have the Fed announcement today, overnight you have the Bank of England meeting tomorrow morning.
So we call it double whammy?
We would categorize that under double whammy for sure. And FX markets, spot FX markets, not closed tomorrow. So those are trading all day long. We'll probably see less liquidity without U.S. markets participating.
Yeah.
But when you're trading these European currencies that are open, it's definitely non-zero. So that you'll have market participants across these pairs. So that's one to watch. You also have, I forgot about it, the Swiss National Bank also meeting tomorrow. And that is less of a headline because the nature or the perceived nature of Swiss currency is that it's, less volatile and has less reliance on its own economic conditions. But it is important to note that they're expected to cut rates down to 0%. And like we talked about with the carry trade dynamic, that opens up the interest rate differential in that long U.S. dollar short Swiss franc trade. And so the interest rate differential, the main driver behind the overnight carry, the ability to get positive carry overnight because you're holding U.S. dollars at 4.5, maybe 4.25 today, most likely still 4.5. And that you're financing that position with Swiss francs that will now drop to 0% or in theory free to finance with, right? So that definitely plays into that dynamic. We'll see how it plays into the price action part of it, if that overwhelms any of the geopolitical stuff. A lot of factors with these currency markets.
Yeah.
It's a whole country. And in the euro's case, a whole group of countries. A lot at play.
So yeah, all these banks are watching what the other does ultimately.
Right.
Do you think at this point, obviously, U.S. is coming up in an hour here. Do you think you see movement or narrative shifts based on what happens here first, since they're...
You could. Bank of England definitely has been closer tied to what the Fed has been doing, but at the same time hasn't been necessarily handcuffed by the Fed not cutting. They've cut a couple times, and the European Central Bank absolutely not tied to what the Fed is doing. They've been continuing their cutting cycle. They're down, their deposit rate's down to 2% now. They've said that their cutting cycle is likely coming to an end. So we'll see how that plays out. But I wouldn't be surprised if something substantial comes of this Fed event, that the Bank of England doesn't address it in some way, or try and take a similar sentiment. But at the end of the day, if that's expected, then the only move in the price action would be a deviation from that, right? So we could see a move that's at 2 a.m. Eastern time, I believe. Actually, let's look. It might be later. No, I think it is too.
Scott's saying bank rate vote at 6 a.m. tomorrow.
6 a.m.
So that's
nice.
6 a.m. here.
Yeah, let me just confirm. We've got
these damn time changes. They're
so many of them.
They're hard. They're hard to keep track of.
Yeah, 7 a.m. Eastern time. So this one of the few events from Europe that will be during, our trading hours. Only Chris Vecchio and Ilya are up at 2 a.m. for the normal.
That's true. I hear you're joining them today. Is that?
Yeah, overtime. Let's do
3
it.
to 4.
I
think you actually said that in the chat. Let's do it. I think you literally said that.
Yeah, for their... it's nice to have a front row seat to listen to their expert opinions on post-Fed events, and we'll probably hop back into these spot FX markets to validate or see what's moved since then. And I'll be thinking of you first and foremost.
Thank you.
And your positions, and
I'll be sweating.
Hopefully a lot of green for you, my friend.
Thank you. Appreciate it.
That short Aussie dollar trade turnaround for you.
It needs to happen.
Yeah. Well, I mean, that one's been...
It's been simmering.
It's had a nice range, but that's the tough thing about these markets never closing is without, putting in something like a take profit limit order there.
Which you would think someone might do. But
you don't have to, but if something's trading in a range to actively get kind of whatever profit target you're looking for, that move could very well happen overnight and come back before you wake up. So that's kind of the value add for putting in one of those conditional orders there. But best of luck to you.
Appreciate it. Popping back to the equity markets real quick. Netflix, Larry has a 1100 strike short call expiring in July. When does it end? That's a great question. I've been bullish on Netflix pretty much all year, simply because I think they will take over the live sports space. They've already done that with a few trials last year. They almost broke their servers with the Mayweather.
I was going to say, I too thought they were dabbling in it, but I didn't think those experiments went all that smoothly.
I was like, what is happening here? Like, this is Netflix. Come on. But yeah, I think that's the future of these streaming companies. They're going to eventually have a lot more exposure to football games. They had multiple games on the holidays last year, and it was a totally different experience. I think it was a better experience for those games specifically. But yeah, that's the future, and specifically for Netflix, you have these docuseries out like Receiver, and you have soccer ones too, where like you have the ability to hype yourself up before a season starts and then they start taking over the games. It's like, it's a nice pairing there. But yeah, Netflix ripping higher, $1,200, crazy to see. But yeah, for your position, you have the 1100 short call. It still has some premium in there, $1,500. So nothing too crazy. You're at the expected move. If you wanted to hedge a position, you could throw on the short put. It's not going to hurt you. If it comes back down, you'd pick up another $1,500 in premium. But you are in the earning cycle as it stands. So if you're looking for the ability to get out quickly, then I would leave it as a short call, because just like the trade we talked about before, if you're in the earning cycle, it's going to hold on to extrinsic value until the earnings announcement happens. So if you have risk on both sides, that's not going to really help you as much if you get a big sell-off, because now all of a sudden your $1,500 turns into $5,000 if you get a at-the-money move. You'll still be losing less for sure, but if you're looking for the fastest way to get out, staying directional if you have a short option in the earning cycle is likely the best way to do that. And my United Airlines position, I've been battling this for many moons. 85.90. I have the 85.90 inversion. I've rolled it a ton of times, plenty of times here.
Nice.
Is it a good time to uninvert to an 80, 87.5, or rolling to an 80, 87.5 to the 58-day cycle? We can check it out. It's pretty close here, but let's see. Rolling from July to August to the 80, 87.5. 80 call, 87.5 put for $1.68. So yeah, this would ultimately bring the delta down. So yeah, if you want to bring the delta down and bring the trade closer to the current market price, you're still picking up premium, and this will help you get out sooner than later. You are widening the spread. So mine's a 5-point wide inversion. This is a 7.5-point wide inversion. So keep that in mind. But yeah, I don't mind this as an adjustment. I'm just going to lean long though. I think UAL still has some room to climb to the upside, and I want to be positioned for that. So yeah.
I'm flying tonight, so I'll let you know.
United?
Yeah. If they can't, they've already sent, the warning flare. There's rain somewhere between here and Denver. Free change if you don't want to fly. We might cancel. So if they cancel,
sure,
you'll be the first to know.
Perfect. Yeah, I'm trying to game the system here, and they have the United Club credit card.
Right.
Extra 90,000 bonus miles.
90,000?
90,000 if
the
you
heck?
open that card and you spend $5,000.
But the good card?
The top one,
Top
which
card.
gets you the United Club access, which is a whole nother thing where you save $100 every time you go to the airport. But
I got the middle card.
Okay.
And I didn't get all that. I think I got 50,000 points.
Dang. At least that's something.
But I'm going to Denver with the points, so.
There you go. But yeah, I have to buy tickets to Japan, Alaska, Jamaica, all United.
Let me guess. That's more than $5,000.
Yeah. Yes.
Instantly.
So you get the points for buying the flights.
Yep, like 2x or something.
Yeah, I think it's even more. Then you get the 90,000 bonus points. So then basically, all of a sudden, I've got 6 million United points that I can use on whatever.
Anything.
Yeah.
It's pretty
That's
good.
my grand plan. We'll see if I can make it happen. But
Pretty good grand plan. I got to talk to you more.
Yeah.
You got better ideas than where I'm sitting.
Yeah. Well, I try. But some of my ideas are not working well, like staying in end phase, for example. I've been hammered twice with these big moves here to the downside.
Yeah.
So
wow.
They're not all great, but that's the name of the game. If you're trading consistently, you will have moves that do not make you smile. What does make us smile, though, is we have Panda Express for lunch today.
Yeah.
So we got to get out of here. Go have some of that. But thank you so much for tuning in. If you've got any questions, you can find us on the Twitters. I'm at Trader Mikey B. Glenn's at Glenn Freibarger.
There you go. With an A.
With an A. You can follow him, tweet at him, see how his flight is going tonight.
live tweeting in the thunderstorm.
Yes. Oh, man. But yeah, thanks for tuning in. If you got any further questions, you can find us on Twitter. You can also shoot us a note at support@tastylive if you got any further questions. But yeah, stay tuned. We got plenty more content coming your way on the YouTube channel as well as tastylive.com. Catch Glenn on Overtime today at 3 o'clock Central. And yeah, we'll see what happens with the JPOW stuff. I think 30 points is a little light. I think we see maybe 50, 60 points from where we're at right now.
Okay.
We'll see if it happens. But yeah, join us same time, same place, 11 a.m. Central tomorrow. We'll see you then. And by tomorrow, I mean Friday. Because tomorrow's a holiday. Peace.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, cover calls, iron condors, jade lizards, become a trading mastermind. Get the guide at tastylive.com/guide.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
I am a self-taught retail trader. I didn't go to school for finance, and it's not necessary to be successful in this industry. All it takes is a little bit of dedication and a lot of time to learn the lingo and learn the strategies.
So standard deviation is basically just the probability of being in the money or out of the money. So one standard deviation with options is going to be probability of 16% being in the money on one side and 16% on the other side. So if you take those two together, you have a 68% range in that spectrum. So that would be one standard deviation.
If you just focus on a couple of core key concepts and go from there, it will allow you to educate yourself and propel yourself through the options trading system.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're #1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tastytrade. Make your move.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tastytrade. So spread the word and earn rewards. Terms and conditions apply.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
You're gonna want to put natural gas on your list for routine rundown today.
You're me. I'm Futures Katie from the future.
Can you please explain to me buying power reduction? Buying power reduction is basically how much you have to set aside per strategy when you're entering a trade. One of the coolest things about stepping into the futures world for me was learning how all of the different asset classes are correlated and non-correlated to one another. So it's really opened up my eyes to all the different products that are available and how relationships that I saw before might be enhanced by these new products that I've now been able to trade.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tastytrade. Download today.
Tastylive's godfather of options, Tom Sosnoff, is grabbing his passport and taking this show international. He'll be joined by IG's Rich McDonald in London and Milan, along with special guests at each stop for an evening of live trading. It's fun, challenging, and moves as fast as the market. Doors open at 5, with trading starting at 6. Come early and have a pint or glass of vino with the boys. It's totally free, but space is limited. Register at tastylive.com/events. Options just got molto interessante.
What?
We built Tastytrade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tastytrade. We built Tastytrade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tastytrade.
We're back. It's Friday, June 20th, 2025. This is Overtime. No, it's Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. He's Ilya Spivak. That's why I got it confused. We're here, at least for the next hour. Ilya, it's a OPEX Friday here in this market. $5.9 trillion of options expiring today. The largest June OPEX ever. You wouldn't know it if you look at the price action, I suppose. The market's kind of stuck here. Stocks basically unchanged, bonds moving up. The winners basically are being sold off. Gold, silver, a touch softer, right? Some of the losers being picked up. There's obviously a lot of headlines coming out. The market was closed for most of the day yesterday. Cash stocks were closed. Futures ended at 12 and then reopened at the usual 6 p.m. Eastern. Ilya, what's surprising you on the other side of our brief federal holiday in the middle of the week?
I think we'll get to this part surely before long, but because I know we like to start with equities, but for me, it was actually what's been going on in the FX space, because I have really round-tripped my exposure here. Obviously, the last time we spoke was on Wednesday, and we talked about maybe the dollar is turning higher. Maybe something has changed. Not in the structural sense. I think we both still think the trend is ultimately lower, but maybe there is a significant and lasting correction here that's coming. And I wasn't quite ready to make that call. You, to your credit, were starting to lay out some exposure. And as I was watching the price action after the Bank of England rate decision, it seemed like you had it right. And so I've actually started to really flip over my exposure. I took a bunch of profit. I am now short euro. I am now short pound. I'm still long the Aussie because that one hasn't really gone anywhere. And I might be short Aussie before long. I'm out of CAD. I'm out of the franc. I'm out of all those other things that have been working so well being long against the dollar. I think quietly while U.S. markets were closed and liquidity was thinner, FX markets, which were open, even by the way, after the Wednesday future close elsewhere, FX futures were trading. And so I was able to get out, flip over, and I think that's something we're going to learn about next week as it develops. On the stock side, frankly, things are kind of boring. We're still in the same range. We still haven't really gone anywhere since the CPI data came out, about a week and a half ago. And your audio.
I'm sorry about that. Stocks have been a stick in the mud. We see that this market really is just waiting on tenterhooks for the headlines around what's going on in the Middle East. A Fed meeting this week barely did anything for the market one way or the other. I think people kind of whistled past it. That's probably going to be the focus for next week, although maybe President Trump's and the remarks yesterday that he's going to decide about an Iranian attack within the next 2 weeks means that wherever we are right now in this geopolitical theater, you're probably in a holding pattern. Israel and Iran will keep firing missiles at each other, but the market knows that. So while we wait for an ultimate decision over a U.S. strike, perhaps then we swing our attention back to actual economic data, which seemingly has been pushed aside or discarded as anything meaningful here. I say that in part because you've seen some of the housing starts, building permits data come out, looked really bad for the U.S. this week. You had the UK retail sales report today, which they were expecting a 0.5% decline month over month, and it was down 2.3%, the worst single month decline since May 23, and yet pounds trading higher. So there seems to be we're in a place right now where there's a lot of data coming out, there's a lot of important things developing, and yet we're not really looking at them. So next week, Ilya, we have a Fed Chair Powell testimony coming up. Finally.
Oh, here we go.
A Fed Chair Powell testimony perhaps is the most important thing for the week. I know we have core PCE at the end, but we can basically impute that from the CPI and PPI, as you and I say every month. But Fed Chair Powell, this isn't a normal venue. When he goes and gives a speech at a conference, or if he speaks to a gaggle of reporters in front of the Mayor Eccles building, right, that's just him talking. But when you testify, you're speaking under oath. And so it's a different set of incentives about what you can say and not say in terms of making policy promises here. So Ilya, in past years, there's been this albatross sort of Damocles hanging over the testimony, right? When are you going to cut? Right? When are you going to cut? And he couldn't commit to that, obviously, here. What can Powell tell us this week in front of Congress that he hasn't already said or will give the market any additional insight towards?
I think it's going to be less about insights and more about vibes, if that makes any sense. I think the market still is of the mind that Powell isn't ultimately going to follow through, and that the Fed will ultimately be pulled into a more significant easing cycle. If you look at what Fed funds futures are pricing here, and I think that this is why you really don't need new information. You just need for the markets to take in the information that they're being told. Fed funds futures are showing you right now that for next year, there's 55 basis points on the menu. And that's a full rate cut bigger than what the summary of economic projections just told you earlier this week. And certainly the message from Powell was, I don't know why you all think we're in a hurry. because we're not.
Mm-hmm.
We really don't need to be in a hurry. The inflation rate is only a hair above our target. The jobless rate is very low by any kind of historical comparison. The only way to make it look like it's been rising is to say that 3.4% in the wake of the COVID gyrations in the labor market is some sort of approximation of normal, which it isn't. 4.2% is quite low for a jobless rate. So if you're the Fed and you go, well, my mandate is to ensure maximum employment in a context of price stability, look at what the Fed is having to juggle. The tariffs, wars, crude oil prices doing all sorts of things, persistent uncertainty. To say that they're delivering is a mild understatement. The Fed is shooting the lights out, frankly, with what the dashboard says the economy is doing, so their dashboard. So it makes perfect sense that they are in no hurry to touch anything, lest they guess wrong and go and break a thing that they shouldn't break. So I think it'll really be about the forcefulness of Powell's message, because I don't think the markets still get it.
Well, hold on. What's Powell's message, though? I saw a note from...
We're not going to do anything.
Well,
we're not going to do it fast.
Goldman Sachs chief economist had a note that came out this week after the Fed meeting, and it was basically... The perspective was Powell was effectively saying, if you stop with the tariff nonsense, I'll cut rates for you.
Yes.
Is that going to be the message here on Wednesday? Or I suppose Tuesday, Wednesday?
I mean, certainly if Powell were to come out and say, look, probably the biggest challenge for us in normalizing, because we do need to normalize because inflation expectations are falling, which means the longer nominal rates stay here, the higher real rates go. And that's a huge issue for the economy. If the real cost of borrowing, that is nominal interest rates minus the rate of inflation, if that starts to surge because the rate of inflation expectations is lower and lower and lower, and by the way, we're almost back to April's lows on 5-year break-evens. So if that's going to continue to happen, real interest rates will surge. That will crush the economy. So we do want to be cutting. It's not because anything is wrong. It's because everything is right. We've been successful in bringing down inflation expectations and re-anchoring them after the scare. Now what we need to do is we need to take down nominal interest rates to match it, or we risk crushing whatever soft landing we ever hoped to have. But how in the world are we supposed to do that when there is a tariff deadline in July? There's a tariff deadline in August. We have no idea what that's going to mean for inflation expectations. How are we supposed to make a move? Well, if the economy is giving us numbers that don't scream at us that we need to cut immediately, we have to do no harm first.
The rest of the week, there's data due out, but easily can be subsumed. Haven't seen the market react too much to PCE. I would keep an eye on those personal income and spending numbers, though, at the end of the week, right? If consumers are really getting hit hard and they're changing their behavior, you'll see it in some of those data series moving forward. And to your credit, there have been signs of consumption struggling a little bit more here in recent months. It's in the surveys. It's showing up in some data.
Retail sales this week was not a happy set of numbers.
No, and we're going to have durable goods next week, which are they're retail sales effectively, but a specific subtype, items with lifespans 3 years or longer, airplanes, appliances, automobiles, right? Things that consumers, businesses only buy when they have significant cash sitting around to be able to finance, debt, or they expect their income or cash flows to increase in the future to be able to afford this big capital expenditure. Right. So that falls off, right? Are the tariffs?
There's a level of conviction there that's implied. If you're going to go spend on big ticket items, then your confidence about the future is relatively high. It's not like, oh no, will I splurge on this pair of socks? It's like, no, if you're buying an aircraft carrier or you're buying a Boeing plane or you're financing some appliances for your house, it's a larger purchase. It's a bigger commitment. You have to know that you're going to be able to support that.
We look at stocks here today, and volatility isn't that high. First off, it's an IVR of 21.9, right? We talk about this being, the biggest June OPEX ever at 5.9 trillion, needing to be rolled today. We can see here that the VIX is at 20.7. So at the end of last week, once we had the Israel-Iran shooting begin, we see that the VIX pops through 19, and we have not been able to settle back below 19 since then. So I think as a line in the sand, right, the market has this benchmarked. There's obviously room for escalation, but vol is kind of in a stuck spot here where unless we have reason for this to escalate, is the volatility going to collapse while this is going on to this degree? Probably not. No. But we also saw after enough time, Ilya, in 23 and 24, you can get into very low vol states where the VIX is sitting at 15 or lower, even with the Russia-Ukraine war reigning in the background, or Israel and Iran starting to fire things at one another. So vol here, it tends to pass, as is our overall view. 1.1 million contracts traded, though, in ES today. Momentum is eroding. Stochastics have fallen out of overbought. MACD is declining, but still above its signal line. We're holding the 1 month moving average. This is as directionless could be, I would suppose. And I think then it necessitates us sticking with what's been the view here. We have the swing low from May 23rd. As long as we're holding above that, you can be bullish. As long as we're below the high on June 11th of 61, we'll call it 30 rounding up, you can be bearish. This isn't a particularly appealing spot from how I trade, my view.
No.
This is not a particularly appealing spot to do much of anything unless it's like buying the dip against today's low and hoping that we're catching the 1 month here. But that's really the only play I see right now.
And it's not particularly exciting because you really don't have a whole lot of conviction. There's really not a whole lot of, there's not enough vol. I mean, it's a little bit elevated, but it makes sense that it's only a little bit elevated because obviously there is a geopolitical situation out there which the markets understand is asymmetric and could do all kinds of things and develop in all kinds of ways that are not forecastable. But at a baseline, any kind of conversation, and people are having it in a kind of cavalier fashion out there, but just to be clear, any kind of conversation about World War III or some such thing that's really impacting the global economy at scale, that's not what this conversation is. In fact, really what this conversation is about is one country deciding that in order for that outcome not to happen, they have to act now, and the consequences of that opinion and of that decision. But in the meantime, this is incredibly regional. And Iran is not the kind of power that makes for a World War III, all-consuming global demand destruction kind of a scenario.
Do you know how many people live in Iran? Do you know the population of Iran?
I think it's something on the order of 100 million.
Oh, did you watch the Tucker Ted Cruz interview?
I did.
Okay. Just that's why.
I knew. So I was a little high in my estimate because that was the organic answer before I saw that, and then they went at it. He's like 92. I'm like, that was close.
Will this spiral right now? I mean, the market's saying it's not, and I think that's probably the correct assessment given everything that we know at present time. And then you're in this 2-week window where Iranian negotiators are in Geneva right now talking to French, German, UK counterparts. The U.S. is signaling that diplomacy is still probably the best bet here.
Mm-hmm.
We'll see what happens. Either way, though, right, we now enter a window here where we're post-OPEX, okay? We have this Iran-Israel story in the background that's not going away quickly.
Mm-hmm.
We're in a period now where buybacks for S&P 500 companies, about 80% of companies are now in a buyback blackout window. Mm-hmm. So the market is, I wouldn't say it's sensitive here, But if something negative were to occur, that's beyond the scope of our current like central tendency of expectations, which it's crazy to say that part of our like, oh, it's just going to be another day that ends in Y, is that Tel Aviv is going to be hit by missiles, that Tehran's going to be hit with bombs. And that doesn't stir a single damn emotion in this market. Right? But that's where we're benchmarked right now. That's part of the background noise. And so until this, if this escalates much further, like Netanyahu's killed, Ayatollah's killed, could really cause this market to break right now. So it's sensitive. We're sensitive up here. We're losing momentum. We're looking for a reason. The Fed didn't give it to us. Not that anyone was really thinking the Fed would. But Ilya, the seasonality for July is Warren's mentioning, right? Past 10 years, you have not seen a red July in stocks. So maybe we have one last push to the upside here before people decide to go away for the summer. This is just a tough spot. It's tough to say. This is a tough spot.
Tough to say here. Tough to say here.
Look at the NASDAQ.
Vol is relatively low. I mean, NASDAQ is at 19. So, is that high? Not really. So
is this a head and shoulders? Maybe. Maybe not.
Maybe. If it is, it's a head and shoulders that's had an anvil dropped on it because it's very kind of stocky and compressed.
Right.
Who knows?
It doesn't even really fit the definition because the right shoulder here is higher than the left shoulder here. So, right, is it topping? Get us below 21,000?
Yeah, show me.
Show us.
Yeah, show me. At this point, just show me. What strikes me as giving all of this a slightly, this should be no surprise to anyone, a slightly bearish kind of flavor is that we know stocks like going higher, and they're not now for an extended period. So you're in a market that's biased to the upside that can't do what it likes to do. And that should give everybody a little bit of a pause. Because it's one thing when the market consolidates for a week. The market consolidates for a day or two after some kind of thing. This thing has been basically listless all of this month. If we take a look at what this has done, we really kind of stopped rallying in the post-Liberation Day unwind kind of way already by about mid-May, second half of May.
Yeah.
And then we just kind of went into this, okay, well, now what? Kind of thing. And it's in the same range where we were digesting before the start of the year, from early December into the middle of February, when everybody got ginned up about growth concerns, when the business and consumer confidence surveys started to show you what people thought about implementing these tariffs. So we seem to be back at a kind of fair value area, or what has become a kind of fair value area from end of last year, before the administration takes office, where the markets go, okay, let's see what this means. And then they have a freak out. It turns out the freak out isn't as bad sort of architecturally for global finance, because ultimately there is a degree of market discipline and we stepped away from the worst of it, maybe. We'll see. And we're kind of back to, okay, so what does this mean then? And we're stuck in the same spot again. 6 months into the year, almost 7. So the fact that the markets do not want to keep going here does not suggest that they've taken on the risk and shrugged it off. Because if they had, they'd be rallying. And they're in some kind of prolonged stall. So this should be giving everybody just a little bit of a dampener on their super glide optimism. But is it a clear sell? No.
Well, you said the market's got to show us. I guess we're gonna call this the Missouri trade, right? 1899 Congressman William Van Diver says, "I'm not here for your frothy eloquence. I'm from Missouri. You need to show me." Right? We need to see, the market's got to show us something. We got to get below
the show me state.
This is a show me state of price action. So which way it breaks, that's ultimately going to come around the corner maybe next week. In terms of volatility here, though, the volatility term structure, just the difference between the front month contract and the back month contract, which right now is the April 17th, 2026 expiry, it's widened back out to 3.23 points. I would note that the curve was a little bit flatter earlier this week. One point of reference this week, we've been looking at the difference between the term structure, say, going back to June 4th relative to where we have been the past few days. And back on June 4th, the difference between the front month and the back month was about 6 points of spread. You know, a really nice, steep term structure in contango. And as it flattens out, a flattening vol structure, an inverted vol structure, those tend to be difficult environments for equities to rally. So perhaps a silver lining here throughout all of this week's choppy sideways price action is that the market is on the margin a little bit less clenched up than it was a few days ago. Silver lining. Otherwise, sector performance before we get off stocks here, Ilya, it's a healthy split in favor of bulls today. There are still 10 of the 25 ETFs that we like to look at here on Futures Power Hour and Overtime. Those are still in the red. But your top performer right now is ITB, the home construction, XHB, the home builders, and XTL Telecom. These were names that were leading earlier this week for a brief minute when we had rates coming back in. Rates are in a little bit here today, so rate sensitive items, they are moving on up. Worst performers, metals, GDX, GDXJ, XME, also SMH, which maybe this is tariff talk related, although downtrend earlier here from the July 24, January 25 highs. We're trying desperately to kick out here, and we are not able to punch through. So again, we think about a market that's looking a little bit sensitive here, like maybe things come unclenched after OPEX. We're in this buyback blackout window. If SMH starts to break, you're probably going to see the NASDAQ lose that 21,600 figure. Yeah. I think that's probably among the sectors to watch right now, SMH and what happens right around these levels. That's probably the most important thing to consider for the NASDAQ.
It's starting to crystallize, and maybe next week's testimony is what does this, that if you're going into a world that you started this year where the first thing on everybody's mind was, oh no, this tariff rollout. You had the worst of it. We've come back. We're back to this kind of starting line point. And now it's kind of like, okay, so where are we? And you start to go through the list of how you got to these highs, even at the end of last year. And you go, okay, so we had the election. The Fed has already started cutting by the time you go into the election, and Powell continued to cut all through the end with every intention to keep cutting. You saw them do it. You saw a level of conviction. They did 50 basis points in September, then very clearly told you they're going to do 50 basis points more November, December, and did them. So okay, the election is done. You're not afraid of the tariffs. If you were, you'd be falling already. You didn't get afraid of the tariffs until much later. That was February. So you're not afraid of the tariffs. The Fed is cutting. You're going to get tax cuts. You're going to get deregulation. I mean, what's not to love if you're the stock market? Go down that list now. The tariffs are an issue, clearly. You see it. The business confidence surveys, the consumer confidence surveys have been screaming about it for half a year. It's starting to show up in consumption. It's starting to show up in labor markets. Okay. Fed's not cutting. And that's probably a much bigger consequence of the tariffs than the tariffs themselves. And do you have deregulation? And do you have tax cuts? Well, that's increasingly stuck in the mud, confusing, and uncertain.
Well, the tax cuts, to be clear, unless you're in the 90th percentile plus of income earners in the country, you're getting a hike on your taxes, basically.
Yeah.
Right. So just like,
and the tariffs are a tax hike onto themselves.
On people who consume more than they save or invest. So it's consumers, middle income, lower income consumers, just net from these policies, seem like they're going to be hit. Bond market here today, though, continuing to perk up, continuing to round up. You mentioned that the Fed's not doing much of anything anytime soon. One of my working theories here, Ilya, which you've entertained me with, and I think you subscribe to it as well. I don't want to put words in your mouth, but when you think about the reflation trade in bonds post September's 50 basis point rate cuts, and so a Fed that's kind of curmudgeon-y and stubborn that refuses to do anything in the short term prevents easy monetary policy from reinflating an economy too quickly. And so net probably good for bonds as you kind of edge up. And this week, you can look at the Wednesday candle. It wasn't perfect. Tuesday was
a little something.
Will we stay long going into the Fed? Yes, for that aforementioned reason. It hasn't been a huge surge. But the short put spread, I'm still playing also a long out of the money call spread. I think I need to roll that. This just needs more time to play out if that's the interpretation. Yeah. But either way, like leaning long deltas here in ZB continues to work. And then in notes, I'm a broken record here. This thing is sideways. It's choppy. It's between 110.5 and 112.5. And as you get closer to the 50% mark of the yearly high-low trading range, why do anything else other than look to be directionally neutral? It doesn't really make sense to me. So that's what I'm doing. I'm going to continue to do that. I don't think this week's price action has done anything to deter me from kind of keeping a steady hand on the wheel when it comes to notes and bonds.
Yeah, I mean, notes and bonds are not supposed to move fast. It's a strange world when they do. And so for me, nothing is really changing that quickly, but nothing is broken. We set lows in mid-May. We're crawling higher. That's what bonds do. They crawl under normal circumstances. They're not supposed to go haywire all at the same time. What happened in April was not the thing to benchmark against as far as speed of revaluation. So, especially at the long end. So, I'm long the long end here, and it's begrudgingly going the right way. So I don't really see any reason to do much of anything, but just sit and let it do its thing.
Sit, let it do its thing. Next week with the durable goods, the PCE, perhaps there's some interesting movement here in notes or bonds, but they're not really fulfilling a safe haven role. And curiously, as oil vol has come off here into the end of the week, notes and bonds have been able to move up. Perhaps that's indicative that they've been very sensitive to inflation expectations passing through, thanks to oil. Here's something that I've been thinking about the last few days, Ilya. If the Federal Reserve thinks that inflation is going to be a one-off impact to because of tariffs, right? Yeah. You're going to get that, inflation's going like this, tariffs, one-off price rise, and then you resume at the aforementioned or the previously scheduled programming in terms of the rate of change. Yeah. The Fed's main concern is ultimately the pullback in growth. At what point do you think the Fed can say, is that next month in July? Is that in September? Where even if this July 90-day pause is kicked down the road, they're going to have to make a decision like, okay, well, the inflation's not necessarily materializing yet because we still don't have anything firm, but that uncertainty is weighing on the labor market. You are seeing continuing claims and jobless claims move up. Initial claims are now like 38% of the past cycle's highs, right? And that historically is you're starting to get into a territory when initial jobless claims reach like the halfway mark of the previous cycle highs. Are you in recession? Yes, every single time. So it feels like the Fed is going to have to at some point say the tariffs, we have to cut.
Yeah.
At what point does the tariff excuse run out for the Fed?
I think if you get very kind of simplistic about this, you can really see it. The Fed, I don't think, has any intention of changing its expectations for what it's going to do for this year. It's too late in the game. We saw last year when the Fed said, we're going to do 100 basis points this year, and here's 50 basis points up front, and there's 2 meetings left. You do the math. And they asked Powell directly, so are you going to cut rates in November. He's like, look at the S&P for God's sakes. Just look at it. We told you 100. We just did 50, and there's 2 meetings left. Powell never says to take the S&P seriously, but here he was like, I mean, are you reading the thing that we just gave you? Can you do the math for how many meetings are left? Stop it. I think we're going to get to a point here as the clock ticks down where you're just going to run into a place where the Fed's got to do the thing it said. And it just reiterated again, we're doing 50 basis points this year. I think you're going to get those 50 basis points. And I think as the timeline ticks down, you're running out of when they're going to get delivered. They're not going to get delivered in July unless there is some sort of insane emergency. So baseline, there's no meeting in August. You get one in September. You get one in December, or you get one in late October and you get one in December. Which version of it is ultimately doesn't matter. You're compressing to where you don't really have much room but to do the two unless there is some sort of, again, insane emergency, which we're going to have to do that live, essentially. So if there is an emergency, obviously all of this prognosticating here in normal circumstances goes out the window. So emergency aside, of course the Fed's going to cut. They have no choice, and the calendar is contracting on them. I think the larger point of speculation is what happens next year, where there is now a 25 basis point disconnect between the Fed and markets. They clearly think the inflation is going to be longer lasting. The markets clearly think it isn't. And there's a conflict there, which is what makes trading the long end so interesting.
You mentioned the cuts evolving. They're certainly evolving. We're getting fewer on the calendar for the end of this year. We're getting more through the end of next year as the market kind of conceptualizes what the rest of Fed Chair Powell's term looks like. Yeah. I think there's a certain point, though, where if the Fed told us coming into this year we're going to cut 2 to 3 times, and we're now at the halfway mark, and this inflation bugaboo that they've worried about, as a short term, let's see how it impacts things in the short term so we can figure out if it's worth cutting in the long term. The short term impact isn't there. So then they have to start to.
It hasn't come.
They're going to have to start to take the risk soon.
Well, and they asked Powell about this, right, in the press conference. They go, well, you were worried about the inflation. Where is it? He was saying, well, this takes time to work its way through the economy. And that it hasn't shown up yet in that context starts to explain why they took a cut out of next year. Because they go, okay, it'll take time to absorb. Who knows when it appears, but can we confidently say that 6 months in, it definitely won't? Well, obviously not, because of these 90-day pauses. Who knows? You kick that out again and you make another cliffhanger? More uncertainty. Not just uncertainty for businesses, uncertainty for the Fed as well. Because it takes 12 to 18 months for a single rate cut to work its way through the economy. They don't have the visibility on what's going to happen with the tariffs. How do they make that commitment? Only if they are very careful, and only if they back themselves into a rhetorical corner, as they seem to have done with, and maybe on purpose, with these 50 basis points. I think they understand they need to be, they can't tell the markets it's a full reset and we don't know and it's meeting by meeting, because then everybody's going to lose their mind. They have to keep some amount of cuts on the board.
You're not losing your mind over the Fed already?
I mean, that's me. I'm a special case.
It's already gone.
Yeah, it's been gone.
Right, that's the secret. Ilya, you mentioned the Fed here. I can't help but put together the puzzle pieces, and it makes me less optimistic about gold than I've been in a long time. I kind of like days off in the middle of the week because I still think about work, but I'm not actually having to focus on trading. And so I will say that when you look at gold, it's the most crowded trade in the market right now, according to the B of A Fund Manager Survey. It's also a very large net long position in the futures market here, according to the CFTC COT report, which we will get another update later today, 3:30 p.m. Eastern time. Everything's going right for gold right now, isn't it? Geopolitics are raging high. The U.S. dollar's role in the broader economy is in question. Does gold feel a little heavy here to you?
A little bit, but the way that I structured my exposure here is actually giving me some help, because the way that I am long here is short puts. And so as volatility leaks out of gold and sort of concerns about this Iran thing becoming a bigger issue, as they come out of the price, that is helping me more than the progress in the underlying asset, as it were. Because the underlying asset is kind of anchored, but vol is coming out of it, and that's helping with the way that the trade is performing. So it's giving me a little bit of time to kind of sit back and go, all right, I still got a good 28 days of duration in here. What's this thing going to care about more? But if the Fed's not cutting, if the message from Powell next week is, listen, I don't know how many times I need to tell you, but the hump in inflation that we thought was going to come hasn't come, and it's not because we're wrong, it's because the tariffs got delayed. So we don't know what to tell you, but unless the economy looks broken, we're not going to break it ourselves. So there's no cuts until either we know what's going on or something breaks.
Right.
Have a nice day. That's a terrible environment for gold, because it means yields are going to be stickier and gold's not going to like it. On the flip side, if the markets decide, as they did last year, to look at Powell and go, yeah, we don't believe you, you're wrong. And by the way, the markets won out last year. The markets were yelling at the Fed from about April through the mid-September cut. You are not dovish enough. And then the Fed came out too dovish and quashed speculation. But all into that thing, bonds were rallying at the long end. The dollar was getting sold. Gold was well supported. It could be that Powell comes out next week and goes, you're not getting these cuts, everybody. And the markets goes, right, sure we're not. And starts to move out bonds higher at the long end and starts to bid up gold and cuts off this attempt at a US dollar rally, because it says, we're just going to speculate on more cuts later because obviously you're off sides here.
Mm-hmm.
So that's another scenario. So, and it's a plausible one. We just saw it a year ago. So I don't see any reason to kind of borrow from the Fed's headspace to jump in front of anything. Right now, we're basically consolidating at former resistance turned support. There's a big range top in front of us at about 3,500. We haven't made up our mind. The bias appears to point higher, and there's key resistance there that's capping. Let's just wait and see.
The one thing about gold the past few weeks, it's been hugging this 1 month moving average as it slowly glides higher, and we're doing that here again today. So from my view, it's difficult to give up on any long delta positioning right now, because it just seems like the market, in terms of the technical cadence that's been followed, it hasn't been totally disrupted yet. But it feels heavy. Longer term, I think the narrative flexibility is there. The U.S. is running too large of a debt, too big deficits, the dollar's being undermined, right? All that stuff is long-term positive for the story of gold. Let's say it goes the other way, Ilya. Let's say the U.S. government does go full Doge and starts cutting costs and we run a surplus. There's going to be not a lot of dollars out in the system for people, right? And what have been people reaching towards as an alternative to the dollar for their reserves? Gold. So it's difficult for me to get really bared up right now, but tactically this feels heavier than it did. I'd say it feels heavier than it did here in April or even in May.
Yeah.
Something about silver is a different nut to crack, though, because this is perhaps the pullback that people were waiting for. We see that we're challenging some of the highs that we've had in recent months. Going back to what we had at the end of October last year, we have the highs here in March. It's a zone right around 36. We haven't broken it, though. Silver was a big winner this quarter. I think that's worth noting. Right? We're going into OPEX. We're going into month end, into quarter end. People could just be taking profits here. What's your take on silver at these levels right now? Because that's a nice little wick that's been forming here over the course of the day.
I mean, at the end of the day, I think you still have to look at this as a challenge to a breakout higher rather than a topping signal, but you're getting awfully close to a topping signal. So if there's one thing that I would not be doing, it is jumping cavalier long, thinking that this is definitely not a turn. I think when you look at the higher highs in the price action and the negative divergence in the oscillators, it doesn't matter which oscillators. You have slow, stochastic, and MACD here. I look at RSI because you could draw it with a crayon. But either way, you're going to get the same thing. It's fading. The technical structure doesn't look great. Do you have a confirming top here? No, not yet. I would argue you'd have to get through, let's say, 35 or so. But right now, what you definitely don't have, I think, is a clear, this is a dip you should be buying kind of a setup. Unless, let's say, you anchor right here and you get a few of these doji candles, not unlike the ones that we saw before the latest rip higher, which is now failing, right? It looked like you had a break, consolidation, and continuation when you got north of 36, pulled back, held it with a bunch of doji candles, then you had a big green rip that took out that whole structure and ostensibly broke a range higher. Well, that rip is failing right now. So maybe we need a secondary attempt, or maybe this is a secondary top. And we just don't know at this point. So we need to see it find support here. It needs to hold.
I'm leaning short still in copper. Copper here, I was hoping for a little bit more of a pullback towards the bottom side of the range. It's not exactly materializing, although being short a call spread, I just need this to kind of bleed off for a little while. I would say that the sideways chop off the high that we had on June 5th, it's kind of working. It's not.
Hey, Chris, you're muted.
It has. So this is a good place to hide out if you want to avoid geopolitics right now. It's tariff sensitive, but it's not Middle East sensitive.
No, and you probably need maybe China intervening or some kind of a thing. And I don't think they have any appetite whatsoever. Copper is just not one of the commodities that's in the immediate purview of this thing. So if you were going to do anything, then I think taking a sideways approach, even though the IV rank isn't terribly high here, not a lot of the stuff happening around the world economy and around the conversation is a distinct risk to copper. You would need for there to be either something that's China relevant, or you would need something that's global growth relevant. So if you start, to our point about consumption earlier, if you start to see that consumption in the US is giving way, because you're back to the same story as you were all of the second half of last year. The U.S. is the only engine powering anything. Everything else is stuck. This is the single point of failure again. We reaccelerated at the front of the year around attempting to front run these tariffs. So if this now gives way, as some of the data is starting to suggest, then you have a copper idea, because then there's a global recession risk, and you're going to get new PMI data on Monday. So this could be live very soon. But for now, none of it is just relevant to what copper thinks about.
There's a report here from Israel's Channel 13 News that Trump is close to ordering an attack. I pulled up oil here because that came out about 6 minutes ago. And you start to see oil move up here from about 73.60 to where it is now back above 74. It is only an 88 IVR though, and I suppose that's the story of this week, because we did hit a high of 142 and change, 142.22 here on the 17th. And vol has started to come in, right?
Yeah.
One thing that's notable about what Iran and Israel are doing to one another is Israel's attacks against Iran's energy infrastructure are more about their refineries. And that's oil that would ultimately be consumed internally in Iran. And so if Iran can't refine its own oil, it's just going to have to sell it abroad. The export facilities have not yet been attacked here, which is part of the reason why I think this is still something worth fading. I do have my short call spread on here, Ilya. I'm leaning against it right now. It feels like we have to fade the move in oil. I'm rooting against World War III personally. So I think fading the move up here is the right thing to do. But the headlines are something to consider. And if you're going to be trading this, just mind the gap. Because when we get to the market on Sunday open, you're going to be on first call. I'll tell you, I wouldn't be surprised if oil is the single biggest mover on Sunday.
That would not be surprising at all. I mean, I think this is a really interesting spot to be fading it. It's a very attractive spot. I'm looking at something similar as well. I'm willing to wait and let it have whatever hair-raising spike it might on Sunday, if it does. And then ultimately, if that spike fails and doesn't hold at the U.S. cash open, well, there we go. We have our signal. I'm leery of holding any exposure here over the weekend that I haven't initiated already. I would not be getting out of it, but I don't have anything on right now. And so I am going to just take a little step back here. I got out of my short position before this thing kicked off because there was a helpful little nudge through that range top a good 3 days before the big spike. And so once you got through the range top and you closed above it, I said, oh, this is not the trade I thought I had. Okay, goodbye. And so I got out. Thank you, markets. Thank you. That was great. Watch the tape, everybody, and watch the charts. If you suddenly have a trade that you thought you had, but now it's a different trade, well, then there's no point to stay in it because you no longer have the same thing that you thought. So I want to be fading it. I just don't want to be fading it here and now. If we ultimately start next week with a vector to fade it, great. It's a very obvious place to do it. I am mindful of the fact that the president likes to do things when it's inconvenient for others, efforts to sort of circumvent him. And there is a European meeting of European leaders with Iran this weekend to try to walk this back. What a great rug pull in the president's style to get involved as they're doing that. Not unlike front-running his own people to give Israel the green light on something right before Witkoff meets with Iran. To keep talking.
So Witkoff is in touch with the Iranians, with Qatar serving as an intermediator right now. According to Reuters, that headline came out like 15 minutes ago. The Gulf states are trying to get involved to push for a settlement. But Witkoff and I think it's Arghachi, the Iranian counterpart, he is not talking to Witkoff directly. So this week is going to be interesting, is the point. If you're trading energy right now, you have to give yourself a little bit of a leash here. As for me, outside of oil, the short put spread of natural gas is still on. We broke above like 385. We've been talking about the 385, 340 or so range. That was back in the prior contract. We now move into Q5, so that's really 350 or so. So you have your 350 to 390 range. We're still holding above there. I'm just playing for theta burn at this point in time because it's in the money. I'm not really concerned about today's pullback, although, look, if you were looking for a place for this market to turn, I suppose this is a good spot as any for it to have pulled off here. And I know it's a level that Jamal and I have been talking about recently. You have a pivot low from early March and then swing highs that you have here in April and again in May. We kiss that today and then we sell off. So it still looks like a range ultimately. The range looks a little bit bigger now, but this just looks like a sideways trading range for natural gas, and we're at the top side of it. So if you really want to get bulled up, wait for 4.2 to break. Otherwise, chop, chop, chop. It's a 59.2 IVR. It's not oil, so it's not directly related, although Iran is a major producer of natural gas, 6% of the world's gas supply. And if they can't export it, well, if they can't consume their own because their infrastructure is destroyed, they have to buy more. And so that's more demand on the global scale that wasn't previously accounted for. Ilya, we only have about a minute here or so. I do want to quickly brush into the currency world where the euro just popped into a fresh session high. It's back at 116 here, and it is rallying off of that 1 month moving average. You see the same thing for the pound today after that nasty reversal 2 days ago. The retail sales report doesn't do anything. I suppose the good news...
Neither does the BOE, by the way.
Right. This is interesting to me that the yen is weakening, right? The yen is getting weaker. U.S. yields are lower. Stocks aren't exactly trending higher. I think this is just so symptomatic of this being such a crowded trade right now.
Exactly.
Which is my own feelings have been like, I'm not touching long yen with a 10-foot stick right now because of how crowded it is, and I hate being
I
in
took
crowded
my
trades.
profits on there as part of me cleaning up my dollar exposure. I took profits in yen, in the Canadian dollar, which made a great run, in the franc, which made a great run. And you were just showing the euro and the pound. I'm short those now because I think this now looks like a break and retest. You get a little minor range that got broken. You're retesting its underside, but holding it. Looks like maybe the markets are giving you a bite at the apple to go again. I might actually add somewhere around here, depending on how we start moving into the close. I might actually add short and more long dollars. But it seems like you had this thing pegged. It is starting to look like, against all odds, the dollar is overcooked on the downside and has room for a correction.
Oh, and if it's overcooked, right? And we know that the sentiment is so bad. That same survey about, the most crowded trades this week, top was long gold, second was long mag 7, third was short USD. If you see a reversion where long gold positions profits taken, right, the short dollar trades profits taken, higher dollar, weaker gold, that's actually two sides of the same coin.
Yes.
From a certain perspective. And so the fact that gold is feeling heavy, the dollar appears to be attempting to bottom out here, it really could break the downtrend.
Stocks are listless.
Right? It's tactically
starting to smell like something.
Yeah, tactically, it feels like the dollar could bounce. What's next on the calendar for Monday, which is a busy day? There's a bunch of S&P PMI data due out, including here from the U.S. The S&P Global
Check out
PMIs,
yesterday's
of course.
macro money on demand. We talked about it.
So that's, this was one of the catalysts back in February that kicked the market into its growth decline. Yeah. It's obviously been a little bit perkier recently. So the PMIs on Monday, probably the more important event of the day outside of, that's actually probably the most important event of the day. Beyond that, though, Ilya, you and I are done here for today. I'll be back later on for last call with Mike and Nick. Ilya, you'll be back on Sunday night for first call. So we'll see everyone soon. Good luck trading the rest of today until last call, of course, and I'll see you there. Other than that, I hope you have a nice weekend. After a brief break, up next, Dr. Jim Schultz with From Theory to Practice. You're watching Tasty Live.
You can get up to $4,000 when you open and fund a new account with Tastytrade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tastytrade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tastytrade. Make your move.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Global markets never sleep. Explore them with Forex, now available on Tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tastytrade.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tastytrade and Tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tastytrade. Genius loves company.
This is From Theory to Practice. Welcome to the show today. Welcome to the broadcast. Man, welcome to the Friday edition of what it is that we are trying to do. It feels like does it feel like a Saturday out there? Does it feel like a Sunday out there? Man, I really hope you guys enjoyed the Thursday holiday yesterday. And here we are back together again on a Friday, ready to get into the real weekend, not the synthetic version of the weekend that we all experienced yesterday. So thank you guys so much for being here, because it is only because of you all that we can do what we do. And so I thank you guys so much, man, for supporting my show, supporting all the other shows on the network. Man, it really is. It's only because of you all that we can do what we do. So thank you guys so much. If you're watching over on the Tasty Live Network, then I would actually bounce on over to YouTube. If you hop on over to YouTube, you can join the conversation and join the discussion, and you can communicate with your brethren who are also watching the show. Man, you can celebrate if you're a bull. You can commiserate if you're a bull. You can celebrate if you're a bear. You can commiserate if you are a bear. It is wide open season for everyone. And of course, you can hop in the chat and you can ask me whatever questions you might have. The earlier you get the questions in, the better it's going to be, and the higher the delta that will get to your question. Now, a little bit of housekeeping. We are extra long today. So once again, whether you like it or not, you can't stop it at this point. We are all the way to 3:15 Eastern, 2:15 Central. So if you do have a question for me, today is a great day to ask that question, because A, there's a slightly higher delta that I will get to that question, but also B, it helps out the YouTube algorithm push this thing out to more people and trick them into thinking it is actually quality programming. So Paul, bring us into the market. Man, let's have a look. What's going on in the old stock market? We got some things going on here. There's a little something cooking. Even the S&P's down 16. Got the risk-free instrument, also known as the NASDAQ futures, extremely high-risk product, down 88 on the day. Got the boomers down 30. You've got the Russell 2000 futures index down about 6.5. You got bonds up a couple of ticks. Man, you got notes up a couple of ticks. You got oil up a couple of pennies. You got UB40 up a couple of ticks. Got the shifties getting smacked around a little bit, down $24 on the day. And so I wonder how the Hunt brothers are doing. We'll take a look at that here in a couple of minutes, because we got nothing but time. Man, it's a Friday, 75 minutes, man. We got nothing but time. And I got myself an ice cold Natty Light Ice just waiting for me when this show's over. In fact, it might even happen during the last 15 minutes of the show. We might not even wait for the show to be over. You just have to tune in to find out. You got the British pound is up. You got the euro is up. You got volatility is up. Volatility futures up 23 cents. And then you got the VIX. The old VIX, VIX. This guy is getting smoked today. Down $1.64. So you actually have VIX down, volatility futures up, and a pretty wide dispersion there, a pretty wide disparity. And so it could have something to do with, I think VIX expiration was Wednesday, a couple of days ago. And so, you've got the spot volatility and the futures volatility, they're kind of clustering together. They're kind of converging on the same, the same point at the same moment in time. That happens on Wednesday morning. I think it was just 2 days ago. And then after that, they kind of let the zoo animals out of their cages. And now all of a sudden, everything can just kind of run wild and do whatever it wants. That's a very scientific way of explaining it. And it probably highlights the fact that I'm not a volatility bro. I never even brand myself. I've never branded myself as a volatility bro or bro set. So, all right. So there's a little bit of market commentary for you guys. I don't know. Is that going to help you? I don't think so, but it's pretty much on par with what you would find elsewhere. All right, so what I want to do though, there's a couple of things in the portfolio I want to talk about and address, and then that'll probably take us, 25, 35, 45 minutes maybe, and then we'll get to you guys. We'll see where you guys are at out in the YouTube world. I see you guys already in the chat. Man, look at you guys. Emmett Morrison's in the house. Sam L's in the house. Sunflower's in the house. Man, even tastylive is in the house. Tastylive pumping the YouTube algorithm. Good job. That could be Paul. It could be James. It could be Ryan. It could be Laura. It could be a bunch of people. It could be a lot of them. It could be Frankie Walsh working a little overtime today. He's usually on the morning shift. And so that could be a number of people. It might be Josh, but Josh is kind of, he's a little bit more he's a little bit more lackadaisical than some of his counterparts. I wouldn't think that it was him. But I see Greg Lutton's in the house. Emmett's in the house. Man, look at you guys. I'm going to get to you guys here in a couple of minutes. All right. So let's see. Where are we at? So, okay. So first things first. We have to, in the interest of fairness and in the interest of, being, as transparent as one could possibly be, we have to go to, let's go back 7 days. We did do an SPX trade on Tuesday for FOMC Wednesday. Now, look, guys, I'm shocked that we survived. I am shocked that we made it through. Did you guys see the conference? Did you guys actually see, when Powell came out to take the podium? So, the way that it works typically on Wednesdays, I'm not really able to watch too much of whatever Powell does on a Fed day because I'm getting ready for today's assignment with Errol. I'm getting ready for the show with him. I'm preparing my thoughts and my notes and whatever, just trying to think about, the conversation we're going to have that day. And so I don't usually have a chance to look at, Powell before the show. But I was so curious this time. I'm like, all right, guys, he's got a Cal Ripken type of streak at this point in terms of the purple tie. I'm like, it's 37 appearances in a row. It's 49 public appearances in a row. It's unbelievable. It's unprecedented. So I'm like, I've got to see. Is he going to go neon green? Because we talked about this on Tuesday. I'm like, is he going to go neon green? Is he going to go glow in the dark tie? That would just be an absolute power move. He knows we're all looking. He knows that that's all we're interested in. So I'm like, is he really going to throw us all for a loop and just really kind of just flip the script on us? So I had to know. So I'm sitting here and I'm watching on my extra monitor. And you know how typically the way it works is the way the camera usually is, you see him walking out and then it zooms in when he takes the podium. Well, I'm watching him and he's walking out and I'm like, wait a minute. I'm like, that looks like a super dark tie. It's not neon green, so I was a little bit disappointed. It's not fire engine red. I was like, okay, that makes sense. But I looked at it. I'm like, he went black. I'm like, I think my man went straight Mr. Wonderful black tie. I'm like, wow, that would be amazing. Then he took the podium, and I looked a little bit more closely, and I'm like, wait a second. That's not black. That is still unbelievably so in the purple family. He went the darkest purple he could find. My man went the darkest purple that was in his closet, I can assure you. And so the streak is intact. It's now 51 consecutive public appearances that Jerome Powell has worn a purple tie for whatever he might be doing, FOMC, Grateful Dead concerts, whatever it is. My man is always doing the purple tie. I can't believe it. It's absolutely incredible. Well, anyway, getting back to the business at hand here. Our SPX butterfly, it did not fare as well as Powell's purple tie did. And so you can see that we did this butterfly to the upside. We never really had a chance to take it off. I mean, I was monitoring it, kind of loosely. I didn't have it like up on my screen because obviously, I mean, I'm in today's assignment. And then when today's assignment is over, I kind of have end of the day duties that I have to get to. And I'm not always able to kind of be in the markets. I usually have an eye on what's going on because I'm curious as to, what might be going on. But I knew that this thing it did not have a heartbeat anymore. Like it didn't even have we put the shock pads on it. We put I was going to say cables, but it's not cables. We put the lines in it. We did all the things we could do, even the things I can't even think of, to keep this thing alive, and it just was not going to make it. And so if we look at if I go to SPX here, let me go to SPX. Let's look at a chart of SPX just to see kind of, what it looked like on the actual day. So if I go to, that's a daily. I don't want a daily. Give me like a 5 minute. Let's do a 5 minute. Let's just do like a 5-day chart. Let me see if I can figure out. So when was Wednesday? So today's the 20th, right? Yeah, so today is the 20th. So let's do some real quick live calendar math, which is harder than you would think. And you may not think, Jim, calendar math is never hard under any circumstances. But au contraire, mon frere, if it's live and there's no takebacks, calendar math is a little bit tricky. So if it's June 20th, here, I'm going to do it up here. If it's June 20th and I need to go back 2 days, where does that take me to? That takes me to approximately, because you can never be sure. That takes me to June. It takes me to June 18th. All right, so there we go. So we did our calendar math. Again, I'm no Julius Spina, but I think we're close. June 18th is right down here. So that means I'm going to be dealing with, this region of prices. This is all very, very high level, using all the technological resources that are at our disposal here inside of Tastytrade, namely just the Final Jeopardy pen. That's pretty much all we're using. So if we go into shout out to the Final Jeopardy pen. I haven't mentioned that in a while, I don't think. So if you look at 2 o'clock, where's 2 o'clock? So now I need to actually zoom in a little bit. That's going to mess up all my lines. No, I don't want to zoom in. Hold on. So 2 o'clock is right here. It's this candle with the big wick on the top there. So you can see, I mean, our strikes for the SPX butterfly, let me just grab my Dia Strawberry. They're like way up here, right? They're all the action was like up there. So you can clearly see that once, the 2 o'clock number hit, or the 2 o'clock print happened and the number was released and there's no change, and then I believe the transcript of what Powell's even going to say is also released at 2 o'clock. I'm pretty sure. Can somebody check me on that? I'm like a 95 delta that's correct, because all the algorithms go crazy, all the Bloomberg terminals start lighting up, and all the retail traders at home like doing it, pen and paper. Everybody starts going berserk at 2 o'clock because you get a feel for and you get your hands on what Powell's going to say. And so then of course the Q&A can go in any number of directions, much like our own Q&A here on the YouTube chat. But at 2 o'clock, we got the number, and then you could see it chopped around, and then it went down, obviously. And then, there was a little bit of a rally, overnight with, different things coming out from the Middle East and, the U.S. response or lack of response to what's going on abroad. But anyway, I just wanted to show you guys. I didn't even really have a chance to take this off for any type of profit. And so normally when I do a trade on Tuesday like that for like a Wednesday Fed, we'll talk about it on Thursday. But of course, yesterday we had the holiday, so there was no Thursday show to talk about this. So we had to spend, at least a few minutes on this here today. And I think it was a worthwhile use of our time. I mean, I can't really think of a better use of our time. And so I think that was good. So that's SPX. Okay, so we did SPX. Now that the bad news is out of the way, now that the gotcha is out of the way, let's turn ourselves to some gimmies. So number 1, Gilead. Number 2, SLV. Man, look at this bazooka short in silver. Oh, yeah, look at the Hunt brothers. I forgot to bring them up, but SLV down 53 cents. So that means that silver futures are probably also down, maybe about the same. Okay, so they're actually down 91 cents. So silver got really hammered today. Wow, that's interesting. So again, I think it was Tuesday when we looked at this, and gold was up and silver was down, or vice versa. I can't remember which one it was, but they were not following each other, and they usually do follow each other. They pretty reliably do follow each other, in terms of the direction. The magnitude can be different, but it's pretty rare that you would actually see one up and the other one down. And so that is what we saw just the other day. And so today, to have gold down, right, Gold's down 25 points, so less than 1% though. But then have silver also down, but down more. This is the default setting when it comes to the metals. This is what you normally see when it comes to the metals. They're going to move in the same direction, but silver is going to have a bigger move than gold. So on an up day, silver is going to make more than gold makes. On a down day, silver is going to lose more than gold loses. And that's what you see here today. But again, just as we saw the other day, these things are living and breathing entities. These things are independent entities. They don't have to follow each other, and sometimes they don't follow each other. Like usually they're going to move in the same direction, but that doesn't mean it's going to be lock, stock, and barrel and just happen every single time. And so for gold being down, silver being down more, that makes sense. But guys, take a look at our guys, listen. I feel like we should just be selling in the money calls. Like, why are we even messing around with anything else? It doesn't even make any sense. Like, we're talking about vertical spreads and condors and FOMC and dark purple ties. We need to forget about all this nonsense because we sold an in the money call on Amazon and it worked. We just sold an in the money call on SLV and it's about to work and be booked for a profit. Like, I don't really know why we're doing anything else. Like, I really feel like we just got to go with the hot hand fallacy. And, you just got to shoot from strength, as Tom Sosnoff would say. And I don't think it gets any stronger for us than an in-the-money short call. And so for SLV, and if you're brand new to the show, by the way, that is my very, very mediocre attempt at internet sarcasm. In-the-money short calls can be very, very difficult strategies. So I don't really think it's something we're going to do too often, probably just like 3 or 4 times a week. So SLV, we are short the 33 call. You've got the stock down 50 cents today. So we put this guy on for $1.63. It is currently marking at 81 cents. And so again, I'm no Jacob Perlman, but this looks like about 50% of max profit. Like this looks like the trade is done and dusted. Like I don't really know that we need to do anything else in here. I don't really know that we need to talk about this anymore. Oh, actually, you know what? This is actually so this is a very, very good time to address something. This has actually come up a couple of times in the YouTube chat. I think in just the last couple of weeks, or maybe it's email. Sometimes I get the two mixed up. When you have a winning trade, some traders have suggested, hey, I have a winning trade. It doesn't have to be a short call, obviously. It could be anything. It could be a vertical spread. It could be a strangle. It could be whatever. I have a winning trade. I really like my position. I really think the stock, whatever it is, silver, Chipotle, Oklo, whatever, I really think it's going to continue in the direction that it's been going. So I would like to keep this trade on and push for more. Let's press our luck. No whammies, and let's just see if we can't squeeze a little extra juice out of the orange. Should we ever consider doing that? By and large, no, I don't think you should do that. Because when you start to do that, you're changing the dynamics of what it is you originally signed up for. Like, keep in mind that what we generally do, just kind of writ large, like just zoom out a little bit and think about what it is we're trying to do. We're trying to sell out of the money premium. We're trying to trade high probability. We're trying to sell high volatility, like all those things and so on and so forth down the list, right? One of the things that we also do, and I just talked about this recently with Tom and Tony actually, we manage our winners and we give our losers duration. That is like one of the core axioms of what it is that we are trying to do. If you start to kind of upset the apple cart a little bit, where now all of a sudden you're not managing your winners quickly. You're actually trying to push the envelope on your winners so that the 50%ers turn into 60%ers, turn into 70%ers, and so on and so forth. I really feel like you're going to all of a sudden find yourself in a brand new kind of paradigm shift where like all of a sudden you're not really going after modest winners, and a number of them you're actually not necessarily swinging for singles anymore. You're not necessarily swinging for doubles off the monster. You're saying, you know what, I think I can hit a triple into the triangle. Like, I think I could put one into the cheap seats, just like Roman Anthony did last week for his very first home run. Now, of course, that wasn't the last hit that he's had in the major leagues, but hey, we got time. Like, there is no rush, very similar to your trades. But when you think about managing your winners, I personally think if you take a trade that's worked and you try to push the envelope, you're starting down a slippery slope. you're starting down a slippery slope where now all of a sudden you might find yourself in this weird spot where you're like, man, I don't even know how I got here. Like, I can't even really remember what I'm trying to do. Like, am I trying to get quick winners? Am I trying to extend my losers? Am I trying to extend my winners? Like, I just don't think it's a good habit to start doing, because in the end, like, you know, whether or not you go for 50% or 60%, it's not going to make that big of a difference. Like, whether or not one time you take a 50%er and push it to 65, is that going to make a big difference? It's not, right? But again, we're thinking about longevity here. We're thinking about the long term. Like, you know, I don't know about y'all, but I'm thinking about this week, this month, but I'm thinking about this quarter. I'm thinking about this year. I'm thinking about the next decade, right? Like, I'm trying to kind of forecast out, like, all right, what does my trading career look like, you know, moving out deep into the future? And I would strongly encourage you guys to do the exact same, because when it comes to building up your mechanics, improving your skills, improving your abilities, that's the type of time horizon you should have. Like, you shouldn't be thinking about today. You shouldn't be thinking about next week. Obviously, all your decisions are going to be focused on today and next week in terms of on the front lines. But it's like, man, you want to build yourself a system that can be repeated over and over and over again. And you can just run through iteration after iteration and then come out on the other side with the results that you were going after. Well, if you're constantly kind of changing the inputs and changing the parts and rearranging the system and all those kinds of things, it can be very difficult to know, okay, what's working and what's not working. Unless you take like meticulous notes or keep a very detailed journal, which I know a lot of you guys do, but that can be very difficult to do, because that's a huge commitment, right? Especially if you trade very actively. Like, if you're trading multiple times a day, every single day, it can be very, very difficult to keep a trading journal. I think it's a good exercise for new traders, but I'm also aware that it's a pain in the rear, kind of in a league of its own. So anyway, that's SLV. Somehow, man, I got on a soapbox. I was on my soapbox and found a second soapbox there. That was kind of amazing, actually, I have to be honest, especially for a Friday. That's more like a Monday thing. But anyway, I digress. Off of that digression at this point, let's close out of SLV. This show's almost over. This is crazy. We've got extra time and extra wide lanes, and this show is almost over, man. Man, they cut me loose on a Friday, and this is what you get. You know, sometimes you get Natty Light Ice on the show, and sometimes you don't. You just got to tune in to find out. So let's go ahead, SLV. I could have a Natty Light Ice in my water bottle. You guys have no idea. All right, so it's a little extra bitter today. So let's go ahead and I don't have Natty Light Ice in my water bottle, just for the record. So let's take off SLV. All right, beautiful. So SLV is a winner. Now let's turn our attention to Gilead. All right, so Gilead, another nice looking trade. You know, I mean, this is how you draw it up. I mean, I know that we just got on the charts and we were looking at SPX and we're talking about Powell's tie color and we're doing all those things, and it's like, all right, SPX didn't work. Gilead, however, this trade worked out really, really, really well. Now I'm going to take it off in a second, but if you could allow me 4.5 minutes to pontificate about this trade, I think I will. And so June 3rd, we put this trade on for 409. The strikes were 100 and 120. Now you can see right now the stock price is 109. It's basically in the perfect possible spot. This guy is sitting perfectly right where we essentially want it to be. So that's amazing. Now let's look though, because today is June 20th. So we've had this trade on for about 2.5 weeks. If I go into the chart for Gilead and I go back to my daily frequency here, and let's go back, like, you know, do like 3 weeks. We don't really need too much time. Oh, that looks really, hold on, I need more time than that. Let's do like we'll do like 6 months. That's fine. So June 3rd, I'll zoom in a little bit. So June 3rd. Okay, so it's right here. Okay, so hold on. So this is where this is the price action that governs the time that we were in the trade. So you actually, hold on. Can I actually, yeah, let's do this. I want to get my 120 strike on the screen. Okay. So my 120 strike, let's grab some Miami Dolphin teal here. My 120 strike is right there. You can see we never even got close. The top of my circle didn't even get to the line. And the top of the circle is way above how high the price actually got. So we had a 120 call. We also had a 100 put. So look at this. I mean, if you bring this all the way over, that's crazy, right? Never even got close. You bring this all the way over, that's crazy. Never even got close. I mean, when you sell a strangle, guys, if you're brand new to the show, hey, welcome aboard. If you're still watching, that's unbelievable. You are my absolute favorite. If I haven't turned you off by now, that's amazing. Maybe you're a lifer now. Maybe you'll stay. That would be incredible. If you are brand new and you sell a strangle, use this as essentially the textbook definition of what you want to have happen. You want the stock to just exist. You want the stock to just kind of putz around a little bit around its current price, not give you any heat on either side of the strategy. You're not testing the call strike on the upside. You're not testing the put strike on the downside. It's just hanging out. The theta's burning, the extrinsic value is decreasing, and everybody goes home happy. That's exactly what happened to us right here and right now. Now, sadly, every trade can't be like this. Like, unfortunately, we do have some losers from time to time. I mean, I don't have too many on the show, only about 70 to 80% of the trades that we do. But this Gilead trade, man, if you are selling strangles out there and you're brand new, this is exactly what you want. You sell the put below, you sell the call above, and then you essentially want the stock to stay right in the middle and in between both of those strikes. And if that happens, you're going to have a very easy winner on your hands, much like we had here with Gilead. So let's go in here, though, because I'm almost 30 minutes into the show. I really can't believe that. Like, that's really pretty amazing that we've already burned 30 minutes. And I don't feel like we've done very much. And so it's pretty much like every other day of the week for the show here. So if I go to Gilead and let's close it out. And then I want to get to one more thing on the old victory lap. All right, so we got Phil there, $1.53. All right, that's really, really nice. Okay, let's talk about Oklo. So, hold on. Let's talk about Oracle, man. Look at Oracle. Man, look at Oracle. Talk about getting smacked around. I mean, the shifties are getting smacked around, but Oracle also getting smacked around. Oracle down $3.50 today. That's a huge move. You know, you've got the indexes are not doing very much. I mean, I know that they've moved a lot and it's OPEX day and everybody's thinking about weekend risk, of course, because I think Trump came out and said, like, he's going to wait 2 weeks to make the decision. I mean, that could change 3 times this weekend. He may decide, all right, we're going to do it tonight, or we're not going to do it tonight, or I'll tell you tomorrow, or I'll tell you later tonight, or whatever. I mean, that's kind of what we've come to expect with him. And so the market obviously knows that. And so it's quite an interesting decision. Like, you know, if you have a lot of directional risk going into the weekend, do you keep that directional risk or do you not? Like, do you just say, all right, I'm gonna sit tight, I'm gonna stew in the filth, I feel okay, my sizing's in check, my this and that's in check, whatever, let's just go ride or die through the weekend, right? Or are you thinking, hey, I've had a really nice week, I've had a really nice quarter, I've had a really nice month, I've had a terrible month, I don't want to make it worse, to make it go both ways, of course, and you're thinking, man, let me trim some of this directional risk. It's quite an interesting little situation going into this weekend in particular, just because I do think that whatever happens in the Middle East, whatever happens with Israel and Iran, it's going to have a big impact on the markets in the coming weeks. And I don't know if that means, war is bullish. If it escalates, the market's actually going to go higher. The market's going to go down a lot. I think you could make a case for both, honestly. But I do think that if there is some resolution in the next couple of weeks, one way or another, I guess if it escalates, that's not really a resolution. But in a sense, it kind of is. I think the market's going to respond to that one way or another. So I could definitely see some bigger moves happening in the market over the course of the next, let's say between now and July 4th. That's about 2 weeks. And so this weekend, I think, is an interesting decision for a lot of traders. And so the market's been kind of chopping around, kind of going back and forth, trying to find its feet one way or another. But man, Oracle down at 1.5%. That's a lot. That's a big move for Oracle. And so we have a 180, 195 strangle on, and we are not going to do anything with this position yet because I feel like we're finally starting to get a little bit of cooperation from the stock. I don't really want to roll the put up and go inverted right now. I would like to just say, hey, let's sit tight. We have a lot of time in the strategy. We're all the way out to August. There's 56 days to go. That's one of the benefits of going into a longer dated cycle that has a lot of days, even more than 45, is that you always have the benefit of just, exercising a wee little bit more patience. Just saying, hey, let me just wait another extra day or two or week and just kind of see how things kind of shake out. And then I can make some decisions. So that's what I'm going to do with Oracle. I'm going to sit tight on that. But Oklo, kind of the reason why I brought up kind of the weekend risk stuff was not only because of the Oracle move, but like thinking about this trade. So this turned out to be a really nice trade. And this was, I think, from one of you all in the chat. So thank you, whoever it was who brought me the Oklo trade. I can't remember who it was. It might have been Scramble Everything. Scramble Everything brings me a lot of trades. I think most of them don't work, though. I usually lose money. So this is probably not his. But this could be Emmett Morrison's. I think Emmett Morrison usually makes me some money. He's lost me some money before, but I think he's made me some money too. So I just remember the good times, Emmett. But Oklo here, this is a really nice trade. I mean, we sold this for $8, and you can see the stock is cooperating quite nicely right now. right? And so all is well. Like everything is going extremely well in this strategy. I'm thinking about this though, and I'm like, all right, we're nowhere near the 50% marker. Like I would be buying this back for $4. It's currently marking at $5.50. We've still got a ways to go, but I'm like, all right, let me use a little bit of market awareness. Let me kind of understand where I'm at here contextually, and say, all right, I'm going into potentially a heavy newsworthy weekend where we could gap significantly one way or another on Sunday night. I could definitely see that happening. And so thinking about that and thinking, all right, I have a nice opportunity to take off some risk, to book a really nice profit. I mean, if you want to start talking about economic significance, which I love talking about some economic significance. I mean, this is extremely economically significant. Like, yes, you are not at your profit target yet. Yes, I would normally let this ride under normal conditions. But I think going into this weekend in particular, this isn't quite like a tariff weekend. Like the tariff weekend was like super crazy. This could just be a nothing weekend. Like I think the tariff weekend, we all kind of like knew something crazy was going to happen. I don't think we necessarily knew that the bottom was going to keep falling out like it did. But I think we all kind of knew like, all right, we're kind of on the edge of something one way or another. Is Trump going to reverse course over the weekend or whatever the case may be? I don't know that this weekend has quite that feel to it. But it's got the potential to be a little something. So I'm kind of thinking with Oklo here, let's just close it down. Like we don't have to think about this. We don't have to, we don't have to overthink this. We don't even have to underthink this. We can, give this the appropriate level of thought, which I think leads us to let's close it down. Let's close it down, and then we won't have to worry about that risk. And that just helps to kind of lighten the load of the overall portfolio. So let's go in here at maybe 549 maybe. All right, so filled at 549. We're out of Oklo. Okay, so good stuff. All right, so we did we did a lot today, man. We did SLV, we did Gilead, we did Oklo, and obviously we commented on Oracle. And there's a bunch of other stuff happening. I mean, obviously you've got MCL, which this thing is brutal. And then you've got your Bank of Americas, your Best Buys, your Nikes, your Starbucks. Wow, look at Starbucks. That's what I'm saying, man. Look at this thing. Wow. Starbucks. This is our investment style covered call, by the way. So for those of you that do a lot of covered calls in your portfolios, like your retirement portfolios or your longer term holdings or whatever, or you're interested in doing more covered calls, or you're kind of like, man, I don't really love the idea that I'm just, I love the idea of being long in the market, but I don't love the idea of I need the market to go higher to make money. It's like, man, I would really love to kind of tap into another way to, maybe squeeze out some additional profitability out of a position. Well, you, sir or madam, are in luck because a covered call is the perfect strategy for you in terms of, tapping into another, line of profitability, potential profitability for a position. And so I think it's a great strategy for passive investors that are looking to kind of, bridge the gap between passive investing and taking a more active approach. There'll be plenty of time for, strangles and, straddle swaps and all that kind of stuff later on down the road. But I think starting out, a covered call makes a lot of sense. And so for those of you, if you are brand new to the show, I know I bring this up often, but man, this is such a good case study for somebody that's new. If you go to, so let me go ahead and just search by Starbucks. I know we've just done this recently, so if you've been watching the show for a while, please bear with me. Just give me 2 seconds here. If you do, I did this trade in December, I think, like December 20-something, 27th maybe? Yeah, December 27th. I bought the shares in Starbucks. All right, so if you're brand new to the show and you're watching today and you're not an audio-only listener, then I would take a picture of this screen right now. Take a picture of this screen because if you actually go watch each show where you see I made a trade, one of the cool things about the way I do this show is I talked about it on the show. Now, I probably talked about it way too much. I probably gave you, at least 300% too much commentary. But you can bet your bottom biscuit we talked about it. Like I gave you my thoughts, as complete or incomplete as they may have been on the show that day. And so that way, if you do follow along on a regular basis, there'll be no broken links in the chain. You'll know everything I'm doing and exactly why I'm doing it, for better or worse. So if you kind of want to see an investment style covered call, this is the nice little 6 months of, body of work for this position. This would be a good place to start. So that's our Starbucks position. And all right, so I think let's do it, man. I see a bunch of you guys in the chat already, man. Look at you overachievers. We actually have a nice blend on this show. We have a lot of overachievers, but then my people, man, the underachievers, y'all are my people. Y'all are my people. You guys are here too, and I'm right here with you, man. 100% right here with you. So, all right, so let's see here. Where are you guys at? If I do, let's see, here we go. I see my comment, which demarcates the beginning of my show from the end of the previous show, which is the Futures Power Hour. But I know Chris doesn't do the YouTube comments. And so I'm telling you, you guys got to keep putting the heat on him, man. You got to keep putting the heat on him. And I don't know how you would do that because he doesn't do the YouTube comments. But you got to find a way. You got to find a way. Like, send letters in, man. Like, carrier pigeons. Like, do something. Like, I don't know why. It's so much fun. Like, it's so much fun. And I think it's a ton of value, right? Like, I think it's a great combination of both. I mean, you guys could hear me spout off for another 40 minutes. I'd have no problem doing that. But I don't know that would be more beneficial than me seeing where you guys are at. So Brad Glazer's in the house. TGIF Friday, what's going on? TGIF Professor, what's going on there, Brad? I'm hoping your assistant is bringing the heat today. We need some new trade ideas. Yeah, I don't know. Nothing new today. I mean, we're kind of taking risk off there, Brad. And the assistant's been a bit lackadaisical the last couple of days. Too many swim breaks and too many snacks when she should be doing her research and her analysis. And so, too many unicorn shows, like stuff like that. And so it's probably good that we're not taking any of her trade ideas right now because she hasn't been as sharp as she can be. Like, we've seen her potential. Like, we've seen what she can do, like with the Netflix butterfly. I mean, we nailed it. The Microsoft butterfly, we nailed it. Those are all her traits. And so now she's kind of giving me an SPX and an FOMC. She's coming out talking about neon green ties. I'm like, he's not going to go neon green. She's like, Dad, I think he's going neon green. I'm like, he's going purple. We all know he's going purple. But she was dead set on the neon green, and, she burned $7 as a result of that. And so no new trades today there, Brad, unfortunately. So Theta Trader says, none of the gotchas. There's always a gotcha. So I know what you're talking about. So you're talking about the commercial that ran right before my show began today. It's a promo for the Boston event, which, oh, by the way, go to tastylive.com/events. Sign up for that event. It's totally free. It's a crash course live. We need bodies in the seats, man. We're counting heartbeats in the room. So bring cats, bring dogs. Right? No, don't bring cats and bring dogs. But we are counting heartbeats, human heartbeats in the room. And that's what I will be judged on. And so, yes, please bring as many people as you can. Friends, family, foes. It doesn't matter. But, yeah, I saw that promo. And it actually bothers me. It bothers me to no end. It's not quite like a selling options for income. But, man, it's in the conversation. Because I'm like, there's always a gimme. 100% of the time. There is never, a gotcha. There is never a gimme without a gotcha. And you know that, Theta Trader. And so that's why you put that in the chat, and I appreciate you. But yeah, it's just know. So here's a couple things you should know. Number one, when you see a promo like that and you think that is something that Dr. Jim would never say, rest assured, I didn't say it. And rest assured, I had no input into that content, which makes sense. I'm not on the marketing team. I mean, they do an amazing job. So these are all just playful jabs. But it still drives me bonkers because I'm like, you can't go misleading people into thinking that it's all just gimmies with no gotchas. Because case in point, you show up in Boston, right? You're like, wow, this is amazing. You're like, wow, I'm here, Dr. Jim, live. This is great. Gimme, boom. And then you see the floof. Like upfront and personal, like that's going to be a huge gotcha for you. Huge gotcha for you. So I can assure you the gotcha's there. You just got to look for it. You just got to look for it. And so if you ever see something, you're like, I don't think Dr. Jim said that. I probably didn't. So I just wanted to go ahead and clear the air there. So Theta Trader says, Dr. Jim goes on to say, what's this new Kroger meme stock? Up 9% today. Yeah, I think they had earnings yesterday. So Kroger had earnings yesterday. And so wow, look at that, man. Kroger 71. Man, look at that. I'll tell you what, I'm a Publix guy now, though, so I can't talk too much about Kroger because my non-compete does not allow that. But I'll just say this, the boneless, skinless. I'll just say this. The boneless, skinless at Kroger, obviously doing a really nice job, but the boneless, skinless at Publix is better. So that's all I'm going to say about Kroger being up 9%. That's pretty amazing. And so Sunflower's in the house. What's going on there, Sunflower? Hey, Dr. Jim, what's going on there, Sunflower? Appreciate you, my friend. Thank you so much for being here. Let's see. Fearless Genius, how are you trading oil, Dr. Jim? Yeah, I mean, we just got some MCL, right now. Where we've got this strangle where we're short, short the 67 call and short the 73 put. We are now inverted on this position. So now it's just a wait and see. Just kind of sit tight and just see if we can't get some extrinsic value to burn off of this position. There's only 27 days to go. So, one way or another, I mean, this should meet its maker here pretty soon in the next couple of weeks. We're down about $6 on the trade. You can see that. right over here, which the P&L shows, and I think the P&L is accurate because I have it grouped by order chains. Whereas if you had it grouped by like symbol, then you don't want to use your P&L open. You need to go into the actual chains and actually do the work. I mean, you put on some rooster, you put on some wood, right? You put on some I stay away. I mean, the work's just gonna fly by. It's gonna be a joy. It's gonna be a joy to do. And so with us here though, down $6, I would really, if we could trim that to down $2, I might be looking for an exit ramp. Like if we get this thing to only down a couple bucks, I mean, given the huge moves in oil that have taken place over the last, this was a new IPO, right? CRCL. Yeah, this was a new IPO, right? CRCL. Not even our technical or P&L bros can handle these charts. Your boy Clark just had to drop his 36K on IPO. I can assure you Clark is not trading circle. I can tell you that for sure. I don't know how Clark did this week. I'll find out later today, and I'll post that. And so let's see. Yeah, it's up 250% in 2 weeks. Yeah, let me look at this. Wow, look at that. Yeah. Man. Yeah, I can't even I feel so, man, I'm like, I want to scooch it over. I'm scooching myself over because I want to scooch the chart over, but there's only a few days. You only have a few observations here. You don't have, I mean, yeah, it's, I feel kind of claustrophobic. And I'm not normally claustrophobic, but I'm like, man, we need more space. But let me go ahead. If I zoom and then move over, yeah, that doesn't really help me. But yeah, so wow, yeah, that's really something. So an IPO down here, right? It's 70 or so. And now we're up to 2.
You can get up to $4,000 when you open and fund a new account with Tastytrade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tastytrade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tastytrade. Make your move.
Tastylive's godfather of options, Tom Sosnoff, is grabbing his passport and taking this show international. He'll be joined by IG's Rich McDonald in London and Milan, along with special guests at each stop for an evening of live trading. It's fun, challenging, and moves as fast as the market. Doors open at 5, with trading starting at 6. Come early and have a pint or glass of vino with the boys. It's totally free, but space is limited. Register at tastylive.com/events. Options just got molto interessante.
What's one under-the-radar stock that you think could have a really good summer this year?
Oh, man.
Ooh, man.
Good summer, man.
It's funny, immediately when you ask that question, I'm like, I don't really pay much attention to underrated stocks. And then I thought about CoreWeave, CRWV. That stock seems like it has a little thing to it right about now. I think it's one to keep an eye on.
I think Cameco, CCJ. I really like uranium mining. This administration is pushing forward a lot of efforts to cut some red tape, make it easier to invest in things like small modular reactors and stuff. So that's going to drive uranium demand. I really like Cameco.
I'm coming up a little bit short, to be quite honest. I feel like I want to get long some more stuff, but I've been having a tough time based on the recent rally that we've had. Come back and ask me that one again in a couple more weeks.
Maybe the Russell. I mean, the Russell still has underperformed the overall indices. Individual stocks, I think everything's pretty fairly priced right at the moment.
Could go a lot of ways. I'm looking at Budweiser. I'll personally contribute to their stock this summer, but that's all I can do at this point.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tastytrade and Tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tastytrade. So spread the word and earn rewards. Terms and conditions apply.
Global markets never sleep. Explore them with Forex, now available on Tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tastytrade.
future of trading is here. Join Mike and his whiteboard, plus the Tasty2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
If you missed the live show, here's our cherry on top weekly recap.
I made a list of the 7 places in America that I've been to. This is my list. I don't care what anybody else says. There are 7 places that you would drive out of your way, like get off the highway if you're going somewhere to go get a certain food.
Okay. We are ready for your presentation, my lord.
In New York City, you have to go to Katz's. You get to Chicago, you have to go to Riccobenni's. You have to get off the highway in New Haven, go to Worcester Square, go to Pepe's. The original Pepe's. Some people go,
Pepe's Pizza, yes.
You drive straight up 95 until you get to Maine, and you go to Ken's in Scarborough. I was there this weekend. I put it easily among the greatest meals I've ever had. Then my 2 final stops are actually both in Texas. Pecan Lodge in Dallas, and then you go to Austin, and I'm a Terry Black's beef rib person. It's the best I've ever tried. We're gonna be in Pilsen. I'm gonna buy you a Rico Benny's after the show. I don't want you to buy me a Rico.
Well, that's nice of you.
It's very nice of him, but I don't need him to buy me a Rico Benny's. I was going there when you were pooping yellow. Oh my God. I introduced you to it. The first time you saw it, you were buying it from the truck outside the CBOE.
God.
Sorry, SIBO.
You gotta stop.
No, you know that's true. Sadlov, you know that's true.
My God. There's not a chance.
My guys, that's the reason why you did what you did in the restaurants that you made, was because I showed it to you. You know that's true.
Do you know that I brought the chicken parmesan sandwich to Chicago?
What side of the aisle is Tom on? Is Tom stay in school kids, or is he more towards Peter Thiel? I'll pay you $100,000 to go start your own business, scrape your own knees.
I would chop my own off before I would say that I'm on the same side of Peter Thiel of anything in the whole world. I hate that more than anybody.
Absolutely on cloud nine. I was walking around the city yesterday, right? 3 different locations.
What
3
city?
different people all commented about how luscious and beautiful my hair was.
You're walking around St. Petersburg and a random person would ask you about your luscious hair.
They really just wanted to admire it. I was at church, I was at the gym, and I was at Publix. And so at all 3 different locations, had 3 individuals, 2 older gentlemen and 1 young woman said, man, you've got some beautiful hair. Now I understand the older men, they had, their great hair days were behind them. So I understand that. But I'll tell you what, man, I was feeling pretty good. That 22-year-old woman was like, you've got some beautiful hair. And I was like, well, thank you very much.
Did she want to touch it?
No, not.
And she picked Jim. There was nobody else in the store. Exactly.
I'm 5'10", so it makes sense.
Get the full scoop by checking out the archives at tastylive.com.
Understand I got a plan, but mess up. You didn't know that I was dangerous.
So I'm still Jim Schultz, and this is still from Theory to Practice. We're back. So some technical difficulties there for just a couple of seconds, but we made it back, and the floof, it's as B- as it was during the first half of the show, so don't you worry. All right, so where were we? Let's pick right up where we were. I know that we were, Theta Trade was asking about Circle. So, this is some crazy stuff. Do they have options yet? I don't even do. They do have options. Wow, they already have options. So how about that? So, man, I don't even know. I mean, I don't know what they do. I didn't even know they existed until, a couple of minutes ago. I mean, they didn't exist until a couple of minutes ago. And so if I don't know they're a Theta Trader, maybe we should do, should we do a little something? Is Scott Sheridan going to really jam us on a short put with the buying power? Oh, wow. Look at that. Now that is some buying power. Yeah. So 14,000 on the buying power for a short put in Circle. Even the floof can't handle that, man. I think I gotta wait. Let's wait just a wee little bit on this one there, Theta Trader. Or no, not Theta. That was Sam L, not Theta Trader. I get you guys mixed up. And so, but thank you guys. Thanks there, Sam L. So we're back in the swing. Let's see if we can have a better second half of the show than the first half of the show. Let's see. Okay, so Richard Grissom. I appreciate your patience too, by the way, guys. I mean, the team back there is working so hard, and so when things don't go right, I mean, they're all scrambling, we're all scrambling, and they did an amazing job to get us back up and running. So let's see. Oh, okay. He's saying it all depends on Israel. I agree. Let's see. Grumpy. Oh, talking about oil. I think that was about oil being 40 versus 90. I mean, yeah. I mean, it could go either way, I guess. You know, I mean, I don't think it's that crazy to see oil at 40 if things do get really resolved, or if they don't, could oil hit 90? Of course. I mean, I think that's fine. In fact, here actually, rather than let's close out a circle, let's go into CL. So rather than just take my opinion, let's say all the way to. I'm going to do July 17th, only because that's the last cycle that tracks the Q contract, which is the front month that we're trading right up here. So my Q at 73.74, that's 27 days away. So let's go ahead. Let's open that guy up and let's take a look at it. Let's take a look at some probabilities. So this is not my opinion. This is not my personal conjecture. These are actual hard probabilities. Okay. So the probability that we hit $40 a barrel is 0, apparently. Rounded to the nearest 1 delta, it is 0. And so it's obviously not 0. They all have to be some number above 0, technically and theoretically. There has to be some positive probability that every price on the oil spectrum gets hit, even the negative ones for all my 2021 oil traders that might still be out there and survived 2021. But $40 a barrel currently has a 0% probability of getting hit. Okay, let's see if we fare a little bit better on the 90 side. I have a feeling we will, simply because it's so much closer. Okay, on the other hand, $90 a barrel has a 21 delta. Okay, so what does that number mean? Well, it means a couple things. Number one, it means that there's a 20% chance that oil runs up to 90 and stays there. That's 1 out of every 5. That's not that small. And then it also means double that number, so 40%. There's actually a 40% chance that at some point between now and 27 days from now, we actually touch the 90 level, and we would retreat then. We would not stay there, because that would obviously be, the 20% delta. There's a 40% chance that we at least hit it, if not stay there. I guess that's a cleaner way, less clunky way to say that. And so, yeah, I mean, again, a lot of what's going to happen overseas, though, is going to determine which direction that we might go when it comes to that. And so let's see. Matt Johnson says, what's our next path to the $1 million trade? I don't have a path. I think you might be asking about my boy Clark. So a couple of you guys have asked about this. So fun little project, right? So I'll just give you guys a quick overview of this. So this was a couple months ago. One of my boys, he said, hey, I've got $36,000. And he's like, I want to run this thing up to $1 million in 18 months. He's like, do you think I could do it? I said, no. He was like, well, let's talk about it a little bit more. I said, okay. I said, we could talk about it a little bit more. But anyway, he was like, well, I want to give it a try. I've got this old IRA. I'm going to give it a shot. And I know it's a low probability. I know it's a low pop thing, but I'm going to take a shot. And I said, okay, that's fine. And so he's got his own strategies. He watches Tasty a lot. He's got his own strategies. He's got his own way of doing things. He has tapped me to serve in kind of like I'm not telling him what to do. I'm not even signing off on what he's doing. He really wants me to be someone who can help him maybe see some gimmies and gotchas that he can't see himself, especially when the account grows, if it grows, of course. And so I think that's the $1 million trade that you're asking about, Matt Johnson. And he's got a ways to go. He's got a long way to go, actually. And so I would say his pop is very similar to that $40 a barrel oil trade. It's pretty close to 0, but we'll see what happens. You never know. And so Emmett Morrison says, hey there, Dr. Jim. I hope you had a nice day off. The hair is looking good, by the way. Man, I appreciate it. Man, look at you, man. The floof, it's looking, it's been worse. Let's just say that. Has it been better? Maybe not. Actually, this might be the best the floof has to offer, but it's been a lot worse. And so I appreciate you, my friend. Thank you so much. Tasty Live saying we had a gymathon with it. It was actually complete with an intermission there. So we actually had like a 5-minute intermission, which I think everybody benefits from. And so that worked out well. Edward Lond says a lazy summer day. Yeah, kind of a little lazy OPEX day, I guess, would be another way to put that. And so let's see. Richard Grissom says Circle is up 1550 today with a 100 shares day trading. Oh, you are up 1550. Man, that's nice. Yeah, this thing looks like, there's a lot of action in there. So if you're looking for something to scalp and just kind of day trade and, whatever, this would be a good product for you, I suppose. And so let's see. David Gallimore, Dr. Jim, why are not allowed to sell VIX or options on the VIX, but at the same time we are taught to sell the same volatility in stocks and indexes? That is a great question. That is a great question. And the answer is actually very simple. So when you sell volatility outright by either, selling the VIX futures or selling, and it depends on the permissioning that you have. Like you can get to a certain level of permissioning where, you can certainly do it. Now, you might mean by being not allowed, you might mean you can do it. Like you can go in and actually do it. But none of us here suggest that you do it. I think that's probably what you mean. Because when I read your question, I'm like, you can do that. Like nothing is stopping you from doing that. Should you do that? No, you should never do that. And I'm going to explain why. But so I think that's what you mean. Well, the answer is pretty simple. When you sell, I'll start with the equities first. When you sell volatility via a stock or an index or a regular option position, the volatility component of the P&L is only one component. So the volatility component of the P&L is only one of three, essentially. You've got delta, theta, and vega. The volatility component is going to be the vega piece. Usually, the vega piece is not as strong as the delta piece. So the delta piece is usually going to be the strongest of the three. Now, there can be times, especially with like GameStop back in like 2020 or whatever it was, the vega piece can actually be stronger than the delta piece. But that's pretty rare. Usually, the delta piece is going to be the strongest piece of the P&L kind of equation when it comes to when the stock moves or the index moves. How does my P&L actually get affected? And so because you have these other things that are serving to kind of water down the overall impact that a given move in the market or a given move in volatility might have on your position, that is going to change and alter, the dynamics of what you have to absorb significantly, especially when you stack it up against a volatility position, like a straight volatility position. So now all of a sudden, your main driver again is going to be delta, but now the delta is the actual change in volatility itself. So not only do you have, the biggest factor now being the biggest factor for you, meaning, the delta on the options was the biggest factor, but the delta on an option in, Chipotle or even Circle or whatever is not necessarily going to be directly related to the volatility in that option. There obviously is a relationship and there is some link between the two. But the point that I'm making is, you could be getting hurt on volatility, but helped a lot by delta, and you don't even really notice it. You don't even really see a big volatility change. However, if you have a direct volatility position through VIX, through VIX futures or whatever, and you have to absorb a big move in volatility, you're going to feel essentially the full weight of that. Because again, the delta on the volatility product is pointing to the move in volatility itself. And so that can be very, very different. Okay, the second point is the moves in volatility can be very, very, very significant. Like, take a day like today, right? Look at the VIX. The VIX is down. It was down $2 just a minute ago. The VIX was down over 10%. On a day when the market's been mostly down, actually. The market hasn't even been strong. The market hasn't even really been up. I guess it was strong a little bit in the morning, but that's pretty much it. And you have a huge move in the VIX. This is a huge move in the VIX. And so, we've seen just in the last few months, there have been days where the VIX went from 20 to 30, where the VIX went from 30 to 45. Those are massive, massive moves, and you would have to absorb essentially the full weight of that. And so that's the reason why we don't do that, and we don't feel the same way about trading or selling volatility via an equity option. So hopefully that helps David. So, all right, so let's go to market's selling off a little bit here. So you've got, E-mini S&P's down 23 now. They were just pretty close to even, I think, before maybe the intermission that we had. NASDAQ down 130. You've got the boomers are still hanging in there, kind of doing some boomer things. And yeah, okay, you got gold still looking pretty weak. So interesting stuff. Very interesting stuff. Let's see. Vincent says sell a Thursday put and buy a Thursday call, and you got yourself a weekend future. I think there's something in there. I think I like the strategy. I'm trying to figure out exactly. I feel like you're on the inside of a joke there, and I'm on the outside of that joke. And so, unfortunately, I'm not able to. We're in the region of infeasibility for my economists that might be watching the show. Let's see. Theta Trader, Albuquerque has poorly labeled streets. I would not be able to comment on that. I have no idea. I've never been on the streets of Albuquerque. Let's see. Oh, Greg Lutton says, thanks for the help on the poor man's cover call on oil a few days back. I'm nicely in the green on the position, man. Look at you, man. Look at you. And so you are absolutely welcome, my friend. I remember that trade. I remember the discussion that we had. I think maybe you wanted to do like a really long dated position in oil, like as a poor man's covered call, and we kind of talked about maybe bringing it up a little bit to a nearer term cycle, if I'm remembering correctly. But I could be missing this one actually. But either way, that's great. That's great there, Greg. So nice job on the poor man's covered call. Playing oil to the upside. I mean, is that the move now? I have no idea. I don't think anyone else knows either. But it seems to be where the greater risk is, maybe potentially. I think that if there is escalation overseas, I still think there's more asymmetry to an upside shock than a downside shock. And so if there's resolution, I mean, I could see oil settling into the middle 60s. I think 40 is probably off the table based on the previous comments. I mean, some people might think that's possible. Looking at the option chain, I think that's a very, very, very low probability trade. But settling back into the 60s, I think that could definitely happen. But you get some escalation. I mean, 80 is only a couple ticks away, in my opinion. And so I personally still see asymmetry and asymmetric risk to the upside. But that's just my own take. And so let's see. Emmett Morrison says no better way to start the weekend than with an extended class with our favorite professor. Man, I appreciate you. Man, I appreciate you so much. And you got the hair comments, man. Emmett, dude, I appreciate you. I'm gonna send you that cash we talked about. Don't you worry about it. Let's see. Richard Grissom says oil needs to be above 70 to be able to move rigs and buy yachts. I did not know that, but that's really interesting to know. And so Sam L says, hey, Doc, new program 10 by 20. That's correct. I tweeted about this the other day, and we stirred up a little commotion with the tweet, actually. Trying a little something new here with the old training program, where for my main movements, I'm doing 10 sets of 20 reps for that movement. And that's not the only thing I might do for that muscle that day, but that's kind of the main thing I'm doing to build, strength. And my number one focus is hypertrophy. And so a lot of people on Twitter were like, that will not have a hypertrophic response. It will not have this. It will not have that. And I don't agree with any of that. But I understand where it's coming from the standpoint of not getting close to failure and stuff like that. And that is one of the challenges, by the way. When you do higher rep sets, it's very hard to get close to failure and actually reliably get close to failure, because you may think you're near the end, but it's actually just lactic acid that's built up and you still got 7 left in you. And so that's really, really tricky, but that's hard on your system too, cardiovascularly, depending on the movement that you're doing. But the joints get a nice break, man, a really, really nice break. And so, but Sam L says, are you training for Mr. Olympia or trying to hedge against muscle atrophy? I mean, both, essentially. That's not volume. That's just quantitative easing for the gains. Just don't go limit down by set 7. I may have to go limit down by set 7. That's kind of what the program calls for. Like, you don't want to be near failure at the beginning, but by the end, I mean, you should be limit down, limit up. You need to be lock limit by the end of the 10 sets, or you're just not doing it right. And so let's see. Philip Gretsch is in the house. Hopefully you can hear something. I mean, that was like an hour ago now, so hopefully it's been squared away. Let's see. Margin Walker. What's up, Dr. J? What's going on there, Margin Walker? Appreciate you. Alex Spencer's in the house. Appreciate you, my friend. U.S. Super Tech says, new flash. Florida man drinks Natty Light Ice on Tasty Live. Stay tuned for more. Now, if you all saw that headline, you know who it is. Like, you know 100% who it is. It could be Tony Batista. It could be Dr. Jim. It's like 50-50. It's like an at the money vertical spread. Like, you don't really know until you get more information, because he puts on a good front when, the lights are on and the cameras are rolling. But deep down in his heart of hearts, he is a Natty Light Ice guy. 100%. So let's see. Little Peanut says, Dr. J, what's up, not my portfolio. It's down today, man. I'm sorry to hear that. You should be scalping Circle, apparently. I think we should all be scalping Circle. That's kind of the pathway forward through the forest, as they say. Richard Grissom's back. Let's see. Little Peanut. Emmett Morrison says, purple's the only color tie J. Powell owns. Apparently so. Again, it's been 51, 52 in a row now. It's pretty amazing. Option Stu in the house. What's going on there, Option Stu? Hey, Jim. If entry is random, I believe, IV adjusted price, then why wouldn't we simply fill the book with strategies on a purely statistical basis and manage trades as time and movement occurred? Stu. So that's a great question. And that kind of is what we're trying to do, right? I mean, if you think about the basis of what we're trying to do, like what you just described, is kind of the foundation of what we do in terms of the stats around selling premium, the stats around 45 days, the stats around out of the money premium, the stats around the different strategies that we do like strangles and puts and whatever. And then obviously all the management that we do, around the strategies once they're live. I mean, what you just laid out essentially is kind of like, the elevator speech, the elevator pitch of what we do. Right now, is that all we do? No. Is that all I do? No. Like, are we also doing things directionally? Are we also taking a shot? Are we also doing expected move butterflies? Yes. And why are we doing that? Well, I think there's a couple of different reasons. I mean, at least I can share with you all what my reasons are. Number one, I still am holding out hope, even if it's wrong. I'm holding out hope that, hey, maybe I can squeeze out a little bit of edge. Maybe I can squeeze out a little bit of something here. Maybe we can truly have a little brains over bots, or I can do a little something that maybe could not be done otherwise. Are those famous last words? Of course. Am I going to go down in flames? You've already seen it happen, right? But am I going to continue doing it? You can bet you bottom biscuit. We're going to be doing a whole lot more of it come Monday of next week. But then the second thing is, it's very easy in theory for me to say, hey, just sell strangles, right? Put them on, adjust robotically, you know what to do, blah, 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 and then go live your life. I know very few traders that actually trade like that, though. It's kind of like, in fact, going back to a bodybuilding world, it's very similar to me saying, hey, every meal, I want you to have chicken, broccoli, and rice. Every single meal. You're getting all the nutrition, you're getting all the vegetables, you're getting all the micros, the macros, it's all there, right? This is going to be perfect. It's going to get you to your ideal physique. Whether it's huge, whether it's ripped, whatever it is, you're chicken, broccoli, rice, every single meal. It's like, okay, in a textbook, right? In a vacuum, like on a podcast, sure, everybody can do that. But now all of a sudden, when you're salivating at 6 o'clock, and you're like, man, that's 19 straight days of chicken, rice, and broccoli. I kind of want a little something different. Like, man, that's 21 straight days of selling strangles on the open. I kind of want a little something different. So that's where you start to mix in some other things that I think are just important from an engagement standpoint. It's important to make it fun. It's important to challenge yourself. Maybe there's something out there that you need to learn. Maybe there's something out there that you don't quite see, and you won't see that selling strangles. You won't experience that with chicken, rice, and broccoli. Now, of course, Bonefish has an amazing chicken, rice, and broccoli dish, right? You should all go have that tonight. But even still, Bonefish has so many other things to offer. Like, they've got the filet, obviously. They've got some amazing bread, obviously. And so, man, there's just more to be had. There's just more life to be lived. And so I think that's the answer. And so let's see. Theta Trader says, he's looking at a short put in MES. A 6,000 strike in July 31. The buying power effect in the IRA is twice what it is in my margin account. I thought they were normally the same. Oh, that's interesting. Huh. Yeah, they're not normally twice. It's usually, they're not the same either. It's there's usually about a 25 to 30% premium you have to quote unquote pay in an IRA relative to a margin account. So I don't know why that's happening right now. Maybe you have a portfolio margin account. That could be part of the reason. I don't know. I would actually reach out to Tasty. I know that the margins are changing kind of rapidly right now because of all the tensions that are happening overseas. I mean, I know like oil margin, I think like doubled in the last 3 or 4 days, maybe, to where like one CL was like maybe 10 grand and now it's like 18 grand or something like that. And so MCL, like one MCL was like 1,000 and now it's like 1,800. Like I think it's 1,800. If I go to buy an MCL, it's only 750. Oh, well, that's because it's going alongside my strangle. So this is not a good barometer of the buying power in MCL. And so, but I think it's about $1,800 maybe. Maybe I'm wrong about that. I'm not sure. But I don't know the answer to that question, Theta Trader. It's usually about a 25 to 30% difference. So if it's double, that seems like there's some missing piece that I'm missing, that you're missing, that, I mean, I would email support at Tastytrade, and they can probably fill in the blanks. So Dab Nico's in the house. What's going on there, Dab? Theta Trader says he claims it's Natty Light Ice, but it's really one of those goofy probiotic drinks. No, man, like kimchi and stuff? Drinking that Mike Butler stuff? No, I'm not touching that stuff. And so I've tried it before. That stuff is disgusting. And so, no, it's not Natty Light Ice, but the show's almost over now. And I thought it was going to be over like 30 minutes ago. So I actually went out to the fridge and cracked one open, but I had to go back in the fridge for a couple minutes. And so, yeah, it's Natty Light Ice is always a possibility. Banana daiquiri is always actually a stronger possibility. And now that the Natty Light Ice has been in the fridge, open can style for 30 minutes, I'll probably go banana daiquiri instead of Natty Light Ice. But I appreciate you, Theta Trader. You know that. Emmett Morrison says, not in an IRA. Okay, so Emmett might be helping out a little bit. Donna Ski says, I appreciate you, Dr. Jim. I appreciate you, Donna. I appreciate you probably more than you appreciate me, but thank you so much. And so Donna Ski says, Emmett, I'm doing pretty well with my picks today on RTX and UVXY calls. UVXY calls. Man, look at Donna. Look at Donna Shooter McGavin Ski. Man, look at that. Green now, but I'm going to hold it through at least Monday. Oh, famous last words. Yeah, hope you're doing well today too. Well, Donna Shooter McGavin Ski, man, I really hope that works out for you. I mean, if we get a vol event over the weekend, then you're going to be, I mean, that's Bonefish Monday night for you. That's probably Monday and Tuesday night, actually. And so I'm really, really pulling for you. So let's see. Oh, Theta Trader says the IRA gets fully margined for regular equities, but I thought futures were the same. I haven't compared recently. Also odd, it's exactly twice the buying power effect. Glad there's any relief at all. Yeah, it should be even more than that, actually. It should be even more relief than that. So if the margin, because if I'm not mistaken, the IRA margin requirements take their cues from like margin account margin requirements. I don't think that there's a separate rule. I think it's just like a 25% markup, I thought. And so I don't know why that is the case. I would actually email support. And if you find the answer, Theta Trader, come back on Monday and post it in the chat so we can all benefit from that. Let's see. Theta Trader says, I hope you, stay away from the silver futures. Yeah, I'll probably will do that. I'll stay away from the silver futures. But I'm not going to stay away from the cheese and pepperoni slices, man. Because, again, the Hunt Brothers, I mean, they're doing some things. And they've diversified their outfit there. So it's kind of nice. Let's see. Money Wandering says, Theta Trader, futures get span margining regardless, although it appears to be half of that. It appears to be half that of a regular span margin account. Okay, but maybe span margining is the answer there. I always thought it was a 25% kind of difference. Let's see, Jeffrey Jones says, what if Powell is waiting for tariff inflation that never comes because he's scared of Trump being right and himself wrong? What if he's driven by ego? I mean, we're all driven by ego to some degree. I mean, I know I certainly am. I really just am, if I'm being honest with you all. And so I think we all are to some degree. I mean, we can all, like, when it's time to be PC and it's time to be whatever, like, we can all say all the right things, if you kind of understand the context. But then it's like, what's really driving our behavior? What's really driving, our actions? I think every single one of us is driven by ego to some degree. Now, some do a better job than others. I don't, know where I personally rank on that. But maybe Powell's better than most. Maybe he's not. We'll have to wait and see. I do think the next 3 to 6 months are going to be very, very telling. I think it's going to be very telling with tariff policy. I think it's going to be very telling with, obviously, Middle Eastern tensions. I think it's going to be very telling with inflation. I think it's going to be very telling with what is the Fed's response. I think right now, I think they're pricing in September cut and then maybe like a November cut or something like that. I think it's like 1 to 2 cuts for the rest of the year is pretty much the consensus right now. But the funny thing about those consensi, right, are they change all the time. Like, they always change. They're constantly in flux. And so right now it's 1 to 2 cuts, but something happens in the economy, something happens overseas, something happens whatever, and then all of a sudden now we're at 4 cuts for the year. You guys remember when Silicon Valley Bank happened? I mean, everything was just cruising. Then, SVB happens and boom, it's 4 cuts. Like, immediately priced in. That never actually happened. Like, they never actually came to fruition, but the market was like, it's done. It's over. It's over, Johnny. I remember being on the show with Tom. He's like, it's over, Johnny. I'm like, dude, it hasn't even started. I'm like, we haven't even gotten the appetizer yet. My man's talking about it's over. I'm like, I have no bang bang shrimp on my table. This thing has not even started. And so I think the same thing could happen here, but time will tell. Time will absolutely tell. So guys, we're actually done. Sorry about the little hiccup there in the middle, but I'm glad we got it back. Big kudos and shout out to the team for getting us back. Man, I appreciate you guys. I appreciate you guys so much. If I can ever help you guys, please shoot me an email. I'm jschultz@tastylive.com, or we can connect on Twitter. I'm at jschultzf3. I would love to hear from you guys on there as well. But stay tuned. We do have Tim Knight coming up next with Trading the Charts. In the meantime, guys, trade them small, trade them heavy, and stay generous. We'll see you guys on Monday.
Global markets never sleep. Explore them with Forex, now available on Tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tastytrade.
You can get up to $4,000 when you open and fund a new account with Tastytrade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tastytrade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tastytrade. Make your move.
What's one under-the-radar stock that you think could have a really good summer this year?
Oh, man.
Oh, man.
Good summer, man.
It's funny, immediately when you ask that question, I'm like, I don't really pay much attention to underrated stocks. And then I thought about CoreWeave, CRWV. That stock seems like it has a little thing to it right about now. I think it's one to keep an eye on.
I think Cameco, CCJ. I really like uranium mining. This administration is pushing forward a lot of efforts to cut some red tape, make it easier to invest in things like small modular reactors and stuff. So that's going to drive uranium demand. I really like Cameco.
I'm coming up a little bit short, to be quite honest. I feel like I want to get long some more stuff, but I've been having a tough time based on the recent rally that we've had. Come back and ask me that one again in a couple more weeks.
Maybe the Russell. I mean, the Russell still has underperformed the overall indices. Individual stocks, I think everything's pretty fairly priced right at the moment.
Could go a lot of ways. I'm looking at Budweiser. I'll personally contribute to their stock this summer, but that's all I can do at this point.
One. Hey everybody, Tim Knight, and end of the week. We are going to go into some charts in a moment. I wanted to sort of do a little preamble. Over the past 6 trading days, there's been a lot of jump scares for me. Last Wednesday, of course, there was the cold CPI number, and I'm focused on the RTY in this conversation. So in that instance, the RTY blasted higher to the base of the bearish pattern and touched it and then began a retreat. Thank goodness. Very scary stuff. And since then, it's been playing jump rope with the Fibonacci, the 78.6% Fibonacci at 2150. And just glancing at my chart here, it went above and below it on Thursday. That's because of the PPI. And this Monday. And again, it tagged it perfectly on Wednesday after the FOMC, just a perfect tag. And then today. And today was particularly annoying because yesterday was holiday, of course, and I was watching the RTY anyway because it traded most of the day. And it went down, 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 to down, 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 because there was all this tough talk about, Iran's going to see something they've never seen before, and they'll be talking about it for centuries, and here it comes, and you better watch out, everybody better get up to Iran. Well, Taco Trump strikes again, and before the day was even over, it's like, yeah, you know what, we'll give him 2 more weeks. It's always 2 weeks, whether it's Russia or Iran or the Venetians or something, just 2 more weeks, 2 weeks, 2 weeks, 2 weeks, kick can down the road 2 weeks. And so the Taco result was, of course, everyone went from scared to buoyant and began buying everything left, right, and sideways. And so the RTY, which had just been crumbling through Thursday, gapped higher and did not look back. And when I nodded off last night, everything was still red. When I woke up this morning, everything was green. And the RTY was really green. It was up more than 1%. And it was above the Fibonacci again. It's like, here we go again. Because every time it's above there, it's like, well, maybe the bulls will finally run with this. But for the fifth time, loop, it sunk below. And it was amusing because, you know, a reporter asked Carolyn with a K Levitt to explain this whole 2-hour thing. I mean, 2-week thing. Like, why is he always saying 2 weeks? What's that all about? Is that why would that be credible after so many instances of, you know, 2 more weeks? She could have answered the question. I mean, I can't stand the guy, and I could have answered the question with something else, anything else. You know, if it were thrown to me, I could have said, instead of rushing to judgment and plunging into action, which he might regret, he needs time to really examine the situation with the senior advisors, to have conversations that are needed, and to just not rush in where, you know, angels fear to tread. We need time to consider all the possibilities before rushing forward. And that would have been a totally satisfactory answer. It's not very meaty, but, you know, it's okay. We're just going to take time to think, consider, be judicious. Instead, she said, of course, it's Biden's fault. If you don't believe me, go look at the clip. Go to YouTube and type Carolyn Levitt 2 weeks, and you'll see it. It is comic in a tragicomic way. So, anywho, Taco Man boosted the markets again because he will not stick to anything he says, whether it's tariffs or Iran or anything. And mercifully, the Fibonacci, for the fifth time, as I said, beat back the RTY, and we are at the moment down a little bit. So we're red across the board, ES, NQ, RTY, all red. And today is also, as I understand it, the biggest options expiration June in history. Trillions and trillions of notional value expiring today. And word on the street is that this will unclench, it sounds rather pathological to me, but will unclench the market so it can trade more freely again starting next week, which would be kind of cool. So, anywho, that's what is going on. Most of my short positions are down, which is good. My jump scares have definitely resulted in some panicked closes, every one of which I regret. But yeah, messy market, messy. It looks like a seismograph, just up, down, up, down, up, down for the past couple of weeks. Nasty stuff. Anyway, I do have some charts to look at, and that'll be it for the week. So let's jump in together. Here's the spider. And as I think I mentioned yesterday, the key, generally speaking, is that last week's peak was a lower high compared to the lifetime highs that we saw some months ago. So that's good. So we, with all the power behind this, it's just all it's achieved is a lower high. The IWM in particular, I've been obsessed with, and I think a sensible stop loss is around about 212.71. It's rather conservative, but that's not a bad one. But you know, mercifully, we are in the red on that. And the cubes are down even harder, make it sound like a big deal. They're down 0.5 point instead of 1/10 of a point. But importantly, very importantly, this trend line was not exceeded, and we have just been slowly drifting away from that, getting a little more sunshine between that dangerous trend line and present price values. The SOX itself, the semiconductor index, has been messing around with its trend line. It's been above and below it many times over the course of the past 7 days. We're just below it right now. Big question mark whether this is a breakout or a false breakout. It certainly has no follow through yet. None. Every time it tries to reach escape velocity, it peters out. Look into some individual stuff in that realm. AMD whipped all the way back up to the base of its own bearish pattern, and it's still up, but a lot less than it used to be. And then Micron, MU, has just roared higher and is just about done sealing that price gap, which, you know, back here probably seemed like it would never be sealed, but it's been blasting higher tremendously and just about sealed that sucker up. What else is going on? Well, just one thing I wanted to note. I hadn't seen this chart in ages, but remember AMC? It was a meme stock for a while. Back in the day, it had gone from a kind of failing movie theater chain, and it bottomed out late in 2021. Then it became the hottest thing in pants. And this thing went from barely the double digits. It was down around $10 up to, how high did it get? 372. So about a 37-fold increase in value based on basically wanting to be GameStop 2.0. And after that peak, it's absolutely crumbled away. And then more recently, you may remember that there was a brief, they got the paddles out and hit the chest with it. And there was a brief instance here back in May of last year when it went from basically a $2 or $3 stock, and it kind of regained a little bit of its old glory. It went up several 100% in just a couple of days, and now it's crumbled back again near lifetime lows. So quite the journey here for this meme stock. And as I said, I wanted to be GameStop 2, but just didn't happen. Slightly relatedly, SharpLink SBET, I've mentioned this one. They sought to be the MicroStrategy of Ethereum. They've kind of put their bets on that, but that strategy thus far clearly has not really yielded any fruit. Over in precious metals land, gold is pretty much unchanged. We've double topped on GLD. We reached our peak here on the 22nd of April and matched it on the 13th of June. And so really just has lost its momentum there. Silver is actually down about 1.5%. And as I said, I think the first really interesting opportunity maybe to get back in on a long position would be sinking back to that gap, like so. Give it a little time to digest those gains. With all this going on, miners are backing off. Maintaining my short in the juniors here, GDXJ. Tighten up the stop like so. Tighten up the stop like so. There it descends. It's gone down, I guess, the past 5 or 6 days, which is positive. I'll say as an aside, one individual miner that I've offered as a long idea, Skeena Resources SKE, continues to do nicely. Lifetime high on this one today. But on the whole, as I pointed out, XAU, the gold sector index, looking very rich at this level based on many, many years of data. You can see that this ascending pattern, but we tagged this trend line, and so it's quite lofty. And historically, that is met with strong, strong resistance. XLB, I'm all over the map today. It's no particular theme. I'm just grabbing from all kinds of pots. This one, my larger short, maybe these larger short position, material select sector XLB. This is the diamond pattern I've been talking about, and it's starting to behave itself nicely. It's down about a little more than 0.75%. Tighten up the stop like so, where that dashed line is, and we'll see. I mean, that diamond pattern should push this thing much, much lower than it is now, but at least it's making baby steps in the right direction. ARQQ, which is a kind of a hot quantum company right now, has another good day on its hand. Quantum in general is not necessarily up today. There's some losers today, but this one has had a very good week, and it's kind of like a game of hot potato. Like who's going to be the last one to hold this thing before things turn south. It's interesting to watch from a safe distance, though. Also, CoreWeave, rather a new offering there, continues to do very, very well. Another lifetime high on CRWV. Very, very richly valued, but with something this young, it's not really about the fundamentals, but about the psychology around it. Haven't looked at these in a while, but I just want to remind you, in spite of the fact that the prospects of recession seem to be nil, according to everybody, there hasn't been a single instance where we've had the kind of yield inversions we've seen that hasn't been followed by a recession. And that's played out here with the 10-year Treasury minus, I think this is the 2-year, as well as this one here, which is, I think, minus the 3-month. It truncates the description, so I don't know these crazy symbols by heart, but the point is that these were instances of the yield curve inverting, and every single time they had a recession on its heels. So anything with a 100% track record deserves some attention. Just to wrap up, here is the ES. As I said earlier on, we've basically achieved a lower high and little else. There's precious little to deal with here in terms of a pattern. Some charts have them, some don't. This one sadly doesn't, even though it's very important. The big deal with NDX, though, has been the continuation of the trend line, and in this case, the midline, as resistance. It did a yeoman's job of holding things back. In spite of every reason to buy it, it exhausted itself just below that multi-decade long line. The transports also continuing to slip away nicely. Here was the bullish breakout, which completely flopped. And since then, we've been executing a series of lower lows and lower highs, and we seem to have pooped out last week on this one as well. And finally, our old friend, the Russell, kind of the great white hope here, continues to be the most interesting index, I think. Same old though. Bearish pattern, bullish pattern, no man's land. Where will it push into? And for the moment, we are again just barely into that bullish zone again, suggesting the prospect of a failed bullish breakout, which is what I want. So crazy times, crazy couple of weeks. Well, that is it from me. I will see you here on Monday, and have a good weekend. Bye-bye.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number 1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tastytrade. Make your move.
If you missed the live show, here's our cherry on top weekly recap.
I made a list of the 7 places in America that I've been to. This is my list. I don't care what anybody else says. There are 7 places that you would drive out of your way, like get off the highway if you're going somewhere to go get a certain food.
Okay. We are ready for your presentation, my lord.
In New York City, you have to go to Katz's. You get to Chicago, you have to go to Riccobenni's. You have to get off the highway in New Haven, go to Worcester Square, go to Pepe's. The original Pepe's. Some people go,
Pepe's Pizza, yes.
You drive straight up 95 until you get to Maine, and you go to Ken's in Scarborough. I was there this weekend. I put it easily among the greatest meals I've ever had. Then my 2 final stops are actually both in Texas. Pecan Lodge in Dallas, and then you go to Austin, and I'm a Terry Black's beef rib person. It's the best I've ever tried. We're going to be in Pilsen. I'm going to buy you a Rico Benny's after the show. I don't want you to buy me a Rico
Well,
Benny's.
that's nice of you.
It's very nice of him, but I don't need him to buy me a Rico Benny's. I was going there when you were pooping yellow. Oh my God.
I introduced you to it. The first time you saw it, you were buying it from the truck outside the CBOE.
God.
Sorry,
stop.
SIBO.
You got to stop.
No, you know that's true. Sadnov, you know that's true.
God. There's not a chance.
My guys, that's the reason why you did what you did in the restaurants that you made, was because I showed it to you. You know that's true.
Do you know that I brought the chicken Parmesan sandwich to Chicago?
What side of the aisle is Tom on? Is Tom staying school kids, or is he more towards Peter Thiel? I'll pay you $100,000 to go start your own business, scrape your own knees.
I would chop my own off before I would say that I'm on the same side of Peter Thiel of anything in the whole world. I hate that more than anybody.
Absolutely on cloud nine. I was walking around the city yesterday, right? 3 different locations.
What
3
city?
different people all commented about how luscious and beautiful my hair was.
you're walking around St. Petersburg and a random person would ask you about your luscious hair.
They really just wanted to admire it. I was at church, I was at the gym, and I was at Publix. And so at all three different locations, had three individuals, two older gentlemen and one young woman, said, "Man, you've got some beautiful hair." Now I understand the older men, they had, their great hair days were behind them. So I understand that. But I'll tell you what, man, I was feeling pretty good. That 22-year-old woman was like, "You've got some beautiful hair." And I was like, "Well, thank you very much."
Did she want to touch it?
No, not necessarily. I turned into the aisle, and she's standing right there, and she saw me. She did like a triple take.
Well, she probably thought you were a Manny since you were doing the grocery shopping, and she was probably looking for a Manny herself.
She
that could do her
probably
grocery
needed
shopping.
somebody to reach the top shelf to get something
And she
to.
picked Jim. There was nobody else in the store.
Exactly.
I'm 5'10", so it makes sense.
Get the full scoop by checking out the archives at tastylive.com.
You can get up to $4,000 when you open and fund a new account with Tastytrade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tastytrade. Make your move.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tastytrade. Download today.
Ring the alarm, hey, ring the alarm, boys. Turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
We are back. It's still Friday, June 20th, 2025. This is Last Call. Tom and Tony are out, so they handed over the keys to me and Mike and Nick. Gentlemen, good to see you this afternoon.
Likewise.
It's the A-team, baby. This is the future right here.
We are
I hope
aging,
so.
but aging slower.
Yeah.
My daughter the other day, I mentioned this previously, but she points at my face. She goes, "You got all these white dots on your chin, Dad. What's that about?" I said, "Well, my hair's going gray. I'm getting older." And she says, "Oh, you're going to die soon?"
Oh, my God.
It's like, geez, no.
Just straight to the end.
It's like, okay, it's a good 5 years, kid. See you later. All right.
Unreal.
That's good.
In any event, guys, how is this trading week treating you? What do you think of this action today after the federal holiday yesterday, Mike?
We were talking about it this morning. It's kind of crazy to see that it had rallied all the way back from the overnight lows, but giving it up pretty steadily today. I think we pinned 6,000. It's the narrative that makes sense, right?
Let's get down another 10 points from here.
Yeah.
Yeah, I mean, the action over yesterday's shortened market period, it was 4 hours. You get it closed at noon. I mean, it looked like today was gonna be just a little bit of a bloodbath. You had option expiration, vol expiration on Wednesday. The kind of doldrum of yesterday, everybody wakes up and their accounts are down 1-2%. You kind of have some forced selling into option expiration. That's what it felt like we were in store for. And then it turned out to be a nothing burger. You've got, just to give a quick market update, E-minis down 23 right now. You got the NASDAQ down 128, the Dow down 28, Russell basically unchanged down 3. You got oil futures back up. They're up 50 cents. Volatility futures picking up a little bit into the weekend. Not a shock there. 21 and change here, up 23 ticks, a little over 1%. Bonds up 3 ticks. They've gone from red to green. Pretty big move. They were down almost a full point at one point today. Gold and silver have been weak. Gold's down 25 bucks, silver down 92 cents. Bitcoin has had like a 3 or 4K range today. I mean, it's been kind of a wacky, not unlike most option expirations where you have some chop, some two-sided action, some swings. But it certainly seems like there's a little bit of a fear going into the weekend, at least with the way some things are moving here.
I mean, that kind of makes sense, right? Once you get through options expiry, and today 5.9 trillion options expire. It's the largest June OPEX ever. You said earlier in the green room, it felt like people did their position adjustments yesterday and the day before, in part because there's only about 1.35 now, 1.36 million contracts traded in ES. That's not huge. You mentioned vol ticking up here. The IVR is still only 23.1. It's up from 21 and change this morning. And if you're going into a weekend, given the headlines, are we surprised? That's kind of makes sense. I don't know. What do you take of this environment though right now? Because it feels like vol's. I mean, there's always the voice in my head. Is vol understated given what we're seeing play out right now?
It's kind of crazy. I mean, yeah, I would say we're seeing such huge intraday ranges in oil. If you were just looking at that in isolation, you would think that the VIX was at 30, but we're not seeing that. So yeah, I think there is a little bit of a disconnect, but you have some big name stocks kind of pulling in certain directions, like Meta down 14 points right now.
Google.
Yeah.
Some of the payment
Google's
stocks.
off over 3 right now.
Yeah. Visa, MasterCard, these are getting killed. On the flip side, you have like
Apple's up 2%.
Yeah, Apple was having a good move. You had some of the kind of bubbly type stocks. Circle is up, 5 billion %. Coinbase up a ton as well. It's there's big rotations. I think the rotations have been quite. It's not subtle. You see Microsoft at highs. You have Google and Apple near lows. I know Apple's kind of strong today, but you certainly see these big rotations happening, and they're happening in a day. It seems like.
They are happening in a day. You mentioned rotation here. Believe it or not, semiconductors are one of the worst performing ETFs in today's session. On Futures Power Hour and Overtime, we track 25 different ETFs. The top performers are the home construction, ITB, XHB, followed by energy and XLE. And then on the flip side, the worst 3 performers are GDX, J, XME, and GDX. But SMH is right there. It's down by 0.94%. Nick, you mentioned that NVIDIA was a loser in today's session. I'm just looking at my S&P 500 heat map. It's down 1.21. Avgo, Broadcom off 1.03. And even Oracle's down 2.22. How have you guys been treating this run-up in tech recently? It feels like semiconductors have stalled for the last week or so. Mike, do you have anything in play in NVIDIA or Broadcom right now?
Not right now. I was trading NVIDIA the last couple of weeks. I had a position on bullish call diagonal spread on for the end of May. So about 3 weeks ago, that was a nice winner. AMD was actually up a lot more earlier today. It sold off since then, but the last trade I placed there was over a month ago, but similar story, just placing it to the upside early May. So I've kind of been sitting on the sidelines waiting for a downside move in some of these products because AMD is well off the lows, NVIDIA is well off the lows, and I would rather, I like placing them to the upside or playing them to the upside, but not at 145. I'd like to see a little sell-off here before doing something like that.
Sure. Nick, I mean, semiconductors, obviously, they've been gilding our lilies for the past year plus if you've been a bull. It's been a good few weeks, though. Does this thing have legs left?
Listen, it was a great run up. I participated in the run up in a lot of the big name stocks, and I've kind of, for lack of opportunities, gone to some of the junkier tech stocks. I find myself in a lot of positions in, like the second tier, and by junky I mean they're lower market cap, higher volatility. They have a meme element to them. Your Robin Hoods, your Palantirs. I've got some short delta in Roblox here. Like Uber. Some of the stuff that's moving a a little bit more with two-sided action rather than, and then I'm getting long, like, I got long Google today. I have some long Delta and Apple, the ones that haven't participated in the upside. That's where I've been moving towards. And it's just because those are the only places you can find some volatility. I mean, what do you do in Microsoft? Like I just put on a put diagonal in Microsoft while we were talking here because I'm looking at it. It's down $3, but it's at well above highs for the last year. It's making new 52-week highs every single day, it seems like. But what do you do in here when volatility is in a 20 handle? I mean, with everything that's going on, stocks at highs, July monthly implied volatility at 20, August at 25 with an earnings within that expiration. It's like, it's hard to sell a call spread there.
Sure. It's
hard to be short there because the stock goes up every day too. I mean, but that's kind of like when you look at, Meta is kind of the same story. NVIDIA even is the same story with an IV rank of 3. It's like it's hard to do anything long or short in those stocks. You have to go towards the stuff that's moving. SMR is another stock that I've been kind of watching as a retail favorite. Like those are the things that are moving.
Right. I mean, you have to trade what's moving. The indexes have seen a lot of volatility come out, and a lot of the big, mega cap tech names too. So you have to skate to where the puck is. Mm-hmm. But I'm sure people who are tuning in right now may be wondering why are Chris, Nick, and Mike here? We're Tom and Tony. That's who I tuned in to listen to. They're overseas right now. In fact, Ryan, we can go to the bumper here. If you are in Italy, if you're in Milan, go catch Radigan, Sosnoff, and Rich McDonald over in Italy. Tasty's going to be at the Fabrique in Milan. The show starts at 5 p.m. local time. Trading starts at 6 local time. It's a great event. I know that they just had the Back for More in London today, guys. So we'll see Tony again soon. Tom's still abroad for the next week. And that means people are stuck with us for the foreseeable future.
I mean, Chris, this would have been a perfect opportunity to send you out to Italy. You could get your reunited with Dylan. You could be in the homeland. You could support Tasty Nation. What we couldn't find that in the budget or something. What happened?
Little too on the nose, I was told. Right? We'll just so let's send the Italian guy to Italy.
That's true. That could be problematic, I guess.
Yeah,
that'll be fun though. tastylive.com/events. You can sign up.
Yes.
For free. But yeah.
Is our Seattle sign up out? I think it is. I think it's out as well. So you can sign up for that too if you're in the Seattle area. Come hang out with Mike, Katie, and I. It's going to be a blast of a show.
There's a lot of great events coming up. As Mike said, tastylive.com/events. Seattle, San Francisco, Chicago, New York, LA, Dallas, all over the next few months.
Yeah.
Even Detroit with Dr. Jim.
Yes, of course. Chris, where are you hanging your hat? What's sticking out to you in this market?
Honestly, I'm still leaning long deltas in the S&P and the NASDAQ and the Russell right now. Okay. Both vis-a-vis calls, so I need a little bit more upside kick here. Otherwise, I need to roll these out and buy myself a little bit more time. When I typically operate in out-of-the-money calls, I like to roll not at 21, but at 28.
Okay.
Because if it's not working, then, I either need to reassess or get out while it's still some intrinsic value. But honestly, what's been working best for me the past week has just been directionally neutral in notes. ZN is not the most exciting trade in the world, right? But as it were, it's been chopping around in a tight range for the better part of this year, basically all year long. And we've been sitting at the midpoint of that 6-month high-low, if you will, for weeks and weeks. So for me, just placing that bet that treasuries aren't going anywhere fast, if it's monetary policy, fiscal policy, war, aliens. The James Webb Telescope apparently last week found out that we're a universe that's subsiding inside of a black hole.
Yes.
The Mike was obsessed with this too.
Yeah, it's kind of like notes aren't going anywhere, so nothing matters right now.
That was a big story for Mike. Mike really he gets deep in the UFO type stuff, so he's ready. He's prepared for that.
Yeah, you should check out the docuseries called Infinity on Netflix. It's a very very similar ideology, where instead of looking out at what is at the rim,
tinfoil
how
hat.
about we look
Chris,
in
get
into
the hat.
This infinitely compressing black hole that we are in. Anyways, gold futures.
The existential dread of space.
That is a good question for you, though, Chris. What's up with gold? How are we not seeing gold break out to highs? You got all the geopolitical nonsense. I know bonds are kind of lower, which means rates have been lower. Rates moving higher, which would kind of, drag on the gold gold itself. But like, come on, this isn't this the end game for gold? War in the Middle East, inflation, tariffs. This is where the gold and Bitcoin comes into play. This was what it was made for.
Yeah, 15 years ago, when after the global financial crisis hit, there was a lot of talk of what are you going to own when the world financial system collapses?
Mm-hmm.
We're spiraling, our debt spirals out of control, and we're not getting our deficits under control, and there's war, and the U.S. dollar is being replaced, and
guns and ammo. That's the currency.
and maybe bottle caps if you're a Fallout fan.
Yeah.
Other than that, though, you look to where we are today, and all those things to a large degree have come true. The deficits are bigger and the debts are bigger. Central banks now own more gold than any other currency except for the U.S. dollar. That shifted over the past 2 years. It's overtaken the euro. It's overtaken every other currency group. So, that long-term story persists. But you also ask yourself, right, if everything's working out right now, how come it's not getting that kick higher? And that probably means it's trading heavy. So earlier this week, we've shared this on Futures Power over time. I put it into the research chat, but I care about sentiment and positioning. And so when I see something like the Bank of America Fund Manager Survey say that people are the most bearish they've been on the U.S. dollar since January 2005, and long gold is the most crowded trade this year so far, it means tactically, I feel like you could see a reversal. And then perhaps the canary in the coal mine for gold is the fact that volatility is coming off up here. It so often has been the case, especially since October 23, when geopolitics kicked into a new gear in the Middle East. Declines in gold vol have been an indicator that maybe prices are going to stall or pull back. And as gold vol has been stalling here for the past few weeks, gold having trouble making advances. So right now, I would prefer to buy a dip in gold than look to sell a top, but it feels heavy. Does that mean I'm trading it short? No, because I'm an idiot. So I'm going to still lean long and just hold and continue to hold long and, accumulate because it's been working.
Hey, you can't always catch both sides, Chris, all right? You're not an idiot. You can't always get it on the way up and the way down. You caught the way up. I've patted you on the back as well as Mr. Westwater. Nice, who has led us to that promised land. So, you don't have to catch both sides, Chris.
Exactly. And I would rather, just from my own perspective, and I think maybe this is something that I learned over the years of making a lot of unsuccessful trades, was you don't have to catch both sides. If I have a longer term bias, I really should only trade alongside that bias. So it's either long or waiting to get long, or effectively my two positions in gold and silver.
I like it.
Looking here, the Dow actually just ticked in the green here. You got E-mini still down 20-ish. NASDAQ, kind of the weakest of the group, down 0.6%, 135 points. You got the Dow just ticking green. Looking at just the Dow components here on the watch list, obviously Apple having a strong day, breaking through 200. Some of the oil stocks, obviously CVX in there, but and then Walmart, which we actually had a nice little trade on for fast market this morning. But some of the other stocks, these bank stocks, Goldman Sachs, American Express, JP Morgan, is this all kind of a correlated trade to what's happening in Circle and all the regulation that's going on, speculation that probably everything will have its own coin? We had the whole Walmart, who are they partnering with? Walmart, Amazon?
They're putting out their own coin. JP Morgan's talking about doing their own coin this week. You see Circle performing the way it is, and then Visa and MasterCard falling apart the way they are. Yep. PayPal's a green spot today. They have their own PayPal USD stablecoin, right?
Uh-huh. Is this a fad, or is this something that's in play, you think?
Mike, you know how you could buy like Xbox points to play games?
Yeah.
It feels like that's all these stable coins are. You're just taking US dollars, you're putting it into a store of value that could be exchanged for something else.
But you're actually getting paid some yield. That's the difference. It's like opening a savings account at Chase, but you're actually getting the interest instead of the 0.25%.
Sure.
Or whatever.
And Walmart's talked about how it'd probably be like a loyalty program where if, you have an account and you transact in Walmart stablecoin, then you get like Walmart stablecoins back. Right. And so it incentivizes people to stay within the system. It's kind of like when I go to Dunkin' Donuts and get reward. I don't know. But it's a problem. If you're cutting out lower income means of payment, perhaps then, right?
Mm-hmm.
You're talking about the bigger credit card rates, Visa, MasterCard, Capital One. You're talking about lower, community banks, perhaps, credit unions under pressure. You don't need to bank with them anymore.
Well, that's assuming you have the cash. I mean, right? Visa and MasterCard. Visa and MasterCard function on the fact that nobody has the cash. That's the whole thing. I feel like
that's the interesting thing here. Have you seen American Express fall apart this week? Not at all, right? So it's a total different segment of consumers that the stable coins could potentially disrupt business models for. American Express consumers are not going to Walmart digital currency anytime soon. It's a different income decile.
I mean, yeah, I think you've seen this work in the gaming space. And I think the gaming space is a good model of behavior. So yeah, why not? Why not branch out into the real world with these types of things?
E-mini's catching a little bit of a bid here into the close up, or down 10. They've just rallied about 10 points here in the last minute or two. Just your good old face ripper into the close, maybe some flattening out of short delta here. NASDAQ only down 100. Volatility futures remaining steady here at 21 or just under 21. Oil catching a little bit of a bid, up 51 cents. You got any wild predictions for next week, Chris? I've seen everybody calling for, once the liquidity comes off the table, option expiration is done with, that's when we can see some fireworks to the downside. Are you a buyer of that?
Well, the only thing that I have, that I'm really intrigued by right now is what's happening in oil, quite frankly. I've been getting chopped up a lot in a lot of my things. It's been for me personally, it's been a rough trading stretch.
Yeah.
But oil is the one where I feel like if you are a typical vol seller, okay, that's where you have to look.
Yes.
Because the volatility is through the roof. It's an 88 IVR. I'm looking at the trade tab right now, and it's sitting in 56 days short the 78-76 call spread. I'm just rolling the dice that at 100 plus IVR when the trade was put on, at these levels, the situation's probably overcooked. Mm-hmm. Not to be one of those guys who monitors the situation, but Israel isn't attacking Iran's export infrastructure. They're attacking their refining capacity. And so if Iran can't consume the oil or refine it domestically, they have to sell it abroad, which they can do. China's their biggest buyer of oil right now. And I think that's the big concern here for oil. Are we going to see the Strait of Hormuz, where 25% of the world's oil supply, is that going to be cut off? And for all intents and purposes, the answer looks like it's no, because it doesn't punish the U.S. and Western Europe the way that it did a decade ago when we were the biggest buyers of Iranian oil. We don't buy anything, basically. So why would they hurt China? That doesn't make sense. I'm going to fade this. I think it's going to be – wars aren't linear, but I'm going to say I don't think we're putting boots on the ground.
Oh, it could be. It could happen. We have 2 weeks to decide. That's the thing. And it could come in 2 hours, could come in 2 minutes, 2 days.
2 weeks to stop the spread, Nick.
1 week.
Spread.
No, this can't be. I think this is a little more. This requires a little more action, a little more decision than the 2 weeks to stop the spread or 1 week to stop the spread, whatever that craziness was.
I can't believe that was like 200 weeks ago.
Yeah,
still trying to stop the spread.
200 weeks ago. Land far away. Yeah, I think it's interesting to call out the fact that triple witching historically has been slightly bullish leaning if you look at all of the triple witching data. So, maybe we do see a little selling next week once all the dust settles. But gold futures, highest volume we've seen all month pretty much. So I think that's an interesting shout out. But yeah, I'm kind of with you guys, just looking at the things that are moving, trying to pick spots, stay defined risk. Threw on a gold broken wing butterfly on the put side this morning. Did some other stuff, but yeah, just keeping risk defined, selling premium where we can and taking some directional shots with diagonal spreads as well. That's kind of our MO.
Mm-hmm. What do you guys make of the upcoming? Well, we're in it now. It started this week. We're in a buyback blackout window now, where about 80% of S&P 500 companies can't, prop up their stock prices. Does that matter to you at all? Because I know that runs until about July 25th or 26th. Here's the thing: we haven't seen a red July in a decade for the stock market. Ooh. So, what matters more? It feels like we could just keep floating higher here if nothing actually transpires in Israel-Iran.
We've chopped around here at 6,000 for what seems like an eternity. So I'm ready for us to bust out to either side. I think that would be good. I mean, just from a liquidity standpoint, the buybacks are obviously a bid on the market, so maybe that gives even more credence to the downside play. I'm overall leaning with a little bit of short delta. I think we need to see volatility a little higher. I mean, that's kind of my play. I'm not calling for 5,000 again, but I think the next 100 points, I am playing for it to be to the downside.
Mike, 100 points in the S&P, up or down? Which way? We're next.
I think we see down.
I
think the
I'm
market's
shocked.
I know it feels wrong. There's the bell. I think the market is a little too calm for what's going on globally, and just like the disconnect between the volatility in oil and the rest of the market is just kind of seems odd to me. So.
Where are you, Chris? E-mini's down 13. They basically chopped around this spot for the last 30 minutes or so. Big old nothing burger of a day. Where's our next 100 points, Chris?
For my positioning, I prefer it to be higher. It feels like the market wants to test a little bit lower first before we ultimately make a notable attempt at new all-time highs.
I like it. Beautiful. Chris, keep going. You got it. I didn't know if you were taking over. Please.
I was gonna say, I hope you guys have some fun weekend plans here.
Mm-hmm.
We have a heat wave coming here in the north, and I saw that Sammy Sosa's back at Wrigley Field today.
I did see that too.
Yes. 20-something years. 21 years?
Yeah.
22 years?
Did he bring the corked bats or not? That's the question.
They don't need them now. They got
Pete
the torpedo
Armstrong.
Bats now.
No, I can't
they
believe
got rid of them.
Got
Right?
PCA. No, torpedo bats, they're still around. People aren't using them. They were the first weekend. Anyway, guys, I think we're done here, right? The market's closed, so we're finished. This has been Last Call. I've been Chris Vecchio, Nick Batista, Mike Butler in studio in Chicago. Good luck trading when the market reopens for First Call. Of course, on Sunday evening, Victor, Tom, Ilya, Pete, they'll be there. See you soon. Have a nice weekend.
Beautiful.